Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Hola, Thomas.
Hola, hola, hola.
How's everybody this morning?
Tom is alone in the office and he can't sneak out early today, and he's upset.
I am not upset. I'm happy to be here.
Because you love the interns and you are going to give them all positive and affirmative feedback today.
When have I ever done anything but that to interns? I'm always nice to all the interns.
You've never told a kid, what? Why are you studying that? That's a waste of time.
No, I never have. I'm always good to the interns. And yeah, now it's good. But we have a good lunch today. I'm going to be good.
You are a fan of the lunch today. That does.
What is it? What is it?
It's a Cafe Tola. It's one of my favorite places.
Got it. Favorite places?
Yeah, I mean, one of my neighborhood places.
Oh, you're a patron of the neighborhood.
Yeah, they have 3 restaurants, literally 3 restaurants right in my neighborhood. So I'm a fan.
3 restaurants that we use?
No, not that we use. 3 restaurants that I use.
We can't afford the rest of them.
They have a taco stand, an empanada stand, and a Mexican restaurant, which I think is the best Mexican restaurant in Chicago.
Really? That's saying a lot.
I know. I'm a huge fan. Huge.
The best Mexican restaurant in Chicago is pronounced Chipotle. No, I'm just kidding.
No, it's horrible. Did you see?
I'm just kidding. No, we have really good authentic Mexican. I was just kidding.
Did you see a bunch of them got shut down for, and they always get voted like one of the dirtiest fast food restaurants.
Okay, thanks, Grandpa.
There's a rat in the kitchen and I don't want to know.
Yeah. All right, what did you get up to last night then, Tom?
Well, actually, I was just telling Bat. We were kind of working until a little bit late, and then, so I didn't do anything because I was, it was a late night. I was doing stuff.
Your stories are like chock full of little golden nuggets where people can learn from, and they really get the immersive experience of
It's
what
immersive.
you did.
It is the worst paradigm ever. I'm forbidden from talking about myself. I get 30 seconds allocated per week, which I use judiciously.
I mean, I didn't have a good story
but then when we go to you, the one who's only allowed to tell stories, and we have to go to you first, and then you give us nothing.
I didn't have anything that's worth it. I didn't go out. I didn't really go out.
You can say that. You could just say you're boring AF. It's all right.
Yeah,
okay.
I wasn't that boring. I was just doing stuff that wasn't really interesting to other people, but it was interesting to me.
All right, we'll switch gears then. What are your plans for the weekend then? How about that?
There you go.
Oh, I've got big plans. Big
plans.
I plan to go out to dinner tonight.
It's going to be hot.
I know. Little neighborhood Italian place.
Okay. Are you babysitting tonight?
No. I have a breakfast.
Oh, okay.
I have a breakfast date tomorrow morning.
Mm-hmm. Hi, Jules.
No,
Jules shut us down with a snarky response. We invited him out for a lunch one day, and
Jules
he got
is big mad.
the Snarkosaurus. Yeah.
Yeah.
No, an old buddy of mine. A buddy of mine is in town, and so we're going to meet for breakfast, and then I've got a packed day, and then Sunday we have a family event.
Wow. Wait, are you going to a Cubs game too?
No, next weekend. The Cubs are
next weekend after the show.
Yeah, the
Gotcha.
Cubs are in St. Louis this weekend, I think.
Gotcha. Okay, I don't know where the Cubs are.
Yeah, the Cubs are in St. Louis next weekend against the Pirates.
Okay. Is your plan Saturday? Does it include North Halstead Market Days? Hey, girl.
No, is
It's
that
it's
this?
market days this weekend, so just be careful, okay?
I've never been to that. Was that one any good?
It's amazing for the
Oh,
girls and the gays.
well, I can walk there, so that's why I'm saying it's not that bad.
Honey, you have to strut there.
My neighborhood's got signs up all over, so like there's a like in front of my house there's a block party this week, but I haven't been participating, so I think my neighbors are mad at me because I didn't I didn't
You're
offer
not
any.
exactly a pillar of your community.
No, my whole street shut down for a block party, either Saturday or Sunday, and I didn't participate, so I don't know. I kind of feel like a jerk.
That's the most self-aware you've been in years.
Well, it's funny. They all have kids, and so they all like they got.
Wait, but you're a grandpa.
You have a grandson now.
You're a grandpa.
Yeah, he's not allowed.
Take that little peanut out there. Give him his first sausage. Let him get his first little Zapoli or whatever you guys got.
His first lemon shake up.
Yeah.
Have you met my daughter? I'm not.
My wife gave Tristan a crouton from her salad. The kid wanted it, right? Little tiny crouton. You would have thought that we were choking the kid out, like he was gonna tap out. He ate it fine. He's got almost a full set of freaking teeth, for crying out loud. The kid's the size of a 4-year-old. I mean, and he's 20 months. But man, they still talk about when mom gave him the crouton,
Yeah, I know. Yeah, that's. My Case is still talking when I gave him like a piece of a cinnamon bun and
Wait, but your grandson's only 6-7 months old.
Yeah,
Why is he eating a cinnamon bun?
Not a cinnamon bun, just the icing.
Oh my God.
Too good.
Yeah, you are not allowed unsupervised visits. That's no good. How about you, Bat? What's on deck for your weekend?
I thought I was going to have a very busy weekend. My sauna was supposed to be delivered before this weekend.
Yeah. Well, it's hot as a sauna outside.
Yeah, so I kind of dedicated this time to put it all together because, that's what I do, Sadnov. I like doing things myself. It's very handy.
Of course you do. Of course you do.
I'm sure
there's going to be a whole crew there, but yeah, sure you do.
It hasn't been delivered, so it might be a week to 10 days delayed. So I'm a little disappointed.
Oh man!
Thank you, tariffs.
No, it's coming from Michigan, I believe. Michigan.
Sure.
Yeah.
Thank you,
Michigan, China.
Thank you, Gretchen Whitmer. I don't know.
There you go. That's better.
Yeah, all right. There you go.
So I got a slow weekend. I got to save up. We got a lot of people coming next week. So, Saz has got me, basically in the office, bell to bell every day. He's got me performing on Friday. I got to save my energy.
Oh, wait. Are you coming in on Monday?
I'll be there Monday.
Okay, so thank you for letting me know.
Well, I was going to let you know on the QT after the show is over.
You liars. You boomers, you liars. It's fine. But if you don't have plans for the weekend and you are on the West Coast, we would love to see you in Seattle. Mike, Nick, and Katie are going to be doing their show, the Whiteboard Tour, in Seattle on Sunday. So you definitely want to check them out if you are able. They're going to be at the Crocodile, which just is a cool name for a venue, and have a video coming out this morning. We played a little Seattle trivia with the crew. Tom and Tony, would you know Seattle trivia? What came first, Starbucks or Microsoft?
Starbucks.
Really? I'll take Microsoft.
Starbucks. But we asked him some other questions, but it was just interesting.
Give me some more questions. Give me another question.
Seattle trivia.
Give me a Seattle trivia question. Come on, give me another one. I want one.
I don't have it in front of me. Oh my God,
with Seattle. I'm good with Seattle trivia. Come on, give me a question. Seattle trivia.
Okay, wait. Hold on. Can you give me 2 seconds and I'll pull up the questions? Oh my God. You were so demanding,
I like
girl.
Seattle trivia.
Okay. I was not anticipating this enthusiasm.
Yeah, I got a
So,
lot of enthusiasm for Seattle
okay,
trivia.
so you were right. It's Starbucks. Starbucks is
Okay.
1971, Microsoft 1975. What came first, grunge music or the Seattle Seahawks?
Oh, the Seahawks.
What do you say, Bat?
I'm going with Sosnoff this time, so I could be wrong and be 0 for 2.
You're right. The Seahawks. Seahawks team
there's my man.
founded 1976. Grunge started in the 80s there. So,
All right, next question.
what came first, Boeing's first airplane or the Space Needle?
Ooh, this is a tough one.
Space Needle's in the 70s or something.
I think
isn't
Boeing's
it?
first airplane came in like the 50s. I'm going to say Boeing.
Oh,
What do you say, Bat?
I'll go Space Needle just because I went that way.
This is astounding. Boeing built their first plane in 1916, the Model 1, and the Space Needle built in 1961, 62 for the World's Fair.
3-0.
Wow.
Okay,
What can't you do, Sosnoff?
What came first, the Mariners or Amazon?
Ooh, that's really interesting. It has. Ooh, I don't want to say it has to, but I think it's the Mariners.
What do you say, Bat?
The Mariners or whom?
Amazon.
I'll go with Amazon. Go with the stock.
Amazon's founded in 1994, but the Mariners founded in 1977.
5-0, 4-0, Sosnoff.
And then last one, because I don't want to give them all away. What came first, Pike Place Market or Seattle's Great Fire?
Well, I don't remember Seattle's Great Fire.
Well, you are old, but you're not quite this old.
I don't remember Seattle's Great Fire.
It was after Chicago's Great Fire. I will give you that clue.
Pike's Market, Pike's Place Market, which I have been to.
I have too. Very cool.
Yeah,
I didn't catch a fish like Jamal did, but it was very cool.
I mean, I guess I'm gonna go fire because I don't know. This is the only one I don't know.
I'll go Pikes because he doesn't know.
I'm gonna go fire.
It's relatively close, but damn it, if Sosnoff is not so good at these games.
I hate this game.
The Great Seattle Fire occurred in 1889. Pike Place Market opened in 1907. But I'll have the video out. Mike, Nick, and Katie, they did a good job, and they had some pretty funny reactions.
5-0.
To being right
Mr.
or wrong.
Yeah, you're too good.
5-0.
Okay, congratulations, me lord.
Whatever.
But yes, if you would like to bask in the magnificence of Tom's intelligence, you can come to the Tasty Open House next Thursday. You need to sign up though, so I'm looking at you. Send an email to support@tastylive.com. But we would love to have you. That is Thursday, and then our big event at Work by 11 is next Friday, August 15th. Doors open at 8. Show starts at 9. And because it's the home road show, there's going to be a lot of additional tasty talent, including moi, on hand at the show. So I'm going to need several days off to decompress after this.
Wow.
It is called introvert self-care. But I am looking forward to seeing everyone because I do like to meet our viewers. So, all right, we got a really good show for you today. We made it to Friday, a fantastic Friday here. Tasty Live at the top of the 8 o'clock hour. We're going to do options jive, mastering the pairs trade. Ah, yes, grasshopper. Tom, would you say that you've mastered the pairs trade?
I mastered understanding what a pairs trade is. Yeah, definitely.
I know what a pairs trade is, but doesn't
I know
count.
a pairs trade. I don't think I've mastered the pairs trade.
Okay, well, we are going to give you all the tips and tricks that you need to master your next double setup. That's going to be at 8 a.m. Then 8:40, it's hashtag Fan Friday. So that means Fast Market. This is where viewers write in with trade ideas, and Tom and Bat try to do as many trades as possible. That's at 8:40. Then 9 o'clock, we have a market measures duration bias in price range forecast. So do you make wrong or assumptions depending on how long the trade is? Is that what that's saying?
Yes, kind of, but yes.
Okay. Okay, well, I look forward to the clarity that that segment will provide at 9 o'clock. And then you and Tony are taking calls around 9:30 today. We would love to hear from you. If you have questions for Tom and Bat, give us a shout. That's at around 9:30. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
You know what's on?
Hit
you
me
know
with my
what's on-
theme music. Let's go.
You know what's on a Seattle dog?
Today's headlines.
Breaking news.
Hold on.
Top story. Jump in. Today's headlines.
This just in.
Breaking news.
For some reason, I think it involves cream cheese.
Yes, you are correct. That's the secret
Yes.
ingredient on the Seattle dog is the cream cheese.
Yes.
Oh, are you good?
I did know that. Well, I proofread all of his little slides and all of his jokes that he thinks are hilarious. So
That was from a couple of years ago when we did a show in Seattle.
yeah, I remember because again, I proofread those slides. Anyway, this is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. And I pretend every time Tom retells a story like it's the first time. Are you ready for the news?
Ready for the news.
All right. Hey, congratulations to the Bank of England. Hip, pip, pip, cheerio. They narrowly voted to cut interest rates to 4% as the Global Balancing Act continues. They voted by a majority 5-4 to reduce the key interest rate. Just let's talk global currencies. This obviously happened early yesterday, but what are you doing in the pound, the yen, the dollar, the euro?
Well, there's actually whatever we're doing, it's fine. I mean, we're a little bit, we're flat the euro, we're long the pound, we're long the yen. It's a pretty mixed bag today. Nothing. The yen's down, the euro's up.
Well, we canceled crash, right? I mean, even the S&Ps are up.
Yeah. They canceled crash.
Yeah, they're up 7 handles off of their highs, which is about 15 handles off of their crashing lows that you were talking about yesterday, correct?
Yes.
You know how some people have like a bucket list and they go to like every major league baseball stadium, or they go to every like NFL stadium or whatever?
Sure.
Well, I want to go to all of the central banks in the world.
Why?
So I've been to the Bank of England. I've been here in this photo. Garrett and I got to go because it's close to our corporate offices in London. And I want to go obviously to where the Bank of Japan is. And so I'm going to map out where all the central banks are, and I'm going to go to all the central banks.
Okay. Hey, here's a little tip for you. Don't tell that to anybody.
I think it's nerdy and cool.
It's nerdy, all right. I don't know if it's cool.
Fine, be that way. All right, I'm gonna do it. I'm gonna run the table anyway. Hey, in other news, we're opening up. President Trump signed an executive order now allowing alternative assets like cryptocurrency and private equity in 401ks. His administration had floated the idea earlier, but the executive order now explicitly directs the U.S. Secretary of Labor to reduce fiduciary guidance on private market investments. What are your thoughts?
I have been advocating for this for 25 years. It started when we built Thinkorswim, and we've been talking about this literally for 25 years. I think people should be allowed to invest in whatever they want to invest in. And I mean, I think there needs to be like a disclaimer that some of these investments, especially like, private equity and venture and non-public companies, those investments, people have to understand
because there's transparency issues sometimes, and there's liquidity issues.
Well, there's liquidity. It's mostly liquidity issues. It's not like a listed marketplace, but I feel like it's ridiculous that you have a 401k and you're given a list of, 12 legacy mutual funds that you have no interest.
And that's the real mafia. That's the real issue here.
I feel like
Listen,
being forced to, or basically being required to check a box on some fund, that legacy fund that you have no idea anything about. You don't know the fees. You don't know what they do. It's just a name. Like,
it's a conglomerate, and there's only one place to go.
Yeah, I know. It's like Vanguard Global High Growth Fund. And you're like,
for good people who do good things for cats, dogs, and humans.
I mean, you literally know nothing about this stuff, and you check a box. I don't feel like that's what in today's
very fair.
I feel like in today's world, you're all big kids. If you want to check a box, go check a box. But if you want to buy cryptocurrencies or put your money in some, venture fund or whatever else it is, you should be able to do whatever you want. It's your money.
Can you tell me how much fart coin should be in my 401k?
Well, obviously,
you know what? So you laugh about that. So somebody amasses a fortune, whatever that might be. One investor's floor is another investor's ceiling on fart coin and other silly that I think are silly investments, or even investing in a company that I would think is a silly company and it blows up. It does phenomenal. Well, they were able to take that risk. Why aren't they able to take that risk in their 401k?
Listen, we've reached the point with transparency and an understanding investments. We got to stop. We got to take the kid gloves off and stop trying to protect everybody and every investment that they make. You got to be able to do whatever it is you want to do. It's your money. That's it.
Sure. Okay.
Yep.
What's Bitcoin doing this morning?
Down about 1,000.
Oh, that's not bad.
At 117. That is correct. It traded up to around 118.5. It's 117.1, just a little bit off of its lows for the day, but it's on its highs for the last 5 days. So just off of its highs for the last 5 days.
Oil prices are set for their steepest weekly losses since June as tariffs cloud demand outlook. Oil prices were little unchanged in the overnight markets heading into this morning, but they are still headed for their steepest weekly losses since late June. What are you doing in crude oil, or are there any opportunities, or is natural gas a better underlying in this climate?
Well, natural gas is already on its butt. It's at $3. It's nothing. I mean, oil set for steepest weekly loss, but it's right back to where it was. It was up like, a week ago. It's right back to where it was 2 weeks ago. It's not really. Okay. It's a misleading headline.
Okay. Be that as it may, is there anything that you can do in oil right now?
Oil's got an IV rank of around 24. It's been going sideways-ish with volatility, but the product itself has been going lower. Caught a small bid today up 23 cents, but it's had a 10-day sell-off or so, approximately 10 days, from 70 to 64. And at $1,000 a point, it's a significant move, $6,000.
Conversely, on the other side of the commodity spectrum, gold is near its highs as oil, is at a little bit of a low. The U.S. has now imposed tariffs on the import of 1 kilo gold bars. The only person I can think of that would be affected by this is Tom Sosnoff. So
I don't have any gold bars.
Okay, I just
gold up $31.
How much gold? I can tell you exactly how much physical gold I have. I have a little film container with about maybe like a fraction of some gold dust in it. That was
so. Some people don't know all the Sosnoff lore. You owned a gold mine in Africa,
and that's what I have left from that gold mine is a little tiny film container of maybe $30 worth of gold.
You were a literal Bond villain.
That's not all that you have left. That's all that you were physically able to get your hands on that you pulled out of the ground.
Literally, that's all I have left is $30 worth of gold that I'm saving as a kind of a little bit of a reminder of don't invest.
And look at him. He's market. No. What are you? An options guru? What are you? What they call you?
The Godfather of options.
Godfather of options and risk, right? And here he is investing in a gold mine that he's got $30 worth of gold. So listen, he should be able to put that in his 401k.
I think I have the same amount of gold from a school field trip to Arkansas, and we got to be prospectors.
You might. I mean, we ship some.
I think it's in my jewelry box at my parents' house. I don't know. What are you doing in gold? Real gold options, gold futures, whatever.
We're short some strangles in GC and GLD, but nothing much.
Okay.
But gold is up 1%, $33. Pretty big move in /GC. Like I said, office highs of 3,500. It's 34. I'll round up and say 90.
Ripple, known for its XRP token, is going to buy stablecoin payments platform Rail for $200 million, the company said Thursday. Expectations have been raised that cryptocurrency tokens are about to enter the mainstream, causing some M&A activity as crypto companies try to figure out their stablecoin and other digital asset offerings. Any thoughts on this news?
No, I don't know anything about Rail, to be fair with you.
Okay, well, you know about Ripple though, and you know about stable coins.
I do. I actually own some Ripple, not a lot, very small position in Ripple's XRT, right? I own
XRP.
XRP.
Yeah.
I own some Ripple, and I understand what's.
Do you own some Circles still, or no?
No.
No. Okay.
No, but I don't. I'm going to give them the benefit of the doubt here and say that this is the deal they wanted to make.
Sure. You do you, girl. Here's something interesting. I've never seen this, but you guys have been around longer than I have. But JP Morgan Chase's home lending arm is offering a mortgage rate sale through August 18th. I didn't know mortgage rates could go on sale. I was like, is this a TJ Maxx? What are we doing? So it's as much as 1/4 of a point on a conventional loan. So that could save a borrower $20,600 of interest on a 30-year term with a $350,000 loan. So it's not nothing, and it would reduce the monthly payment by more than $55 a month. The discount can also be combined with other Chase programs and discounts. I didn't know Chase was out here offering coupons. Is this a good or bad sign?
I have no idea, because honestly, I don't know anybody that's ever gotten a mortgage through Chase.
I have a Chase mortgage. I had to refinance through Chase. I didn't start out with Chase, but you know how mortgages work.
Then you're the only person I've ever known that has a
cash for all your
Chase.
houses. So I've had my mortgage for a while, and eventually it was with PNC for one time, then Chase. I don't know. So somehow it ended up at Chase, and then
get sold. They get
packaged up and sold. Right. And then I refinanced my mortgage through Chase, and it was during the pandemic, and it was a wonderful experience. To have nothing but the nicest things to say. Lady, came to my house and all this, and I've had I hated PNC. They were the worst, and they deserve federal prison. But
PNC does everything online, don't they? Isn't
Chase does everything. It was just PNC was charging you double sometimes. They're like, you're gonna pay your mortgage twice, and I'm like, girl, what?
Well, that's that you can get the loan paid faster if you're paying it like every 2 weeks.
If you intentionally know and want to pay it twice,
that is a caveat that should be discussed. Yes,
right? Yeah. They shouldn't just enroll you in the accelerated payment plan.
yeah. That should be discussed.
Anyway, not sure if JP Morgan Chase is doing anything this morning, JPM.
Sadnov, you got any banking stocks here? JP Morgan trading 287 and change on the bid, basically unchanged.
I do not. I have no position.
Well, hey, if you want a discount on your mortgage, the sale runs through August 18th. Okay, great. Hey, let's get to some earnings from last night. Block, known as XYZ, reported weaker than expected earnings for the second quarter, but the stock popped after the company did increase their forecast for the year. They brought in revenue of 6.05 billion versus 6.31, but they do expect gross profit to increase 16% to 2.6 billion XYZ.
Yeah,
XYZ. So I don't know if you care. Just had earnings.
Yeah, we sold the 65 puts that expired today for 53 cents. We have a
Stock's up about $7 or so.
Yeah, we'll buy them back at a penny or 2 pennies on the opening.
So you love Square, Block, XYZ.
Love Block. Love Block. It's one of my favorites. Yes, that one worked. Block worked. Rocket Labs worked. TTD, which I didn't.
Hey, wait, hold on. Hold on a second. Oh my God, dude, I know you got the premature evacuation, but I'm literally, like, I literally have all of this. Give me 30 seconds, please. You probably didn't trade this, but I think that this is interesting because it is a new IPO and it really hasn't been on our radar. But that's Chime, and so Chime had their first earnings, BAT CHYM. They did beat Wall Street estimates for second quarter revenue, driven by strong demand for their digital banking and financial services. Chime's revenue rose 37% to 528 million.
The stock
was down, I think.
Yeah, down about 60 cents or something like that. Chime had a good IB rank. It didn't have like weekly options or daily options or anything like that. And markets were 50 cents wide on a $30 stock. So you had to be directional in there would be my way to put it.
Okay, now, Tom, getting to Trade Desk. Trade Desk stock tumbles after earnings. The ad tech company failed to deliver a meaningful upside to their outlook, and they also announced a change at CFO. But results for the quarter did beat expectations. Shares were up 56% over the past 3 months. So maybe just people taking some profits off the table. But the stock was down 29% after hours. I think it's bounce back significantly from that. But what did you do?
Well, we didn't make an earnings trade, but we had an existing September position in there, which will be a loser this morning, no doubt about it.
What is the stock down this morning?
Oh, it's down a lot, like 20 bucks.
Don't mention it. Don't mention it. Don't ruin the day for me. You're going to leave in 10 minutes now. You can ask this question. Down 27. All right, there. I said it.
Oh, that's a lot.
Ooh, that's a lot. That's a lot. I don't hear that every day.
Did you guys trade AppLovin?
No.
Okay, well,
markets were really very hard to trade. I mean, they were very, very wide now.
Well, they're another ad tech company, and their shares resumed their historic rally after the company reported better than expected earnings. Stock popped 12%, now up 35% for the year after being up eightfold in 2024. What are you doing in AppLovin there? So APP.
Yeah, up another $7 to 443 or so, 444.
What's the IV in there?
Ooh, 16-ish.
Oh, that sucks. Yeah.
Not so bueno.
Tom, did you trade Pinterest?
Pins?
No, my biatch didn't tell me about it.
Oh, well, Pins had earnings. Well, maybe that kept you out of trouble. Stock fell 10%. Sales in Pinterest second quarter grew 17% year over year, but their forecast for third quarter sales slightly disappointed, but forecasted between 1.03 billion and 1.05 billion. Company brought in revenue of 998 million versus 975.
Always looking out for you, Sosnoff. Always looking out for you.
How's the IV in Pinterest?
Well, it was 47. We'll see.
That was good.
They see this morning. Yeah. But Saz would have got run over like a steamroller. Good thing I was there for you, Saz.
We had a new IPO yesterday. Firefly Aerospace hit $9.8 billion valuation, just shy of 10 billion, in their NASDAQ debut as their shares take off. They priced their IPO at $45 a share. The proposed range was 41 to 43. Bat, what is Fly doing? Shares were up 55%.
Firefly?
They killed it.
FLY.
They killed it after the opening.
Yeah, 55. It's down about $5 right now. Closed at 60. I mean, no options or anything to trade here.
Well, it's brand new. It just came out
Right.
yesterday.
No, I know. And hard to borrow stock is what I was going to add, that you can't sell it short kind of thing.
Okay. Well, something on the radar, something new to trade, I guess, in the coming days. Imagine just getting called out like this. You're just going about your day at your job, but for some reason, the CEO of Intel, girl, you in danger. In a Truth Social post, President Trump said that Intel CEO Lip Bhutan is highly conflicted and must resign immediately. There's no other solution to this problem. You're just getting yelled at in all caps by the president, and you don't know why. Intel stock went down on the news. Not sure what they're doing this morning.
Sadnov, one of your stars here, trading $20, actually up about 30 cents, but Intel is just off of its lows.
Poor Intel.
Where good traders go to die.
You just got to be. I have a long position on an Intel, but I'm going to get longer on the next down. You have to just be long Intel because it's going to go up no matter what now.
Okay.
Oh, you got a memo?
They just put it in play. This is the kind of news that puts it in play. It's going to be up.
I will give you that. It must mean like somebody has to buy some stock when they put this stuff out like that.
I'm telling you, this is
A company called 2C's Capital is the largest shareholder in Core Scientific, and they issued an open letter yesterday saying that they would vote against the company's proposed sale to Core Weave in a potential blow to the $9 billion deal. The investment management firm owns roughly 6.3% of the crypto miner. So CRWV, CORZ.
CRWV, 124, up around $3 or so, IV rank of 21. But you know what? Volatility these days is low really across the board. 1755 or so on the volatility.
It's a tough stock to trade. Options are wide. Markets are wide, and they're tough.
Okay. Well, I am just letting you know. It's hard out here, man. I'm doing my best. Hey, OpenAI is launching a new GPT-5 model for all GPT users. The latest model is bigger, faster, stronger, more useful, particularly across domains like writing, coding, and healthcare. It was available to everyone starting yesterday. Since launching its AI chatbot ChatGPT in 2022. They've rocketed into the mainstream, and the company expects to hit 700 million active users of ChatGPT this week.
Less hallucination.
It actually will respond with "I don't know," unlike a man who will just not tell you that he doesn't know something.
We know you don't want to hear "I don't know," so we give you something that we think you'll believe. That's what we've been taught to do. Our father taught us, and his father taught him, and so on down the line.
You can't really trade OpenAI.
Except Tom. Tom's father knew everything, so Tom actually knows everything because that's what his dad told him.
You can't really trade OpenAI, but you can trade Microsoft. What's Microsoft doing this morning?
You can trade Mr. Softy. MSFT has an IV rank of just about 8, and that would be rounding up, trading 520 and change, basically unchanged. Maybe it's down 20 cents.
Hey, the Paramount Global and Skydance Media merger has finally been complete. The $8.4 billion merger capped a drawn-out deal process marked by political scrutiny and shareholder concerns. So the deal is done. Not sure if a competitive stock like Netflix is moving on this move this morning, because no one really trades Paramount.
No, but Netflix trading 111.78. That would be maybe down $2 or so. Netflix is pretty much I don't know. For the year, it's doing fine. For the month, it's been a little soft.
Do you have anything on Netflix?
No, but I just want to say the world is now a worse off place with Larry Ellison owning CBS.
Okay. Duly noted. Thank you for your input.
Thank you.
Hey, I have something for you. Chick-fil-A has unveiled their new fall menu items. Ooh, it may still feel like summer outside, but restaurant chains are looking ahead to fall. First introduced last spring, Chick-fil-A is bringing back its cherry berry drink for a second year, including cherry berry and Sprite, cherry berry lemonade, cherry berry Sunjoy, and a cherry berry frosted lemonade. They're also bringing back the pretzel cheddar club sandwich nationwide after a successful test in Raleigh, North Carolina. Tom, you're not going to be a big fan because it does have a pretzel bun, but it comes with lettuce, tomato, cheddar cheese, applewood smoked bacon, and a side of creamy Dijon mustard. You can get it original, spicy, or grilled.
It doesn't even look good.
Okay.
It's so bad. He's going to eat it with both hands. I don't know about the sandwiches, but the drink is approved in the Batista household. Vinny is a big fan.
And the cherry berry lemonade?
The cherry berry lemonade looks okay. That sandwich, I don't like pretzel buns.
I already did that disclaimer.
And I don't like cheese on my chicken.
Okay. All right. Well, you can order it without cheese.
Well, I have to order without a pretzel bun and without cheese, and I don't really care that much for lettuce on there either. I like what we had yesterday.
You need a vegetable.
I like what we had yesterday. I like creamy coleslaw.
You like a coleslaw. You like a dollop of coleslaw.
I like a dollop of coleslaw on a hot chicken sandwich. That's what I like.
Okay. All right.
With pickles.
Duly noted. Hey, finally today, as I pivot out of this so hard, this is a little segment I do every Friday. I like to call Will Tom Eat It, where I scour the internet for food for fat traders. Tom, do you know it is state fair season? So the Illinois State Fair is going on. The Wisconsin State Fair.
You knew this. Wait a minute. Time out a second. You knew it was state fair season.
Yes, Iowa State Fair is going on right now. In fact, all my TikTokers are at the Iowa State Fair.
Well, the Wisconsin State Fair is actually closer to you than the Illinois State Fair, just because geographically that's how that works. But they're both also going on. So this could be an item that you might see at a state fair near you. See if you would give it a try. Check this out. Oh, we don't have sound. It's a brisket corn dog.
I'm doing the sound for you.
It pods. Wait.
A brisket corn dog, home run.
Yeah, that looks good.
Brisket too.
Oh yeah.
Would you eat it, Tom?
Yeah.
Woody actually just got in his car and is driving to Iowa to get
a
one.
brisket corn dog with barbecue sauce on top. I could eat that. I the only problem is I don't love corn dogs, but I could eat that.
You don't love corn dogs, but you love polenta, right?
You like grits?
Polenta.
Grits?
You like polenta.
I wouldn't say I love polenta. I can eat polenta. I like it. I don't order polenta.
I watched you not love that chocolate chip cookie yesterday, but you ate it. Like I watched you not love the taffy, but you ate it.
I didn't touch that chocolate chip cookie yesterday.
Not love the pistachio nuts, but you eat them like they're going out of style.
Can I be excused?
I didn't touch the chocolate chip cookie, for the record.
You're such a liar.
Good
job out of you, Vanetta.
That cookie was good. I ate my cookie. All right. What's coming up next?
I was going to say something there.
Nope, leave it there.
I'm just going to say we're going to take a quick 90-second break. We're going to let Vanetta take her cookie and eat it all by herself. We'll be back.
My dad collects guns.
We'll be back in 90 seconds. It's Tasty Live. Confirm and send next.
I'd started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With there we are. With confirm and send. But before we do, let's take a quick look at the market. Even the S&P, Sadnov, catching a small bid here, up 14 or 15 handles, off of their highs by about 7 or 8, off of their lows by about 10 or 11. Let's call it mid-range for the day. Would you agree?
Yes, mid-range for the day. I would agree.
NASDAQ up 38. The Russell's the big leader to the clubhouse to the upside, up 14, and the Dow up 78. Volatility 1750. I'm rounding down 18 to 20 cents. Tight range on the market last night. Fairly tight range on volatility last night. Caught a little bit on the close yesterday, and we're continuing it today in the market. Bonds down 9, 115.08, about 3 ticks off of their lows. Tight range there last night, 13 ticks top to bottom. Bitcoin had a little bit more of a range. It's down 1,000 right now to 117. But you can see on the chart there, it's at the higher end that it's been all week at 117.1, just a couple $100 off of the daily lows. Oil up 35 cents, but you can see there on the chart on the right side there, last week or so, 10 days or so of trading, oil has been considerably lower from 70 to 64. It's 64.22 after trading under 64 to 63 early last night. Gold up $34 with all the talk of everything that I just talked about. Gold still up around $30. On the earnings front, the big bad boy is going to be TTD, down around $20 now, Sadnov, better than 27, I guess, but a huge move on a $88 stock. I'm sorry, that's $30, down $30 now to 58. I apologize.
That's a massive move.
That's a debacle for the stock, 100%.
Not going to be good for the good kids either. And I have a crappy little tiny position in there. Crappy little tiny position.
You never know how big small really is, Saznoff. RKLB was up around $1 earlier. It's up almost $3 now. RKLB Rocket Labs. XYZ was up around $7 earlier. Looks like it's up about $6-ish now. You didn't do anything in Apple Oven and Chime. That's all I got for you, Saznoff.
No, I didn't.
Going into the weekend, Saznoff.
No. Yeah, I mean, everything's going to be fine except for that TTD. And I didn't even do an earnings play in there. I just had an old position on. I've always hated that stock. I said to somebody yesterday, I go, whatever you do, don't trade TTD because it's illiquid and the stock sucks. But I didn't get out of it.
I think we've gotten caught in there once before.
I did. And I didn't get out of my position yesterday. And, 30% move in a stock is pretty big.
Yep.
I'm Tom Sosnoff. He's Tony Batiste. This is Tasty Live. Let's do it. A little confirm and send.
I'm ready. Let's do it.
Friday, August 8th. How long does it generally take for your trades to have a positive P&L? Is it normal not to see a positive P&L until about a month after putting a trade on?
I mean, I don't know what normal is. I mean, it's pretty random. I mean, let's be completely frank here. I mean, when you get filled, you are probably a penny or wrapped around mid-price, meaning unchanged. So you're down a penny to unchanged. You're rarely getting filled and up a penny right away on the position. After that, I mean, if the stock doesn't move and you're putting a delta neutral position on, you're probably up a couple of pennies by the end of the day. And if you did a directional bias play and the stock moves in your direction, you're probably positive on that too. And if it went the opposite direction than your directional trade, you're probably down. So it's completely random. I mean, it takes for our 45-day strategies a little bit of time to work. You're usually wrapped around a couple of dollars between unchanged, positive or lower. And by the second-ish week, you're usually, watching the position work, again, if volatility works out for you.
Yeah, this
is pretty random, I guess, is what I should have said from the very beginning.
Yeah, I mean, sometimes, you're up like the first, right when you put the trade on, and sometimes you never get up on a trade. Sometimes it takes a week or a month, and sometimes, the other way, it takes a week or a month to turn a trade into a loser. We did a study on this once, and basically, like 70 or 80% of your trades are going to be down money at one point. In some cases, it's like 90% of your trades. It's pretty random. That doesn't mean it's going to close that way. It just means, it's pretty normal for some trades to take a long time and for some trades to move your way right away.
Right.
Yeah, we don't. All you can control is what you do at the opening, and the market's got to help out a little bit after that. Let's go next slide. I have a couple of trades I've been rolling for a couple of months, this person writes. I'm basically treading water, but not making any significant headway. Do I wait it out and pray for a market correction, which I know we're going to get eventually? Or do I bail and just take the loss?
Look, congratulations. You did a great job here at all-time highs, being directionally wrong, waiting for something to happen. Should you get out of it now as opposed to yesterday or the month before? I mean, obviously, I don't want to play Monday morning quarterback and say you should have gotten out of this months ago if you're treading water, breaking even, that kind of thing. But I will say this. I think more money is wasted and lost waiting for a crash, and that's what I think you're playing for here. They can benefit from trading the market. So you want to leave this position on, reduce it in size, put the money to work someplace else, and move forward. Great job on what you've done so far. Seems like you have a lot of conviction, and if you have that kind of conviction, listen, one person's opinion is no better than the other person's opinion because nobody knows nothing on direction.
I mean, every single trader has had positions on when they've been rolling for a couple of months and treading water and definitely not making any headway, and then confused about whether they should stay in the position or just concede, and I think we've all been there, like what feels like 1,000 times.
And you know what? He might be the person, or they might be the person that's keeping this market higher, because the market's watching their positions and making everybody else benefit from it. All the bulls benefit from it. So maybe they shouldn't take it off. Just do a humanitarian thing and keep it on. What I'm trying to say is nobody cares what your position is. Like, you got to do what's good for you and benefit from it.
Yeah. I mean, I would say there's an occasional time where we'll bail, just take the loss and bail. But the majority of the time, as long as the IVR stays high, we're going to battle it out as long as we can. If the IVR drops into single digits, we may just puke the position at that point. But if as long as the IVR is high and we still think there's some potential, we're going to hang in there.
Agreed.
Let's go to the next slide. What do you think of the idea that 401k accounts, we talked about this morning, will be able to invest in real estate, private equity, and crypto assets? I imagine it'll make those markets more liquid. However, some of those markets lack transparency and or are in their infancy. At the same time, you still can't do things like sell options in a 401k. So I'm just wondering what you think.
Yeah, they should open options up too. I mean, seems silly at this time in the business not to have it.
Yeah,
but
I mean, we've been pretty outspoken about this, like I mentioned earlier, for 25 years. I mean, we don't believe, remember, we're the first firm that lets you trade options, futures. I mean, we're literally the first firm that made options and futures available in an IRA account, spreads, and we're absolutely the first firm, and maybe the only firm, that allows you to do naked options in an IRA account. We have been at the forefront of allowing people to do whatever they want to do in the listed marketplace for a long time. We've turned away so many accounts over the years that wanted to move their 401ks over to us to let customers do whatever they want, but they just can't find any trustee that would support that. Now, everybody will. So, I mean, of course, we're in favor of this. I understand the arguments. I think there's a lot of good arguments for, be careful of illiquid products, be careful of scammers and stuff we can't watch and all that other stuff. I get it. But in the end, are we better off opening this up to everybody in any kind of investment or not? And I say, absolutely we are. And, you just have to realize, if you're going into something like real estate or private equity, or even crypto for that matter, you're probably looking at 3, 5, 7 years before there's any liquidity event. So, you need to know that up front. And you're not going to get an accurate mark to market. You're not going to know what happens. And you're going to have to spread the wealth around, that's for sure. But in the end, we are in favor of this. And we do agree with you that the more activity in these private marketplaces, the more efficiency that will come to those marketplaces, and they'll be better.
Yeah. Put a little light on the area, the mushroom dies. The way to do it.
Let's go to the next slide. I saw your piece on gap fills the other day. I'm just wondering if you'll be planning any other technical type studies, and if that piece may have swayed your opinion that we technical people don't wear tinfoiled hats all the time.
You do wear tin-foiled hats all the time. Now, it hasn't swayed anything or anything else like that. It looked pretty random to me.
It's kind of it. First of all, I wouldn't consider this study on gaps necessarily a technical study. A price gap is not like I just don't consider that part of necessarily technical analysis. It's just price gap. But is that going to sway our opinion? Of course not. Are you kidding me? This is ingrained, man. We've been doing this for longer than you've been born. No, it's not going to change the way we think about, technical analysis or those who wear tinfoiled hats. But I'm completely open to more studies. Somebody else asked me if we would do a study on gap openings up and down in different commodity prices to see if they work the same way as equities. And I'm sure they're probably very close, but sure, we'll do that too. So we'll look at gaps in different futures. No, it's not going to change our opinion. You technical people. No. We're still putting you all in the same boat and shipping you off in the middle of the sea. Let's go next slide. There are some days when you say you traded badly and other days when you say you called it right. Like last week, you said you messed up in Microsoft, and yesterday you say you called a crash. If you had to add it all up, what percentage of the time would you say you're right versus wrong? As a follow-up, because I expect your answer to be 50%, why wouldn't I just use AI to find opportunities fitting my order entry criteria and then remove myself entirely from the equation?
Well, let's be fair here. Saz is not anywhere near 50%. He's closer to about 10, 12%. But that being said, the strategies he uses are 60+% being correct, sometimes 70, 80, and 90%, which is what saves all of us, not just Tom, which I was making fun of on his directional bias, not just Tom, it's the strategy that really fits the criteria here. So for me, that's what I lean on. And why not use AI fitting my order criteria? There's so many other things to watch in the market. I always talk about volatility and the rest of the indices. How is the Dow doing against the mini S&Ps versus the Russell versus the Qs? And so many other things, your own portfolio, what your delta is, and volatility of individual products, tight liquid markets, that I don't think AI could ever do it. But prove me wrong. Try it. If you like the idea, do it.
You know, it's funny.
I hope it works for you. I'm not rooting against you.
It's funny, but the what I love about this question is what percentage of the time would you say you're right versus wrong? Well, the answer probably is 50%, but in our heads, we think it's like 90-10 our way. So the reason that I don't want to go to something that is 50% is because I always think that I'm going to be right 100% of the time, even though I realize that I might be right 100. I might be right 50% of the time, 100% of the time. But I always think it's going to be significantly higher than that. And I don't care what ChatGPT or anybody else has to say. I'm going to make my own opinions or make my own decisions based on my own opinions. And even though I might end up with 50-50, I'm going to think all along that I'm going to be 90-10.
Sure. That's fair.
And I do use AI to help with certain things, but not everything.
You do? What do you use AI to do? I've watched you. I'm just curious. What do you
I
use?
ask AI lots of questions. I probably use AI a couple times a day.
Oh, not to find you a trade.
No, not to find a trade.
Oh, okay.
No.
Well.
But like I used AI this morning to ask it something about, the CEO of some company. I couldn't remember something, and I asked it another question about a duration on a bond or something. So I ask questions. Let's go next slide.
I do that all the time too. Yeah, totally agree.
I love the new active trader feature you guys demonstrated yesterday, but what advantage does the depth of market offer? Can't bids and offers be quickly added or pulled?
Sure, they can quickly be added and pulled. And I don't necessarily look at market depth. I don't look at market depth ever when I'm trading options or a stock or anything else like that. But I know futures traders like to look at that as something else to help them pull the trigger one way or the other. I mean, I can make arguments for big bids and big offers being bullish and bearish on both sides of the market. So for me, it doesn't have much of a bearing, but some people it does. And if it gives you some confidence in making the trade, I'm all for it. I don't think there's any right or wrong answer here about market depth. I just don't think it's an end all.
Years ago, back around 2000, the market depth was a big thing, and depth of book and market depth, and but that's when we used to route to certain exchanges, and it was a very different animal back then. Today, we don't even route. We route to a middleman, and the middleman, like our order routing machine, routes to the person who's doing the best job filling orders that day, meaning they're making the tightest markets, and then then that person routes to various exchanges.
Sure.
Depth of market today means basically nothing. And yeah, sure, bids can be pulled and offers can quickly be added and all that stuff, but for years we relied on depth of market to help us give us some information, but nowadays it has no value at all. I mean, really none. Let's go to the next slide. Oh my God, we have a bonus question. Today is the 37-year anniversary of a significant event in Chicago history. You should know it. What is it?
Without asking ChatGPT, I don't know.
Don't say anything. John, do you know what the? Don't say anything. But do you know what this is?
Oh yes.
Okay, can you give us a hint? Because I have 37 years would be 1988, right?
Correct. Think about that.
Think about what? 1988. It's not the year after the crash.
It rained that day.
What?
It rained.
It rained. Was it the flood?
Of the CBOE flood?
Was it the flood in Chicago?
Nope.
No? Is it sports related or flood or something else?
Too much information. You guess.
Huh?
Too much information.
Sports.
Said.
Yes, sports. All right, hold on. 1988, the summer of 1988. So it's not the Bulls beating Detroit. It's not the Bears in the summer. It's not, was it the White Sox, 1988?
What's today's date?
8/8/25.
8/8/25. 8/8/88. 8/8/88. What is that? That's like, is that some kind of thing? 8/8/88? Is that like your golden year or something?
Oh, is it the? I found it.
Oh, the lights at Wrigley Field?
First night game.
8/8/88. Yeah.
And it was rained out.
It was really a well done introduction to night baseball because, of course, it was such a controversy.
Oh, the first night game at Wrigley Field. No, I would never have known that.
I never would have gotten that either.
And we were playing the Phillies, who were quite a few games out of first place. We were quite a few games out of first place, but I remember it being one of the toughest tickets ever to get for any sporting event in Chicago. It had the feeling of a heavyweight fight. It had the feeling of the Kentucky Derby.
I do remember this.
It rained, I don't know, second or third inning, it just total downpour and wiped everything out. Even though it was rained out, it was a night that definitely you would never forget it.
Oh, yeah. Okay.
Obviously, we would forget it. That quote was wrong.
John, you remembered 8/8/88, huh?
I lived in the neighborhood at the time.
Yeah, I lived in the neighborhood too. But wow, I know I would not have got that. That's a tough one. All right, good.
Were you for the lights or against the lights?
Oh, I'm for the lights because I didn't like the day games because they would take you. I liked the night games back then because I wanted to go to the games. It was too hard to go during the day.
Because you're working. You're a working man.
I mean, of course I want night games. Who doesn't want night games?
Francis in the chat room didn't want night games.
Oh, Francis is old school, man. He was born before there was electricity.
We're going to take a quick 90-second break. We're going to come back. We've got more Tasty Lives. What more Tasty Live do we have? That's right, an option, Jive. We'll be back in 90 seconds with Tasty Live. You're amazing.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I found very early on that I was comfortable with having risk, and I like the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York when I was a young kid. I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
People are always asking, where can they find my podcast? There it is, son. Look at that, Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's Option Jive.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with an Option Jive. Even the S&Ps holding steady, up 13. Sadnov, all quiet. What do you think here?
I haven't done much this morning. I've adjusted some gold.
We've had a 2-point range on even the S&Ps.
I traded some S&Ps overnight. Didn't make any money. Scratched them. Sold some up like 11. Sold some up 20. Basically scratched them. Bought some bonds this morning, basically scratched those. I just bought some more bonds a little bit lower right here. I don't know. I'm trying to I'm a little bit trying to force it this morning. I haven't done anything really stupid. Haven't done anything good either.
Oh, there's still time, right? I mean, the day is young.
I know it's 8:12 in the
disappoint us today. I mean, every day you come to play, you never disappoint us. You always do something stupid. I mean, you'll be able to do it today, right? Finish strong.
I don't know. I mean, I'm hoping. I don't love this market here. I'm hoping that I feel like they're very frothy and they're in the process of like maybe blowing out a little bit. So let's see.
Okie dokie. Oh, let's see. Well, right now, let's get to an Option Jive. How's that sound?
Yeah, we've got no Jamal this morning, so we're going to do a little Option Jive for you. Then we've got Fast Market coming up, and then we've got fun little market measure today. And since we have no Scott Sheridan, he's gallivanting around the world somewhere, we are going to take your phone calls today. We had a lot of people on hold on, I think it was on
yesterday.
Is that yesterday? Okay. We had a lot of people on hold yesterday we couldn't get to. So you can queue it up as early as, just before 8:30, 855-238-2789, 855-238-2789, 9:30 Central Time. So about a little over an hour away, and Tony and I will be happy to take your calls and through the last hour of the show. And then we'll be back at 2:30 this afternoon for last call as we go into the weekend. And then when Mike, Nick, and Katie are on Sunday night on the stage in Seattle, we will be doing first call Sunday night at 4:55. Myself, Mr. Chris Vecchio, and Ilya Spivak will join us on Sunday night. All right. Mastering the pairs trade. I was about to say I currently do not have a pairs trade on, but I did do one on Wednesday. It was a weird one because it was a customer recommended trade that so far has not worked. So I'm not throwing the customer under the bus though. I bought Caesars and sold.
But you're close to it, right? Like, I mean, you've got your hand out there to kind of.
He's about 50 cents more away from me throwing him under the bus. I bought a bunch of stock in Caesar's Palace. I think it's CZR, I believe. CZR, yes. I don't really trade Caesars much. Hail Caesar. Bought some stock in Caesar's Palace and sold some stock in Las Vegas Sands. Did it 2-to-1. So for every 100 shares I bought, for every 100 shares I sold in Las Vegas Sands, I bought 200 shares of Caesar's Palace, and that's my pairs trade because notionally that's how it's set up. But this is a segment today. Usually we use futures. We don't use stock. It's very inefficient to use stock. Usually we use futures. And the only important thing about pairs trades is, that you do what you want to do and you set up the ratio. Nobody knows what's going to happen. There's a little bit of a mean reverting. We
play them as a contrarian role, right?
Yeah, we play it as a contrarian, but there's a little bit of mean reversion in pairs. And Jacob's done a couple of really interesting math pieces on this, but this is more of a operational piece. This is more of a practical process piece. It's a step-by-step guide. All right, John, let's take a look, see what we got. So pairs trading consists of playing the spread between two correlated markets. The example we put up here was SPY and IWM. Those are two stock indexes. They're highly correlated. When Tony and I were floor traders for 20 years, we traded one product called the S&P 100. And the S&P 100 didn't have a hedge. There was no S&P 100 stock. So we used to spread our positions off against the S&P.
Or S&P 100 future, right? I mean, you could
or
on
future.
either one.
So we used to spread our positions off against the S&P 500. So we'd be buying
500 stocks versus the 100 biggest ones in the 500. But you'd still have 400 stocks that you didn't care about that were part of the position.
So we'd be buying or selling the S&P 100, and we'd be hedging it with the S&P 500. It was what we would call an imperfect hedge. They call that.
Yeah, I would say it was very imperfect.
Very imperfect. And if that's even such a thing, I don't know if you can even say
not such a thing, but it did quantify for that.
It was an imperfect hedge, and that kind of a hedge. Back then, they called it basis arbitrage because you had the two different bases, like basis A and basis B. Basis A was the S&P 100, basis B was the S&P 500, and the spread in between was essentially what you were trading. So we called that basis arbitrage. You're betting on the spread. It's not a perfect science or an exact science or an easy game at all, but sometimes you trade whatever's out there. We've gotten better at this now. We call it a pairs trade. We understand it a lot more. And, so we went from calling it basis arbitrage to pairs trading. We changed that kind of name. We popularized the term pairs trading in the early 2000s when we were building Thinkorswim. We used to talk about pairs trading all the time, and we would do it just to give people a reduction in risk. When you take two highly correlated underlyings like the S&Ps and the Russell, they have probably about a point, let's call it a 0.85 or 0.9 correlation. So they're almost perfectly correlated. But by doing one against the other, you reduce your risk by about 80%. So if you can find a way to reduce your risk by 80%, it's kind of a fun trade. That's what it is.
Sure.
And you're just betting on the spread, widening or contracting, however you want to bet on it. And it is a little bit mean reverting in most cases. So for example, the correlation between the SPY and IWM has consistently been positive over the past 3 months. All right, it's just under 100. You can see it on the thing. It's like, it looks like it's around 80-ish. Let's go next slide, John. So we set up pairs to take advantage of correlated names that have diverged in price, like silver's up, gold's a little lower, that kind of thing. S&P's up, NASDAQ down, NASDAQ up, S&P's down, anything like that. Gold, silver, like I just mentioned, it could be crude oil, natural gas, it could be corn versus soybeans, who knows? Could be Caesar's Palace versus Las Vegas Sands.
Sure.
Increase occurrence. It increases occurrences for us in periods of low volatility. It's something to trade. And it reduces the risk by trading a spread. Like I said, the CME has multiple pages on their site dedicated to showing you intermarket spreads, which show you the reduction in risk. It's about 85% across the board.
Mm-hmm.
Let's go next slide. So, steps for setting up a pairs trade. Find correlated underlyings that have recent divergent in price. Find the notional value of each. Adjust the notional value for implied volatility. That just means you multiply the price by implied volatility. And find the contract ratio to match the notionals. Sounds very complex and high level. It's not. It's pretty straightforward and simple. Let's go next slide. So here, this is a page of different underlying indexes, like the SPY, IWM, and Qs. Then we put some banks, JP Morgan, Bank of America, Citigroup. Can't read what's on the other side. Is that airlines? Delta, United, and AAL, I think. I think so. It's really small.
That is
type.
UAL, AAL, and Delta Airlines. You are correct.
So we have airlines, indexes, and banks. Find
That's
correlated
correct.
markets. Markets that trade with high correlations, like the broad market indices or stocks in the airline industry or finance industry, are great candidates for pairs trades. This is if you don't want to use futures. Most of the time we're trading pairs, we prefer futures because they have higher leverage, and sometimes they have micros as well. But we like the higher leverage so you don't tie up too much capital. The problem with using stocks is you tie up a lot of capital. Options, really hard to trade pairs with. Let's go next slide.
Yeah.
So first you do is you find the notional value. For stocks and ETFs, calculating the notional value is easy as multiplying the stock price by 100. So the Russell, if it's the S&Ps are 630 and the Russell is 220, then you just multiply by 100, then you can see the notional is 22,000 to 63,000. So you would automatically go, well, you got to do 3 Russell to 1 S&P. But hold on, we don't know exactly what the volatility is. Let's go next slide. So now you have to adjust the notional value for the implied volatility. So after adjusting by implied volatility, after adjusting for implied volatility by multiplying by the implied volatility, we have a new notional value that will equate the risk on both sides of the pair as to not overweight on one side. So what we're looking at here is the 220 versus the 630. That's the notional, like we said before. When you multiply by the implied volatility, you end up with, it looks like 2 to 1 instead of 3 to 1.
Right, right.
See, that's why you have to multiply by the notional value. So before I said just looking at the price, you would say, okay, I'll do 3 Russell to 1 S&P. But once you multiply by the implied volatility, which is the fair way to do it, you end up with, it's really closer to 2 to 1. Okay, let's go next slide. Then you find the contract ratio to match the notionals. So now that we have a correlated pair and IV adjusted notional values for both, we can finally arrive at the ratio for the trade and implement the trade in shares or options on the 2 stocks. So we need 48 SPY shares for every 100 IWM. That's almost exactly 2 to 1.
Mm-hmm.
Let's go to the next slide. Thus, if you do 1 to 2 SPY to IWM, you'll be neutral with the current value of 50 shares of SPY to 100 shares of IWM. If you want to be short, go less shares of SPY to IWM. If you want to be long, go more shares of SPY to IWM. As you become more experienced with trading, you can do this calculation quicker in your head to approximate just how you should place your pairs trade for your current assumptions. Let's go next slide. So some of the takeaways. Pairs trades aim to capitalize on price divergences between correlated assets while reducing directional risk through spread trading. By adjusting for notional value and implied volatility, traders can size positions appropriately and increase trade frequency in different environments. This is something that we use very often on Tasty and for our own trading. That was a really good, simple step-by-step guide.
Very good. Very, very well done by the team. We're going to take a quick 90-second break and come back. We got more Tasty Live. Sad enough. What comes up next?
Opening bell.
Opening bell. Sad enough. You got it right again. We're going to take a quick 90-second break and come back. We got more Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You're gonna want to put natural gas on your list for routine rundown today.
You're me. I'm Futures Katie from the future.
Can you please explain to me buying power reduction?
Buying power reduction is basically how much you have to set aside per strategy when you're entering a trade. One of the coolest things about stepping into the futures world for me was learning how all of the different asset classes are correlated and non-correlated to one another. So it's really opened up my eyes to all the different products that are available and how relationships that I saw before might be enhanced by these new products that I've now been able to trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell imminent here. Sounding off in about a minute and a half. Let's see what's going on in the market. Even the S&Ps are up 15, holding steady. That's where they've been since we've been on the show. NASDAQ up 43. Russell up 11. Really not too much movement in all four indices, with the Dow up at 90. Volatility in by 25 cents, trading near its lows of 17.35 today, 17.45. Bonds trading right where they've been too, maybe a skosh or two lower by a couple of.
Yeah, they're on their lows for the day right now.
You bought them at 04 or something, didn't you, or something like that?
Well, the equivalent of 04, yes.
Yes, got it. Oil up 30 cents, gold up 36 cents, net gas flirting with $3, 3.37, down about 3 cents.
It's a pig.
The big mover, which I think is going to have wide markets when it opens, is TTD, down around $56, $57. Sound of Scoopy?
No, down to $57.
Down to $57. Scoopy? Not
with your money, dude. I need to sell some calls.
Have you finally learned your lesson?
Oh, I was never trading TTD again anyway. So there's no lesson. There's no lesson to be learned, sir.
What is that? XYZ, and maybe you sold some MES?
Yeah, I had an offer in to sell some at 85. I think that's where I got filled. Yeah. XYZ, we bought our calls back for a penny. It's a golden nugget miracle. Rocket Labs.
We did buy them back for a penny.
Rocket Labs, we're going to buy our puts back for 2 pennies, and we're going to buy our calls back.
Even the S&P's up 20. Trading closer to their highs. Cancel crash.
Yeah. Ooh, TTD, not good for the good kids. Ooh, ouch.
No,
Ouch.
TTD. Gonna leave a mark. This one's gonna leave a mark.
And I had a tiny position in there. Tiny, because I didn't even care.
Well, you had a almost 40% move here, 35, 37. You can see it right there on the screen, 37% move. I mean, this is
well, I'm short the 115 calls. I don't think those are going to matter. So it's just a question of what call do we sell? And there is no good number here, sir. Guess the 60s? I don't know.
This is a rough one.
Yeah, this is I don't know
what. You ever think about just closing it out of curiosity? That's the questions I'm going to get. Let me see if I can answer them right now.
No, real men don't. Real men.
Why not?
Real men need to, suck it up and feel the pain for a little bit.
Well, I mean, it's not like Apple with tight markets. It's not like it's a random stock, right? I mean.
Yeah, it's a random, stupid stock. I totally agree. XYZ was a small winner.
I can see you saying I'm going to stay in this in Apple, but I don't see you say I'm staying this in TTD. I do see you looking to extend a little bit of duration for a day or two, but I'd be looking to get out.
Yeah, probably. Well, Rocket Labs was a winner. XYZ was a winner. What else did we do? That was it, right?
That's correct.
Yeah,
TTD, Rocket Labs, XYZ, Chime app, but you didn't do anything there. Let's see what app is doing. That's APP. APP is doing the opposite. It's up 4%, up almost $18 to $4.55. App loving, side enough. Get yourself some.
Yeah, nah, I'm gonna pass. All right, let's take a look and see what else we got here today. Anything else in the anything else? Not exactly, I would say. Any other stocks with huge moves this morning? I'm looking at my screen, trying to figure it out. A little bit quiet, Mr. Batista. It's a little bit quiet.
Very quiet.
Very quiet is right. Very quiet.
So do you think that continues for the rest of the day?
Boy, this is about the softest opening.
Yeah. What do you mean by softest? We're up. What do you mean softest?
Yeah, this is about
one of the tightest range markets that we've had in for an opening, 30 handles top to bottom.
Hang on. Yeah, this is Las Vegas Sands, just what I was talking about, is down.
LVS. What do you do? Oh, you're looking at your pairs trade. LVS down $1.20. I'm gonna have to go check on where you did these prices.
It's like we're up like 2 cents.
Pennies one way or the other. Mm-hmm.
Yep.
It was against you though.
Yeah, a little bit. Pennies. Costco, $9.81.
Yeah, I got out of Costco yesterday. Took a couple of $1 loss on it, right about here, with the stock maybe a point or so lower. You know what? Took what turned out to be looked like a full-ish loss with the stock. I wanted the stock to be right here. Now, here's an example, Sadnov. If I had stayed in my original trade, I'd be up. But I went and stayed mechanical, and I'm down a couple of dollars on the trade. You know what? I'm going to live to fight another day. This is what I'm talking about with AppLovin. You know, not AppLovin, with TTD. Markets aren't great in Costco. Got involved in here when IV rank was really low, looking for something to do. Did a diagonal directionally, completely wrong by 80 handles or 80 points on Costco. Get out for a couple of $1 loss instead of tens of dollars loss. I don't know. I consider it a win.
I was short the in Costco on that whole down move. I was short the 950, 945 put spread, and it was about, I guess at worst, maybe like $1.50, $2 loser, and we just took it off for a $1 winner.
That's nice. That's nice. We had a much tighter spread and probably a smaller position because you're a giant.
I also had a put ratio spread on that was probably about a 30 to 40 cent loser that we just took off for a 50-cent winner.
That's why it's good to be Sadnov, ladies and gentlemen.
Well,
good to be king.
If you keep your position small, you can hold the stock for a $50 rally. And that's what we did.
My original position would be a $3.50 profit right now. Instead, I took around a $3.50 loss.
Well, you're a little bit, you wet your diaper. I mean, it's like, I get it, but you traded too big.
No, didn't trade too big. I'm just not going to sit long and at the money vertical. Like the stock is 980. I'm not going to sit there long the 980 1,000 vertical spread after the stock has had not only a 80-point debacle to the downside, but an 80-point rally back up. I consider it a gift just to get out with skin in the game. But you're right.
Yeah, I'm not sure exactly what to do here in this TTD. I'm going to roll my calls down again and just hope for a gold nugget miracle, I guess, over the next. Hopefully I can make back a third of it. That's the game plan. All right, S&P's up 19.5. We sold them right about here. So no harm, no foul. Bonds, same price. I mean, I'm ready for a little fast market. I need some trades.
Let's do it. You will get some trades. Our viewers came to bat for you, Sadnov. We're going to come with fast market next. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap. What did you get up to last night?
I had a rough night. I was doing webinars till 7 o'clock.
Oh, no.
Yeah.
It's hard being a cam girl.
It is.
You had breakfast for dinner?
Breakfast for lunch, breakfast for dinner.
Oh, no.
Yeah.
Was it even good cereal?
No.
Well, yeah, I was like, what kind of cereal do you eat?
I had some.
You're like a Mueslix guy.
I like Raisin Bran.
Okay.
Special K and granola.
Just not
I like oatmeal too.
Okay, congratulations.
We weren't talking to you.
I like
He was
cream of
talking
wheat.
to me.
I like cream of wheat.
I was literally talking, and he's just like, I like oatmeal. It's like, okay.
I'm gonna tell you right now, St. Bart's.
Yeah, here we go. Samuel, I get Tom going. I have
I've
to
only
talk
been
about St. Bart's.
I've been there a couple times. I love St. Bart's.
Couple of times?
Couple times.
Are you sure it's not going to get you in trouble? would you like me to get that cut out, or would you like to keep that in there?
Keep that in there.
Okay.
What's the other?
Tough
What's
guy.
the other?
Wait till I tell about St. Bart's a couple of times. Wait, I could be wrong, but wait, I have it here on film.
Wait a minute, hold on. I've only been there once. What do you mean?
I already texted how many times you've been to St. Bart once. I go, ooh, do I have news for you?
I'm getting tickets. You're coming with.
I'm not.
Yeah, you will. I'm buying good seats, and you're
I'm
gonna
not
come
sitting through it.
You're gonna tell me Elton John's no good?
Radio was
one of the worst concerts I've ever seen in my life.
In the day, you're gonna tell me Elton John's no.
In the day, what? I didn't see him 40 years ago. I'd rather see Lady Gaga.
So
you're a freaking poser.
So then I said, hey,
what? Give me one name of one Lady Gaga song.
I don't know the names. I just like before we get all excited here and start, and start using those little what do you call those things that you blow out on New Year's Eve?
My what do you mean? What?
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with Fast Market.
Music. Fast market. All right, I need some trades. My positions, my theta's light. My delta's good, but my theta's light. My capital usage is way down. If I don't use this capital, Bat's going to steal it. So I got to do something.
Use it before you lose it, Sadnov. You know that.
I know. All right, let's do it. 8:43 in the morning, Central Time. We're in Chicago. And happy to have you along with us. From Deutschland, we have, it looks like Michael Jürgen Müller. I like it. Michael, thank you.
I mean, Venetta's fluid in German, but you really you outshined yourself right there, Sadnov. I will give that to you.
There you go.
I give you the win.
Let's do something bearish in the Russell, says Michael Jürgen Müller. I like it. Let's do something bearish in the Russell. IVR is below 19. Let's buy a put spread, sell the at the money put, and buy an in the money put in the 35 to 45 day expiration cycle.
What's MRUT though? I've never traded it.
What does he want to do? MRUT. Oh, I'm sorry, I missed that. MRUT. What is MRUT? Is that
I don't know,
mini?
but there's no volume in any of the options in September. No volume in any of the options in August. Well, one contract. Sorry, traded.
Let me just see what this is first. MRUT. So it's 222. So is this 1/10? Yeah, it's 1/10 the size.
Mm-hmm.
So, Michael, you can certainly try something.
Mini Russell 2000, Sosnoff.
Yeah, there's very small open interest. The markets are okay because it's an index.
The markets are fine. I just don't know if this is worth it.
Yeah.
Like
so let's go
strategy.
Let's go to the rut. How about that? We don't need to do MRUT. We could do rut. And September's 41 days, so that fits your criteria. And you want to go and you want to buy a put, buy it in the money puts. Well, we'll straddle the at the money. We'll buy the 22.30, sell the 22.20. Okay, in the rut. Let's get rid of open interest. Let's go.
Mm-hmm.
Now the rut's not the greatest either. Man, why is there no volume in the rut? Does it not trade? Tony, help me here.
It does not trade a lot.
There's zero volume in the rut. Am I looking at this right? Oh yeah, because there's volume in August.
Yeah, August is where the volume is. You were looking at September?
Yeah.
Yeah.
God, I can't believe. I'm really surprised that the rut has. You know what? I'm going to change this one more time, Michael. We're going to go to the RTY options because at least there's.
What are you looking at? IWM? What were you looking at?
No, I'm looking at RTY, which is the Russell. We wants to trade the Russell. We're going to trade the Russell. I'm going to do the RTY options.
So you're going to go to /RTY. You're talking about the futures options, correct?
Futures options, /RTY. There's at least a little bit of action there. I'm going to buy the $25 wide, one strike in the money, one strike out. These are $50 a point. And for $11.90, which is the equivalent risk of, let's just say, just under $600, I can buy a put spread in there at the money, just like you said. It looks like it's trading, I'm going to say right around 1190. So we're going to put an 1180 bid in. Let's see, the rut's up 630. It's not moving that much.
Even the S&P's up 27, making highs.
Put it in a tick below. Let's see if we get filled. We're just testing the waters here. Let's go. So we're working it, and we're working it in the RTY, which is, we just went to the only rut index that's trading outside of IWM. Mm-hmm. Let's go to the next slide. We'll get filled in there, Michael. Just take a second. I need one more uptick in the RTY, and we'll be filled. It's up 640 now, and it's up $7. We'll be filled. We should be filled. Let's go to the next slide. Perfect. Nick from Sioux Falls, South Dakota. Looking at Lulu. We bought Lulu 2 days ago. Stock's down 172 today. What a PIG pig. It's hitting multi-year lows and IV is climbing fast. Selling the 170, 240 strangle and SEP. Rich, rich, rich. He's right. It's rich. SEP. 170, 240. Let's widen. The stock's down. So this is a little bit weird. Let's do the 160. Let's do the 160, 240. And we'll do it for 615.
Okie dokie.
Actually, we won't do it for 615.
You're going to try.
We'll do it for 613. Take a fill, Nick.
You're not filled in the rut yet. Even the S&P is making new highs up 30.
I know, but the rut hasn't moved.
No, actually, the rut, when you're looking at it, is actually down south enough. Rut is only up 6. which is about a quarter percentage point. It was up 12.
It didn't move.
Yeah. That's what she said.
Yeah, that's a weird thing. All right, we're gonna see. I'm working it. I went up to 680. I went originally I'm sorry, I went up to 1180. I was originally 1170 bit. I went up to 1180, but the rut is actually not moving at all, which I find kind of weird, but I'll go up to 1190. We'll see. Let's go next slide, John. Yeah, the rut is weak. Weak. Jorge A from LA. Jorge from LA. I like it. Oracle, ORCL. We have no Oracle position on at the moment. What does he want to do? Let's take advantage of the high IV. Strangle at the 10 deltas. Showing some intestinal fortitude. Look at that. All your words are being used. 10 delta. 200 put. 10 delta. 200 put. Let's just... We'll do the 195, 310. The market on this thing is about 390.
That would be pretty delta neutral too.
Yeah, mid price is 390. We'll get filled at
388, about 2 cents off of mid price.
388. Nothing done still in rut. We're working it like we're working like a dog. Let's go next one. Thanks, Jorge. Jack from Philly. 0 DTE inside day. Let's size it up. Sell some 30 Delta Strangles, $30 wide. Sell some 30 Delta Strangles. Oh, so he wants, I'm going to buy the wings. All right.
Yep.
SPX. We're going to go to the 0 days. SPX, 30 Delta Strangle. Well, what do you say? 30 Delta. Well, we'll go, let's do, where's the index right now? It's 6372. So we'll go to, let's go to 90 and we'll go $30 the other way. 6350. We'll go $30 wide. 6320. Well, actually, Jack, it'll be easier for me to go $20 wide because the options are, at least there's something there. $20 wide. So I'm going $30 out, just under 30 delta. Let's say 25 delta, $20 wide. It looks like we could collect 575.
Ooh, that's going to be a tough one.
You think?
Yeah, I don't think you're going to collect 575. I think it's going to be in the 560 handle.
I think you're right. I thought I was better than that.
I've often been confused by thinking I'm better than that too, Sadnov.
Yeah. 565.
Makes a little more sense.
565, Jack. I'm trying.
I mean, 570 something. What do you think you are, special?
I did think I was special. All right, let's go next slide. Fred from Naples, Florida. He wants to do crowd. After a 100-point pullback, would like to get long here. Selling a SEP put spread. CRWD. I guess we haven't traded this in a little bit. CRWD. Let's see that 100-point pullback. Yeah, pretty much. Okay, Fred, let's see. You want to go to SEP? Stocks trading for 425. It's on its butt. He wants to sell the 390. Well, we're going to go, we like selling the 20 delta. So we're going to sell the 370, 360, because I don't love crowd as much as you do. Volume in there is light. 192. Better than I thought. 192.
192 is correct.
Let's
You
go.
did the 70.
Phil,
Russell.
Filled in the Russell. Oh yeah, because it's just uptick to $7, up 7. Let's go. Let's go to the next slide. That's intestinal fortitude, Tony. I didn't budge.
That's right. You held out there. You were not going to let them get you for the penny.
Ben,
Even the S&P 31. Cancel crash.
ENPH. Ben from Reno, Nevada. ENPH. This has been a pig with fleas. Going to buy the OC 30.
With fleas.
I have a bunch of positions on here. They're all long. Stock's up 17 cents. What do you want to do here, Ben? You want to buy the OC 30 calls, OC 30s, okay? And you want to sell the SEP 35 calls. Okay, little diagonal. Mid price on this is 324. Take a fill, Phil. Underlying's cheap right now. Poor man's covered call. All right, I'm good. Filled. Let's go next slide. On neutral, Jeff from Miami, neutral on ET8, that's the ETH. We've had a hard time in this one, Jeff.
Yeah, we have.
I have not done well in here. This thing, it's a new high today. What's ETH doing today? Is it up? Yes, it must be.
Yeah. ETH is up 80 some odd cents. That's a 80 some odd dollars, $86. That's a 2% move to 4,000. The numbers it's seen in the past later at the end of July and the beginning of at the end of June. But this is the highs for quite some time. It's had a 4-day bender of about $500 or so.
You know, this is an underlying where I've definitely been challenged, as they would say. I just did the 2734, Jeff. I changed the strikes a little bit because I like a little bit more premium. So I did the 2734 in there. All I'll say is, so far, I haven't done very well in this underlying.
That's an understatement.
Yeah, I've had, since the first person recommended this on What's Your Assumption or Fast Market, I think I've done 4 trades in there, maybe 4 or 5. Not every one of them is a loser. So I'm trying. Nothing good yet. But filled 2734. Let's go next slide. Coin 1017. He wants to do the October 17th.
That's what he says.
It's a little funky, Ajit.
Yeah, why not September? Just out of curiosity. I mean, I know he's bullish in coin. Maybe he's looking to give himself some more time.
What's with the OC here?
Yeah, 70 days away. It's a little bit too long.
I think so. Let's do SEP. You want to sell the 250s. Stock's 309, and you want to do the 430. That's too far out of the money. So let's go to the expected move, which is $50. 310. Let's go to
$42 for all of September, but close enough. Yes.
Yeah, let's go to 360, 370, and sell. Yeah, the 250 put. We collect just under $6. Hopefully this doesn't mess up all my other strikes I have in here. I don't think it does. Oh,
you'll be able to handle it, big guy.
No, I'm just thinking, does it mess up my other strikes?
Oh, you'll be able to handle it. You'll know it's synthetically there. Don't act new. 6,400 size on the mini S&Ps. Again.
Ooh, good fill in here, at least for the time being. 605 on the Jade Lizard and coin, Ajit. Sold the 250s, sold the 250 puts and the 360, 370 call spread. Sold.
Right. Now, you didn't collect $10.
No, I still have risk to the upside, but I'll take that risk.
Right.
It's a long delta trade. Let's go to the next slide. Sam from Pensacola, Florida says, I'm buying Starbucks here. Okay, Sam. He's short the 85 puts. So the other day I went into a Starbucks because I was out visiting a friend somewhere in suburbs. And no, we were playing golf. And
hopefully it was the western suburbs and not the northern suburbs, because I would expect you to come to Casa Batista.
was the western suburbs. And
okay.
Me and a friend, we were playing golf. And so on the way there, I was early. So I stopped at a Starbucks just outside the city.
Mm-hmm.
It was literally a dump. It was gross. And I was in there saying, you know what? Like, our coffee shop is so cute, nice, it's pretty. This place was a dump, and it was packed.
You know what? The franchise, I'm going to say it wasn't a dump. I'm just going to say it was packed, and you didn't get the proper service that you wanted because you think you're special.
It was a dump.
It can't be a dump.
It was a dump.
They don't have dumps. They all look the same. They're like McDonald's.
I know. It's a dump. 85 puts. I have no position on Starbucks.
When you have an opinion about an area, political, or anything, food, or anything else like that, man, you die on a mountain, man. You die on it. You got to be like water. Like Bruce Lee said, Sadnov, you got to be like water. You got to be able to fit into containers. You got to be able to mold yourself. You got to be able to be fluid.
118 filled on the 85 puts in September. 118. Let's go to the next slide.
Oh, but even though the place is a dump, you're going to get long delta? Oh, because this person wanted you to be neutral?
Well, he knows as much as I know, right? Andrew from Puerto Rico. RBLX. After that post-earnings fade, I'm thinking that we'll trade in a wide range for a while. Looking to sell a 1 standard deviation strangle in September. I think we're already in those, but let's see. We are. What the hell do we have in here? Let's see what we got. 1 standard deviation strangle for September. That would be I guess the 110, 160. It's kind of in between. I don't know. 110, 160, I guess. And I'm gonna add some contracts to this one because I got a little work to do in RBLX.
Yeah.
Yeah, I'm okay with this trade. I don't know where I'm going to get filled because RBLX takes a little work. You got to do like homework in here.
Sadnov, Tesla up 11, catching a little bit of a bid here.
Why?
More aggressive buyers and sellers. What do you think about that?
RBLX filled. Yeah, I'm looking at my screen. PLTR's up. Apple's up another $2.
Yeah. You got Apple up 14, Tesla up 11, Netflix up 10, Google up 4 or so. On the downside, you don't have much. I mean, TTD and Twilio. I guess Twilio down 20 and Carvana down 12.
Twilio down 20? That sounds like a lot for that stock.
It is. It was $120 stock. It's down $20 now.
All right. Well, I think that's it. That's 10. I think we did every one.
Did you? And you did RBLX. Yes. Wow, 10 for 10, Sosnoff. I mean,
I don't know.
Going into a end, I mean, you're amazing.
I don't think so. And I'm really not happy about this tape action today. I thought they would be a little bit lower by now. It doesn't look like it. And bonds, by the way, are piggy.
Yeah, you got crypto a little bit lower, though. Crypto's catching a small little rally here, but you got the bonds under 115, 114.31, Sadnov, traded down to 28 just a minute ago. Surprisingly, at least from the emails I'm getting, gold up $35. A lot of people talking about the macro news not being good for gold. I guess it's okay right now, or it's giving you the opportunity of a lifetime.
A lot of people saying the macro news is not too good.
Well, I'm getting emails, you know.
But it's up $40. So stop paying attention to the macro news.
I hear you.
All right, man. That's good. 10 out of 10.
Let's go to our market measures then. You want to?
Sure.
We'll go to our market measures. Immediately following that, we're going to go to your phone calls at the bottom of the hour around 9:30 at 855-238-279 or 855-BE-TASTY. It's a number that you always call. We'll have that number up here in about 25 minutes or so you can call in. But get ready. We'll be back in 90 seconds. It's Tasty Live. Market measure next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies.
So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation.
If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. From Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this market measure. But before we do, let's take a quick look at the market. Even the S&P is up just about 40 handles, Sadnov, right off of their highs. NASDAQ up 160 right off of their highs. And the Russell up 13 right off of their highs. Dow up 270, just a skosh off of their highs. Volatility in by 52 cents. 1720 just traded down to 1710. And the bonds down 18 ticks. Sadnov, some of the leaders and movers in the clubhouse. TTD down $33. Really hasn't moved after opening. It's had a $2 range. It's trading near the lows of the day. Twilio down 22, trading near the lows of the day. Also on the upside, more of the usual suspects. Sadnov, well, you got APP up 17, but Netflix up 15. Tesla up 8 now after being up 11 just a moment ago. You can see it trade up to 333, about $2.50 higher than where it is right now. Hood up $5. PLTR up almost $5. Google up $4 and change. Markets, all the markets are up around the same 0.75 of a percentage point or so.
Yeah, we got them right where we want them, Bet.
Ilya is saved by a Friday, Sadnov. He's saved by a Friday. He doesn't have to face it.
Yep, we got them right where we want them. Right up to 64.10, right where they fell from last time. Come and get them, boys. I should have waited for 6,400.
You know, I forgot that you hate Starbucks because you're in competition with them.
Of course.
Right. I forgot. I stand corrected.
I also
what a dump.
It's such a dump. It's such a dump. And it really is. I'm not just saying it. It really is a dump. It's like
you really have a view of things sometimes.
I mean, Starbucks has become literally McDonald's.
Yeah, I mean, I could see that that analogy. Yeah, okay, yeah, definitely. Yeah, okay, I see the analogy.
Yep. All right, let's.
Doesn't make it a bad thing.
Oh, we got a bunch of stuff going on. We got to just tell you about first. It's 9/11 in the morning. We got a show this weekend. Mike, Nick, and Katie. The kids are like a little old to be kids, but they're kids.
The kids are getting married and grown. I mean, come on.
These three can't get married. They're not getting married.
Yeah, what are you talking about? We got Mikey's all locked up now. I mean, I get it. The little baby bat over there, you know, he's a work in progress. But Katie's getting married. I mean, this is it, man. Off the market.
He's all locked up. He's all boxed off. Okay.
Mikey is whipped. He's not boxed up yet. He's whipped. He's whipped. My son will never be whipped. My son would rather cry in the fetal position before he gets whipped by a woman.
I don't know. I got to think about this.
He's got a lot of his mom in him. I'm not gonna lie. He didn't get the dad gene. I'm gonna say it that way. He's a fallen lover.
All right. Well, I would say, as somebody who knew both his mom and you, I'm glad he got some of his mom in him.
Probably a good thing. I could see that. I could see that analogy too.
For sure.
Too.
Yeah. All right. Anyway, so Mike, Nick, and Katie will be at the Crocodile in. Love saying that. The Crocodile in Seattle Sunday night. Doors open at 5. Show starts at 6. It's about 2 hours long, and you get to ask questions and talk to those guys. And they got it's a tight show. You're gonna love it. If you're out in the Seattle area, please stop by. It's free, but you got to sign up at tastylive.com/events so they can set up correctly. tastylive.com/events. If you are not going to that show Sunday night, tune in to Tasty Live. We'll be doing our show at 4:55, our first call, myself with Vecchio and Ilya. And then a week from today, right now, at 9:15, the Bat and I will be making probably our first trade 1 week from today. Show starts at 9. We make the first trade around 9:15. So about a minute and a half from now, a week from today, we'll make our first trade. And we're going to see what happens. We'll be at Talia Hall on Friday, August 15th. Doors open at 8 in the morning. It is just on the south side of Chicago. It's an area called Pilsen. It's kind of a funky neighborhood with lots of great restaurants and just a little bit outside of the downtown area of Chicago. But it's an amazing venue. It's really cool. So we'll see you there. Incredible shows they have at that place. Looking forward to our Talia Hall experience. So we'll see all you guys on a week from today. Also, on Thursday, if you're in Chicago, you want to stop by the office, we have a little open house. It's only for an hour from 12 to 1, so we don't scare the children on the trade desk. But if you want to stop on by, kick the tires, check out the studios, you're more than welcome. You just got to sign up first, send an email to support@tastylive.com and support@tastylive.com, and that's cool. Everybody will be here. Myself, Tony, Liz, Jenny, the whole rest of the gang. Everybody will be here. So if you want to come on by, stop by, and the studios and see. We're real. We're not filming from Tony's mom's basement. We are a legit network. So happy to show you everything. That's it. What else you got, Pat?
That's it, my friend. That's it.
Before we get to the next segment, as a little public service announcement. In 15 minutes, we're going to take your phone calls. 855-238-2789. Yesterday, we ran out of time. We had a lot of people on hold. So if you missed it yesterday, please call in today. We have a half hour from 9:30 to 10 Central Time to just answer anything. Nothing's off limits. Nothing off limits, honey. So let's do it. All right. I'm Tom. He's Tony. Let's go. This is a really good piece written by our research team. It's called Duration Bias in Price Range Forecasts. Tony, do you think the shorter you go or the longer you go, your forecast will be more accurate?
The longer you go or the shorter you go, I'm going to say shorter.
Yes, of course. The only thing it really can be is in a shorter period of time, all our numbers are always going to be more accurate. If you go out longer, there's a lot more stuff that can happen. But how big is the difference between long and short term? Like, how easy is it to predict something that's a year out versus something that's a month out? Let's go to the first slide. Expected price range can give investors an idea of where assets price will most likely end up after a certain period of time, based on the sentiment of the market. Expected range, or implied volatility, can be calculated over any time frame, but estimates may capture future moves better over certain time frames compared to others. So we're going to test how well the VIX estimate of expected range forecast price movements over different time periods. Like Tony just said, shorter is going to be more accurate. Let's go to the next slide. So we looked at 25 years worth of data for this study. 25 years. We used the IVX estimate for the expected range given by range equals SPY price plus or minus SPY price times VIX times the calendar days plus 365. If you can figure that out, Godspeed. We calculated the rolling expected range for the SPY over the following timeframes: 10 days, 30 days, 60 days, 100 days, 180, 240, and 365 days. And we determined how often the price of a SPY remained within its expected range by the end of a given time frame.
Okay,
you want to take a rough guess? 10, 30, 60 days. How often do you think the SPY stayed within its range, Tony? We're not holding you to this.
I know. I mean, 30 days.
No. How often No, percentage.
I think that's going to have the most occurrences.
No. Percentage. We're looking for a percentage, sir. A number with a percentage next to it.
For all of these, I have no idea. But obviously, the further out you go, it's probably going to be closer to a 2 standard deviation.
All right, let's go to the first slide. I mean, the next slide. Here you go. So the expected range estimate captured the overwhelming majority of future price movements for forecasts between 10 and 100 days. Remembering that the VIX is derived from 30-day options and annualized. We always use 30-day for everything. So 10 days, 81.5%. 30 days, 83.6%. 60 days, 83.8%. 100 days, 83.4%. Now you know kind of why we stay in that 45-day range, because our numbers are pretty damn good. Between 83.6 and 83.8, that's pretty good. When you get out over 100 days, it drops back to 81, 240 days, 75, and 365 days, 67%. Now, to be fair, those numbers are still pretty damn good.
Those numbers are great, and I would have thought they would have been a little bit lower. But when you think about it, the pricing model, it's going to be wrapped around a standard deviation, which is at 68%. So I should have thought about it a lot better. I underestimated how good it is.
So this is why we say the markets, when you trade in efficient markets, this is why they're so damn good.
Yeah, it's perfectly priced. So what are you going to do about it? Meaning, what strategy are you going to use? Yep.
Yeah, they're perfectly priced. So as you can see here, for everything we do, we're at about that 83%, 84% range, 83% range. Pretty good.
Yeah.
Let's go next slide. So the estimates captured fewer occurrences for longer term forecasts. So observing that the market, of course, because you have a lot more occurrences that are 10 days than you have that are 365 days. Observing that the market's annual outlook was only accurate 67% of the time. And you can see here, we put this up here so you can we plotted it. So it looks kind of cool. All right, let's go to the next slide. Same numbers we just showed you. John, next slide. Of the time frames tested, the IVX, which is the VIX style implied volatility approximation for the annual expected range, captured the smallest proportion of future price moves. 84% of the moves outside of the annual expected range reached the upper end of the upper bound of the range. I'm sorry. So this is crazy to me that so 83 to 84% of the time that the prediction was right. But of the ones that broke, of that 16% or 17% that broke outside, 84% of those were to the upper bound, meaning we've been in a bull market. So everything's been to the upside.
Yep.
During those upside breaches, this price of the SPY ended the year about 6.2% higher than the upper estimate. So when it broke through the upside, we continued to go a lot higher. There's a couple rules of thumb on this page. One, whenever you're asked a question about anything in math, if anybody ever asked you about any average ever, teach your kids this because they'll never forget this. Always say 84%.
That's crazy. It's true too.
It's the craziest thing I've learned about statistics. When in doubt, if you're looking at a multiple choice test and one of the answers is 84, just take it. So this
run with it.
This brings me back to a crazy story. When I got out of college, I was taking I got a job on Wall Street and with Drexel Burnham. And the first thing they did for all the new recruits, they had like maybe 25 or 30 of us that they hired right out of school. They put us in a room and we had to take all the standardized tests for Series 7, all the tests that you could work at a brokerage firm. One of the tests was the futures was the futures test. It was called a Series 3. And they had somebody come in and help us with, all these. None of us had ever knew what a future was. And so they said, and I remember this like it was yesterday, because this is like 1980. And they go, if you ever see a multiple choice question and there's an 84 on there, just pick it. I never understood for the next.
And you never understood it. You never forgot it.
Never forgot it because it's the only time. Because one of the first question was
the only one you got correct on the test, right?
No, I got everything correct on the test. But one of the questions I saw, said something like a lumber contract. It had something to do with lumber. And it was on a lumber contract. If such and such this, you know. And one of the answers, it was like C was 84. I go 84, done, and it was right. And so my answer forever is if you ever see 84 as a choice, just say 84. If somebody says pick a number between 1 and 100, if you don't say 33, then say 84.
Why? What's 33?
If you ask people to pick a number between 1 and 100, like a crazy statistic that most people pick either 33 or 37.
Really?
Yes, it's a crazy thing. So like when you go and you see these like, you know, like your girl, Teresa Caputo, right? She says, I'm thinking
my girl, like we have an intimate relationship. Sure, go ahead. We're family members or something like that. Sure, go ahead.
You and your girl. So she says, hey, she's doing a speech or she's giving a show and you're in the crowd and she says, hey, she looks over at you, says, hey, little Italian boy.
Oh, now she's a little bit of Eddie Murphy, 1984 or something like that.
Exactly.
Go ahead.
Little Italian boy. You just saw Rocky. Pick a number between 0 and 100. Okay, just pick any number between 0 and 100. And in one hand she's got 33, the other hand she's got 37, and that's all she's got. And then you're gonna say, I don't know, 37. She's gonna go, and you're gonna go, how'd you do that? You read my mind.
No, I don't think so. I think you're 100% wrong, but
okay,
whatever.
I'm gonna do me a favor tonight.
I will test it out on people today.
Test it out on your son tonight. Say,
I'm
make it
gonna
easier.
test it out on my wife, my son, the construction.
Here, make it easier.
All of them.
Make it easier. Just write down 37, okay, and then tell your son to pick a number between 0 and 50, and he'll pick 37.
Okay. How about this? I'm going to put 33 in one pocket and 37 in the other pocket, so I got everything covered.
Okay. He's probably going to pick 37.
Okay.
Now getting back to this.
You know, I was born on 33rd Street.
There you go. I'm not surprised. During these upside breaches, the prices by end of the year about 6.2% higher than the upper estimate. So when they broke out to the upside, kept going to the upside. Here's the takeaways. The expected range estimates give investors an idea of where an asset's price is most likely to fall by the end of a given time frame. For most of the stuff we do, we're right. I mean, it's the estimates are right about 84% of the time. However, commonly used estimates usually or generally capture fewer price movements for longer-term forecasts compared to shorter-term ones, but they're still right 67% of the time, and that's before the premium that you collect. And the estimates tend to underestimate the amount of annual upside growth in the market by 6.2% on average. But remember, the last 25 years, we've pretty much been in a bull market.
Mm-hmm. That is true. So you got to figure that into the equation too. Hey, even the S&P is up 39, solid up, but all that means nothing right now because we've got Talking with Tom and Tony, 855-238-2789 or 855-BE-TASTY. Phone lines are open. The number will be below in just a minute. Give us a call. We'd love to hear from you. We need to hear from you. You lit up the phones yesterday. Hopefully you'll light them up today. 855-238-2789 or 855-BE-TASTY. There's that number right there. Call it now. Phone lines open. Back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads. One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's one macro risk that people aren't talking about enough right now?
Consumer credit. People are talking about, I feel like everyone's talking about risk these days. People are talking about like consumer credit. They're talking about like all these different sources of consumer debt is a big one. Buy now, pay later. I remember like all that consumer debt was kind of more discussed about last year. And I think those conversations are really going to start to bubble up again in the near future. Yeah.
The biggest macro risk, I think, is just the sudden volatility. So, you know, politically, anything can kind of happen day to day, and I think seeing volatility at a 16 handle is just too cheap. Like, I think volatility should be at the lower end of the range, be like 19, 20-ish, and the higher end be in the 30s. That's what at least it seems like to me. So I think people are just kind of dulled to sleep right now, especially into the summer, and you got holidays and all that stuff. So I think volatility is the macro risk that nobody is thinking about right now. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Damn! Wow. Long live the trader nerd!
Man, you're a turd!
Trade junkie!
Hey, it's fun, see? Tom and Tony in the morning!
That's right. Signing off, Tom and Tony in the morning, 855-238-2789 or 855-BE-TASTY. That's that number right there. Give us a buzz. I already see a couple of phone calls. Lighten them up. I appreciate you, Texas, Wisconsin, and Boston. Signing up, give me your infinite wisdom here on what you think the market's going to do. Up 45 on even the S&Ps without a downtick.
Well, we're back at that. We're back at that number. The number.
Got them right where we want them. Back at that number, which was past the other number that was near the other number that we were near.
Right next to that new number. The last time they got up to this number, we whacked them and how it had actually worked. But I haven't sold them yet today.
Volatility contracting, not moving to the upside at all here. I think you're getting your whole weekend given to you so far on premium decay.
Yeah, I don't like this tape action. They haven't had a single, not even a single downtick.
Right.
Nothing.
Right.
I'm very reluctant to sell them yet, Mr. Batista. I have not done anything. I'm sitting here with sitting on my hands and
with your thumb up your I know exactly what you're doing. 855-238-2789 or 855-BE-TASTY. Phone lines are open. Let's go to Andrew, Austin, Texas. Andrew, what's up?
Well, my number one moneymaker this year in this bull market has been leaning bullish on Strangles and SPY and QQQ. So maybe 2 puts for each call, or sometimes I'm just selling puts. But the one thing that could blow up my account is a rapid down move in the market, like 10-15% down in a short period of time, similar to what happened after Tariff Liberation Day earlier this year. So what I've started doing is just hedging by buying puts, so similar quantity of puts, 10 or 15% below the current market price in SPY or QQQ, about 75 or 90 days out. And I try to buy the protection whenever the VIX is around 15 or 14. I know you all don't like hedging, but what are your thoughts on this strategy?
Don't like it. I mean, I like your bullish delta. We're at all-time highs. I mean, there's no complaints there. Nobody's going to argue with you there. I think you left a lot of money on the table by buying the protection, as opposed to, instead of going 2-to-1 puts versus calls, maybe go 3-to-1 or 3-to-2 or something like that leans you with less contracts, maybe even forgoing the call. I mean, I would rather not sell the call if you're going to buy the put. Like, if you need to sell the call so that you can buy the put, or you're selling that extra put so you need to buy that extra put, I would reduce my size. That would be my
one clarification. Maybe
I would do one option with a 50 delta on the put and one call at a 10 or 15 delta, instead of 2 at a 30 delta and 1 at a 15 or 20 delta on the call.
Tony, one clarification. I'm selling like a lot of Strangles short term, so like 35 days to expiration, 21 days to expiration, and then I have a corresponding number of puts that are long dated that I'm buying as the hedge.
I feel like if buying those puts allows you to do the other things that you're doing, and net it's working, I'm okay with it. I don't like Tony, I don't like to waste money buying puts, but if it's working for you, because then it allows you to have the other positions on because it gives you peace of mind, I think it's fine.
And I agree with the caller, and I agree with Andrew, and I agree with you. But I agree with you, Tom. I would, size kills. I mean, we all know this. Andrew, you know this because you're talking about it. Tom knows it because we've been doing this for a long time. I would rather you sell one put at 50-ish delta than 2 puts at 25 deltas and have to buy the wings. That's all I'm trying to say. You might actually be able to, on a down move, sell another put and buy the wing then. I mean, it might put you in a more advantageous place on a down move of some significance. I don't know. But again, that's just my own personal opinion. I would never change what you're doing because you're doing so well with the strategy, but that's what I would say.
Thank you.
Thanks, man.
You got it. Good job out of you, Andrew. Keep it up. You want to manage my account? Steve in Wisconsin. What's up, my man?
Hey, maybe you guys can help me figure out what I did on a screw up.
Okay.
Okay, I did an iron fly this morning on SPX, and I immediately, after filled, I immediately put in the closing order for 10% profit.
Okay.
As it turns out, I don't know, I fat fingered something, but I closed out my short put. So then I'm stuck in a losing position. So it kept going away from me, and I ended up closing out the position. Okay, that's what I did. What should I have done, or could I have done?
I mean, you realized that you bought back the short put, immediately when you heard the ding, right?
Yes, exactly. I realized it was
right. So I would have turned around and reversed out, given up the 10 cents or 15 cents or the 20 cents.
We both would have done the same. Your connection got a little spotty there, Tony. Yeah, we both would have done the exact same thing. If we fat finger that, like buy that put by accident, we probably just turn around and bang it back out and take the 5 or 10 cent loss.
Yep.
Boy, you're cutting out.
Yeah. I think I don't know. I think it's your connection, but I'm not sure. But did you hear me on that? I think we take.
I heard you.
I think we take the 5. We take the 1 tick loss,
and just bang out that put again. So I have the iron fly on.
Yeah.
Oh, okay. Yeah. Okay. I've been a long time futures trader, and it's every time you get in a bad trade or you screw up on a trade, you close it, and that's what I did.
That's fine too, but it sounded like you waited. You said it kept getting away from you.
That's exactly what I did.
Yeah, one thing we've learned in this business is that every time you F it up, because we do it all the time, every time you mess up and it's your fault, the longer you wait, the worse it gets. It never, ever gets better. Like every time we screw something up, if we deal with it right away, we're just done with it. If we let it linger, it always gets worse. Like if we miss the trade and then we say, oh, it's going to come back, it always gets worse. So
even if it does get better, the one that goes against you feels a lot worse than the one that went for you.
Yeah,
like it just
exactly.
So you're saying close the thing out immediately and you go have some coffee.
I'm saying you bought back your put at $10 and you realized it. I sell it out at $9.90 immediately, and I have an iron fly on again.
All right, thanks, man.
You got it. Good luck to you. We're gonna go to Boston.
Right,
I got Gabriel in Boston.
Hey Tom, hi Tony, how you guys doing?
Great,
We're
man.
good.
How are you?
Thanks, Gabe. What's up?
Doing good. I just wanted to call in. It's more related to next week. I'm gonna be going to your guys' event on Friday in Chicago. I wanted to know because I've been to the other ones and I know this one's a little different. It's gonna be like live trading, I believe, right?
Yeah.
Mm-hmm.
Will we have time? Also, I wanted to chop it up with you guys too. Is there gonna be like a free time, like downtime to talk to you guys later, or no?
Yeah, there's a little. I don't know when you're getting. Are you going to be in town Thursday or Friday?
I'm gonna be there on like very early Friday morning.
So,
With the doors, an hour before and about an hour after.
The doors open an hour before, and so the doors open at 8. So from 8 to 9, there's an hour there, and there's also a lot of people there from Tasty, like Liz and Jenny will be there. There's a whole slew of Tasty traders that'll be there, so there'll be lots of people to talk to for an hour, and then afterwards we'll stay for an hour afterwards as well.
If you want to talk to Tom,
that's perfect. I did. I actually went, I think it was 2-3 weeks ago. I went to see Dr. Jim. You went to Cambridge?
Oh, sorry about that.
Near
Sorry.
Boston.
How was Dr. Jim?
It It was actually a good show. It was a good amount of people there too. It was pretty cool. It was nearby where I live, so
good.
It was pretty cool.
Yeah, we didn't mean to do that to Boston, but he's a Red Sox fan. You know, like we always feel guilty when we send Dr. Jim to some city, but he's a Red Sox fan, and you know we're only sending him to Detroit where he grew up, and then Tampa where he lives now. So you know. So we got all that.
And if you didn't get enough of Jim, Jim will be at our show also. So if you
that's right. You can talk to him. He'll be here Friday.
Yeah.
Awesome. That's awesome, guys. I'd love to like pick your brains a little bit, like for a little bit.
Sure.
Well, to answer your question directly, about an hour before, about an hour after, we'll take all your questions right there in the audience. We get down in there and into the trenches and have a good time. And a lot of people benefit from a lot of the questions, if you don't have a question, that other people ask. I mean, it's an aha moment. I think it's a lot of fun.
Agreed.
That's awesome, man. I appreciate that. And also, I know Tom's like a food connoisseur, and he does like his little food reviews. So I'm looking forward to getting some places to eat in Chicago.
Well, where you guys are going to be right there, one of our favorite Mexican restaurants, Five Rabanitos, is right around the corner. But there's also lots of great places. Sure, we'll give them to you. No problem.
Thank you guys so much. I hope you guys have a great weekend.
You too.
You got it, man. Good luck to you out there. Ajit, Chicago. What's up, Ajit?
Tony, Thomas, you both there?
We're here. We're here, brother. What's up?
All right, guys. It's only a week away. Actually, less than a week away for the in-office event. We're finally come down to it. Just a week away.
That's correct.
Oh, yes. But don't worry, Thomas. I see Tony's guns there. He'll be your bodyguard. Don't worry about it.
No, I'm not worried.
Those are my mother's meatballs.
Okay, I need the mic for just a moment. I have to address Tasty Nation. It's very, very important. So, Tom, I see you were licking your wounds this morning on the TTD short strangle. I have to apologize to Thomas Delano Sosnoff because it was me who actually gave him that trade idea, post the fast markets a couple of weeks back, and it's not good.
Yep.
So
You took me down. Bring your checkbook next Thursday.
I was supposed to be bringing breakfast for the Friday event. I was going to bring Stan's Donuts, next to Northwestern Memorial Hospital downtown.
Oh, yeah. Don't worry. We got donuts. Don't worry about that. We got the donuts covered.
You got donuts and coffee for you. Don't worry about it.
Not a problem. All right, let's get a little serious just for a second here. Just real quick. You guys did a CrowdStrike trade for stock markets here. You guys did a short put spread for a September expiration. Now, here's the thing. The credit that you took in for that versus if you did a next week August expiration, which is next week, short strangle at, I would say, the 16 delta, you get a little bit more. Now, look, I get you guys are going very fast with those trades. There's no doubt about that. But typically, I think this is good for maybe the audience to hear you guys' thoughts on this. Now, again, they're two completely different trade ideas, a short strangle versus a short put spread. When you would lean more towards one or the other, and I think it leans a little bit also into the study you guys just did as well, because you have 1 week expiration and including the weekend time decay here, and then versus about 1 month or 5 weeks or so. Two different strategies, but getting a lot more premium just for 1 week out.
That's a pretty fair. I mean, to be fair, you're 100% right. We try to go through these and we don't really look at all the other options. When somebody says they want to do something, let's say 45 days out, we don't really look at the other options, the shorter term options. But if we were trading normally on our own, we might have looked at that.
Yeah, because the thing is, I did yesterday that. I got like a little over $5 for that. And I saw it this morning, and with you guys at Fast Market, I was like, whoa, I was like, I know you guys do it really fast. So
Yeah,
totally
we didn't really look. Yeah, that's on us.
Yeah, no, that's fine. But anyways, my Coinbase trade, it was supposed to going out to October expiration. Tony, you're asking me a question. I don't know how I could have answered. I wasn't even on the line.
Did I make a mistake? I usually make one or two a day. That was probably when I made a mistake.
No, you're fine. No, you're fine. So, no, I just went out a little bit. I mean, look, that Jade Lizard, the strikes are all very, very wide, obviously. I mean, it's Coinbase. It's that pure, not pure, but as pure of a Bitcoin play as you can get next to MicroStrategy. But that's what I was really looking at in terms of just giving it a lot of wiggle room to, kind of work itself out. More bullish, obviously, longer delta, but that's why I was looking out to October. And I know it's against a little bit on the tasty mechanics 45 days out, but that was my thought process.
All right. I like it. No problem with that.
Yeah.
All right.
Cool.
Thanks, man. We'll see you. We'll see you next week. We got to jump to get to more calls.
All right. Take care, guys.
Thanks.
Appreciate it, my man. We're going to go to Andrew in Baltimore. Andrew in Baltimore, what's up?
Hey, guys. Thanks for taking my call this morning. I have recently been using my strategy has been using the high IVR futures products and selling iron condors on them, and I've had relative success doing this over this year. But recently I got into an iron condor in lean cattle and have been getting burned on the upside. So from the world's worst futures trader, I was curious just what your perspective was on where cattle might be going and what you think about how you would trade it.
I mean, that has been the cattle futures have gone. They were up like 10 cents this week, weren't they? It was a crazy move.
Yeah.
I mean, they're down today, which should be helping you a little bit. Have you rolled the put side up at all?
I have. I've been rolling. I've been taking on extra put spreads on the short side because it just seems like it's going up relentlessly.
Yeah.
And so I currently have a call around 222.
Yeah.
And wondering if I should roll it out or get rid of it.
Are you in September or October?
Yeah.
September.
The 54. I think October.
October.
I mean, with the IV rank at 100 and you're short. Do you have an iron condor on or a strangle?
Right now, I've rolled it a number of times, and I have essentially a straddle. I've sold a put and a call at 222.
Okay, so you're short the 222 straddle.
Yep,
that's right.
Yeah, I mean, personally, because the IV rank's 100, I stay in the position, but not that position. So today you have a nice opportunity because with the underlying down 370, which is a pretty big move for that, like almost whatever 10, decent size move. What I would do is recenter.
Buy back that straddle, or
I would recenter it. I would do the buy the gut, sell the wings, do it as a single trade, but I would recenter it with bearish delta because you don't want to get double whammied here if it goes back down. So I would buy the 22 straddle back, but then I would sell a wider strangle, like the 20 puts, let's just say, and I don't know, like the 25 calls and the 20 puts, just get a little wider so you're not at the money. Just I'm not looking at the exact strikes right now in October. Let's just take a quick look.
Couldn't he buy the 20? I think he showed the 222 straddle.
Well, hold on, you're in October options. Your October options.
56 days to go. Yes.
Right. Yeah. I would probably do something like maybe
I'd buy the 222 call back and sell, the 230, 229, something like that. Give me a little bit,
Yeah, I would probably go 230. I would go 230, 220. I'd buy it back and then do the 230, 220 and give yourself a chance to make back about half the money.
Yeah. Okay. Cool. Thank you. Yeah, I've been scared on it just seems to relentlessly want to continue to go up. And I want
this
I'm scared it's just going to pop another 5%.
Yeah, this move's been incredible in there. There's actually some decent, you got me to make a trade in here now because with the Ivy rank at 100 and this move has been insane, like you're saying.
Sir, this is the worst thing that could ever happen to you, because here's what's going to happen. Unfortunately, hopefully, the best case scenario, you're going to get back to even. Sosnoff is going to make money, and you will forever be aggravated that Sosnoff made money on your hardship. So
that is not even fair. If I make money, he makes money. Stop yourself.
That's how I like to be. Maybe, Tom, if you get in, they'll extend the trading hours past 1 o'clock in the afternoon Eastern time.
At the CME ain't ever doing that.
At the CME, it's never, ever going to happen. I just sold the October 220, 235 strangle. So,
sir, this is what you say, good for you, Sadnov, GFY.
You know why they closed that early, don't you? So those guys could make it, they could
miss the traffic, get home early.
So they could miss traffic, and first they could go to the bar, drink, and then still make it home and not get stopped for DWIs.
Yep.
They used to say it's because the farmers need to be done. They used to say it's because the farmers need to be done by a certain period of time, but it was always because the traders wanted to hit the bar, hit happy hour by 1:30, and then make it home by regular time.
Yep.
Oh man. So maybe I should become a cattle trader then.
Those guys just to save you, they're all dead now.
Yeah.
There are no living cattle traders left anymore.
Mm-hmm.
Oh no. Well, thanks, guys. I really appreciate the perspective. I'm going to take that trade or the opposite, depending on how I feel about Tom's.
All right.
Tom's
I'm in now.
Thank you. Appreciate it, man.
All right. Well, thank you.
Thanks.
Thank you, sir. Sadnov, even the S&P is up 36, just off of their highs for the first time here today by about 12 handles. NASDAQ up 165. Russell up 7, and the Dow up 230. Those two are the weakest of the group. The NASDAQ's the strongest of the group.
I just want to say one thing, Tony, before you wrap up. That cattle strangle, because we don't do cattle trades very often. No. The $7.50 for the premium in there, because Ivy ranks 100, is
it's like almost $3,000, right?
Yeah, it's almost $3,000, and the buying power reduction's only 2,100, which I find to be very interesting, risk reward wise. Risking 2,100 to make 2,900, or half that, whatever. Also,
now remember that's span margining. It's subject to change the closer you get. Like the gentleman's trade is going to use a lot more buying power than the one that you just put on.
I understand that. I'm just saying.
I know you understand it, but the audience might not understand it, and they'll allocate $3,000 to this trade, and then all of a sudden their span margin goes to $6,000 in a day or two.
Right, but the other thing I want to mention about this trade is that these markets are one tick wide.
Yeah, very, very efficient.
Which is way better than I thought they would be.
Yep. Totally there.
Okay, sorry.
Okay, my friend, volatility taking a little bit of an uptick here by about 10 cents. We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. A peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
Very. You made my weekend, man.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Friday edition of the Liz and Jenny Show. My name is Liz Dierking, that beautiful brunette. Across from me is Miss Jenny Andrews. What are we doing in the studio, you ask?
What are we doing in the studio?
With Baby Shark. Can I call him Baby Shark?
You know what? I prefer, because I've been calling him Sahil all morning, but Sahil just makes me think of, do you remember those toys? Oh, Little Pet Shop. Like the Littlest Pet Shop.
Is there a person named Sahil in the
Yes.
Little Pet Shop? Oh, I did not have those toys.
Yeah.
My kids did not have those toys.
My kids Lily had the toys, something Pet Shop. And one of the main characters was Sahil.
So we should rename them that toy, Baby Shark.
Baby Shark. Baby Shark. So let's just call him Baby Shark. We're meeting again with Baby Shark.
So people should know we call him Baby Shark because one of our dear friends, Shark, is his dad.
Shark Jive.
Shark Jive, yeah.
Shark Jive's his dad. And so his dad's amazing. Shark Jive, if you're watching, we love you. Where we're like, we gotta get to the airport. We gotta catch this flight.
And he drove us.
And he drove us. He drove us. And this was one of the first, this was like 15 years ago, and this was one of the first self-driving cars, kind of.
Well, he could have put it in self-driving mode.
It had the feature?
It had the feature, but he was actually behind the wheel.
He was behind the wheel, but he was like, girls, if I press this button, it'll drive itself. We're like, let's just get to the airport.
We did drive us to the airport. We've had plenty of fun. One of my favorite dinners was when we were in New York with
Joe
Mama, Shark Jive at the Italian place, and we had Jessica with us. I don't think I've ever laughed so hard in my entire life. That was so fun.
Poor Jessica. She didn't know what she got herself into. And why was Jessica on the road? Because normally she's not on the road.
Brittany needed off for something.
Oh. And she drew the short straw.
She drew the short straw. That's so true.
Oh my gosh. Yeah. Speaking of people, guess who I ran into yesterday?
Ooh.
You're never gonna believe it. I'm gonna give you 3 guesses.
Can I have like more sugar? Give me like a little bit of context. Like, do we know them from like this world? Do we know them from like our world, college world?
We know him from this world. We haven't seen him in a while. He's very handsome. We named a trade after him.
Oh, I know. Because there's only one person that we named a trade after, and I'm not even going to say it, but I'm going to go like this.
Jajun.
You saw Jajun yesterday?
I saw Jajun yesterday.
Oh, I miss Jajun.
I thought you would have gotten it right away when I said he's very handsome.
Oh, I would have. I had no idea. But we've known each other for so long, I didn't know if it was like your neighbor from across the street.
No. Jajun, we saw Jajun. I saw Jajun yesterday. And honestly, Liz, let's jump to the platform because I'm going to show you a couple of things that he's been doing lately because he is, he loves to backtest, he loves studies, he loves research. And so he was showing me, and I hope I don't mess this up, Jajun, if you're watching.
Jajun, call me if she messes it up, and I'll slap her on the wrist.
I'm going to go to
SPX. He's the OG Jajun, where we literally took a study that he did and saw what we wanted to see and created our own trade out of it.
So I'm changing the time frame here to minutes.
Oh.
2 minutes.
Jajun told you to do this?
This is what he kind of looks for. Okay. So this is minutes. Here's the day, right? And he says you'll notice, you might notice some big movement early on, and then he waits for things to settle.
This is the minute chart?
Yeah, I have it in the minute chart. Can you see it?
Yes. I wouldn't have known that was a minute chart unless you...
Well, I just changed it.
Okay.
See, up on top, 1 minute, 1 day.
Got it.
Okay, so then kind of waits for a, see where I moved the crosshairs? For something to settle down, like a little slowdown from the movement.
Oh.
So he's like watching, he's not just watching the time, he's actually watching the minutes and watching for things to kind of settle down.
Okay.
And then that's when he jumps in and just sells a put spread.
It's just a put spread?
Yes, that's what he's doing lately.
So are they wrapped around the at the money put spread, or is it an out of the money put spread? Because he's collecting, I think, a little bit more.
So if Jajun did it today, where here we're getting this little bit of this like chop, and he jumped in and sold a put spread.
No, but I would argue it settled down. I think it settled down at that big peak over there. I think it settled down. Can you move a little bit over?
To the left or right?
To my left? Yeah, I think it settled down a little bit to the right, a little to the right, to the right, to the right. Like right around there, I would have been like, okay, that's like its range, and that's it, because it went from 63.55 all the way up, and then it's been in that choppy range. So I would have done it at around about 9 o'clock, like his studies always say.
So anyway, waits till a little bit like, staying in a range, and then jumps in and sells a put spread. That's what he's been doing lately.
I like it.
So let's say it settles down.
So like I said, if it settled down there, he's out of his put spread.
Yeah, for sure. And then he sells the put spread, and it's got to be close. And let's say he goes one strike out of the money, and he's been doing them wide. Like this is $50
one strike out
wide.
of the money. I'm only asking because our Jajun trade that we created was a $5 wide wrapped around the at the monies, where we're trying to take very, very little out of. So is he bringing it up? Is he?
He's not. He was not.
There's a lot of risk in this. That's what I'm saying. You've got $2,100 in risk in this. It's a lot. It's a lot of risk. It's not a quick.
I think his was greater. So what am I here? $25 wide.
Yeah.
And he's going like $50 wide, $40 wide. He's doing like this. He's doing this.
So yes, now this goes back to me in my mind with Jacob, because then if you have one loss, if it decides to go against you, this loss is going to take you 4 years to gain back the.
But he was not. He was not. Are like wrapped around the at the money at 10. I think he said.
No, we do that.
We
We do that because we don't have I can't risk $5,000 in this account.
Right. No. And the iron fly from Jacob's study has been great, and you've been doing that, and that's been great. And and they both make sense to me. They both make sense. Like the put spreads have performed well on Jacob's studies. The iron fly has performed well on Jacob's studies. But I'm not saying like this is the end all be all. I'm just telling you that this is what Jajun has been doing.
Okay. Thank you, Jajun.
Watching the minutes, and watching for a little bit of
something to settle down. And I kind of agree with that. And it's funny because Jajun is not Jacob and Jacob is not Jajun, although they're both very intelligent. And both of them said, like Jacob just said 9 o'clock, because if you look at that, it settles down around 9. You just need a little time for something to happen.
And I guess if you don't see it settling down, don't do the trade.
Don't do the trade.
Yeah. But that's what he is doing. He's watching the chart, watching the minutes, and watching for a little bit of a settle down.
I wish we could put this in because nothing made me happier. And I'm talking directly to you, Jajun. I hope you're watching the show. It was the greatest joy of my life. Every time we'd put those on, only when we'd scream, Jajun! And
I know.
we made more money on more trades than I can count. But every time a Jajun hit, it was very exciting.
I know. But like by the time we come in now,
it's too late.
It's almost too late.
I know, because it is not. I think it's the 9, especially if you're looking for that little pop. I don't know.
I mean, he said it could be as late as 9:30, 10, but this is what he's watching. He is watching the
minute chart,
the movement in the morning, and waiting for things to slow down. He is. He is. So that is now. I will change this back to my
Booze
daily.
Up 37, cancel, crash, Jenny Andrews.
Let me go take a look. Hang on.
It's crazy.
And let me change this to.
Oh, let's take a look at all the earnings plays from yesterday, too. I mean, we didn't do them, but I want to hear how yours played out because you were letting them roll because you were living in the city.
Well, this really got me mad because TTWO was down $8. It was up. I saw it trade as high as $2.40.
$2.40?
Yes. Yesterday and after hours.
Oh, after hours. But you and I both know we've seen it so many times. Same thing happened with DraftKings. DraftKings was like $5 and it opens down $1.
But look today, high $2.39 today. This is today. Look at that bar.
Yeah, that's big.
It's painful. Only because I'm long it, and I was really happy at 240, not so happy at 218.
Yeah, if you're long it, you don't want it down.
You don't want this to happen. You don't like the look of that.
Nope.
Because you know where I was at 8:30 when the bell rang?
Getting your hair blown out.
At the dry bar.
I knew it.
I loved it. I wish I had one in the suburbs.
They don't. Oh, even if they did have one in the suburbs, I don't think they'd open as early because there are places for blowouts, but they open at like 9:30, 10.
Oh, the lady who does my hair is like, any interest in, doing a blowout at like 6, 7 a.m.? And they're like, no. The woman who does my hair, she's not going to wake up
at 6 a.m.?
No, the answer was no.
Oh, I thought she asked. I asked the woman. Because I get mine done at a lady's house too, and she's like, "Oh no."
Oh no, not that early.
Oh no.
But I don't think the dry bar was packed.
So when we like living in the city, you'll notice a lot of the professional women, and I love this for them, will get their hair blown out, and they're on the schedule. So I get it blown out 2 or 3 times a week, and then you're just done.
Oh yeah, everyone knew everyone there.
Yeah.
It was like, hey Susie, hey Sally, hey.
Yeah.
They all went in for
They're all
their blow
Susies and Sallys.
And it was nice. And I think Lily is seeing how easy life, I don't want to say easy, but you know how Monday or Tuesday or Wednesday, I told Matthew at the SIBO, like, I think life expectancy decreases living in the city because you can get A, hit by a car, B, run over by a bike, C, not enough sleep at night because it's so noisy.
Are you taking a turn?
Now life's becoming pretty easy, being able to walk to the dry bar.
That's what I said. I said it's easier because you walk more, you do stuff like that. Now, the Canadian wildfires didn't help your cause of living in the city because you were like...
all week, yeah.
All week.
Red eyes.
Yeah.
But the Canadian wildfires are affecting the suburbs too.
No, I know, but I mean, you probably thought it was smog from like the bus that was going by you.
So it has been nice though.
Yeah.
Okay, so that's TTWO. That was one. XYZ, another one. XYZ, another one that was up. Another. I mean, the bars all look the same. These earnings.
So what? How much was it up?
It was up. Okay, 82 is the high here. So you're looking at $7 higher. But last night I saw it. It was $8 above where it closed.
And they did not hit their earnings. So that's what I was going to say is I thought it was fascinating. XYZ was the one who their earnings were worse than expected, and the stock skyrocketed. On what? But now it's come right back down to earth. So now it's down.
And
do we have any red in the money signs? I know.
Yes, we do.
Today is a day where we let things go until they.
Wait, but we did have RKLB, Rocket Lab.
Oh, we were bearish.
Another. Is it insane too that all these earnings look the same, up and then down? Yeah, look at Rocket Lab. Rocket Lab got as high as.
Well, that's good because we were bearish Rocket Lab.
Almost 50. Got as high as almost 50.
Well, then this shouldn't be, our call spread should not be affected by this because it was a debit call spread.
Well, okay, so we put in, Rocket Lab, I don't know if you remember this, we put in this butterfly to try to pick up some profits to the upside.
Yeah.
I mean.
We did.
I mean, it made a little bit of money.
Made something.
It made a little bit of money.
Yeah, you got to close that. What did we pay for it? It doesn't matter. I mean, I'm just doing the math in my head.
We paid 40 cents for it.
Ooh, you got out for 78. Do it.
I mean, it covered some of the loss on the other spread.
Yeah, it's something.
Ideally, I'd like it higher. I'd like Rocket Lab at 47, and then this could be worth $3. But do we take our chances and leave it?
No. No. Let's get out of both of these. It didn't work. We had a dollar-wide call spread in there. That was from what's your assumption?
So I guess, I don't even need to do all of this. I don't need to, I could just sell at the 44 for $1.
Yeah, sure. Sell the 44 for $1.
Forget it. Let me cancel this, right?
Sure.
Leave those 2 short 47 calls. Or really just close the 47.
Just close the 44. I don't think it's getting to 47. If it does, things have gone. I mean, if Rocket
Well, it was 50 this morning.
Yeah, but it's shaken out. In the words of Jajun, I'm going to quote him now. The prices have kind of shaken out a bit.
Yeah, I guess I'll close one spread, right? Close one balanced spread for 77 cents.
Sure. You leave that work for a minute. Close the call spread too. Just because exercise assignment.
Oh. This is lovely. What is it? $7 wide for 701.
No.
Yeah.
Oh.
$7 wide for 701.
Okay.
All right. That was fun.
Okay.
Oh, man. Oh, man.
At least it's not the Cubs game Friday when you're like, let's see if we have any red in the money signs. And you would.
Oh, that was me.
I know. So Rivian and Rocket Lab, we're trying to close Rocket Lab. Rivian, we had it in for earnings. Let's close.
Rivian was, we bought that 11 call on earnings, and we replaced our deep in the money put with that 11 call. I actually saw a nice looking Rivian today on my way.
I love the Rivians.
Well, and I saw a new one, like a smaller version. Really? Not a truck. I actually saw like
a sedan?
Not a sedan. I would say more like an SUV, but it wasn't the truck.
I saw the Rivian SUVs.
Yeah, it was nice.
That's the one I want. I don't want the pickup truck.
Yeah, when I saw the little SUV, I thought, because I think when Woody bought his, and originally they were all the pickup trucks.
Yes.
But today I saw a nice little SUV.
It still just reminds me of my mom because we'd always talk about how we wanted a Rivian after Woody got his. And then one day I took her to breakfast and we pulled in next to this massive pickup truck with wheels that were like huge and stickers all over it. And the truck was a Raptor. And my mom's like, is that the truck you want? I was like, no.
I remember. But speaking of, I saw Woody yesterday.
Oh, you did?
Yeah.
Oh, is he still loving his Rivian?
You know what? I should have asked him. I didn't ask him.
I love Woody too.
He seems happy. He's busy. He's very busy. He was making flower boxes.
Yeah, that's awesome.
Yeah.
Woody's living life. I love it.
He's a little woodworker. Woody the woodworker.
Which is hilarious because that's his name. Like, how can he not go into it?
Yeah.
How can he not go into it?
No kidding. Okay, so we have this 11 call in Rivian. I'm going to close that call, and I'm going to...
And never look back.
I'm going to move out to... to September and sell this 12.5 put for 98 cents.
Okay, and are you pushing everything through?
I will in a second. But do you see what I'm doing? Close the call and selling the 12.5 put.
I love it. We did it just for earnings. I have no problem with that.
Okay, so that's working. Everything's working. Where are all the people trading? Why tighten up these markets? I know it's Friday, but where is everyone? Still on the dead week vacation.
Everybody's on dead week vacation. The floor was dead.
How was traffic today?
Well, there was an accident. So, not so good.
Not so good.
Did we get filled in anything yet?
Not yet.
Okay.
Okay, here goes trying to. I'm going to adjust this.
So we do have, while you're adjusting, I'm just going to talk. We do have, it is a Friday. We usually have our weekly recap. We don't because Kai's on vacation, which is great, and he should be on vacation. So we are going to be taking live tweets with the hashtag LIZJNY. Hold on one second. I did not get to answer this email. I had it read to me in the car, and I didn't answer it in the car. Fabio got assigned on his Enphase Energy.
Okay, we'll take a look at that.
So I do want to take a look at that for Fabio. He is our Italian friend. So I want to take a look at that. And he asked if we got assigned, and I don't believe we did. And Fabio, the assignments are very random. So it's a wheel, and you might even have a 5 lot in there and get assigned on one if it's just a random assignment. But sometimes if it's in the money or there's a dividend, everyone will get assigned. The majority of them, not everybody, but majority of them will if it's monetarily beneficial to be assigned. So not every one is an assignment.
Okay, I'll go to Enphase Energy.
Sometimes it happens early. So sometimes and I'm not saying you're the lucky one because it's not lucky to be, we didn't get assigned.
So here, this is, if it's, I don't understand. So what we wouldn't get assigned on this.
I think he hadn't rolled his out yet because there was very little extrinsic value in it.
Okay, so if there's little extrinsic value,
if you get assigned on something, say this 35 put, let's just use ours as the example. We have the short 35 put with 42 days left. If by some odd reason, somebody, for some reason, decides that they want this, we could get hit on the wheel. We immediately get all the extrinsic value, which is 185. So that's why it's not beneficial for anybody to.
Yeah, like we wouldn't get assigned on this. But if we had it in the 7-day,
and you say you had the 35 or the 36 in the 7-day or something where it's very, 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 very little.
It's unusual, but
it's unusual, but it happens. And that's why it's not a dividend or anything of that nature, because if you're assigned early, all the extrinsic value is gifted to you. So that's why dividends, it makes sense. You have to make sure the extrinsic value is less than the amount of the dividend in the call.
So if you had, and I can't remember exactly the strike, but if you had the 35 put
in. We used to have an Enphase Energy.
Let me take a look. Enphase Energy, last 30 days.
Question. We haven't gone over it in a while.
Okay, so we rolled.
Yeah, we've rolled.
No, that's different. This is different.
So that's the set. That's
the
38-day 7
put.
Yeah.
The 38-day put in the AUG 15. The 38 put. Okay,
yeah,
so
there's very little extrinsic value if you go down.
Oh, okay, yeah. So 38 put.
If you still got that put,
it's almost no extrinsic value. So you got long stock. So if I didn't want the stock, I'd sell out my stock. And if I still wanted to be have puts in Enphase Energy, I'd sell out my stock and probably sell a new put here, or maybe the 35.
I think he understands. I think he was just asking if we got assigned as well.
We rolled ours.
Yeah, so we rolled it out in time. That's why we didn't. But thank you, Fabio. I'm sorry. I will email you back. But
we did roll it. So as far as red in the money signs, we still have this Rocket Lab, and I thought
make sure we'll get filled on that before.
And again, they're both in the money. If we don't, one will exercise, one will assign. It's not a big deal.
There's no harm, no foul. Do you know what's for lunch today?
Yeah, I saw the sign.
But what is it?
I don't remember. I didn't recognize it.
Sam said it's one of his favorite restaurants.
Really?
Yeah. I think, which leads me to believe it's going to be empanadas.
I can't. No, I don't think. I don't know. I don't even know if I could eat anything because I ate so much last night. Lily and I went to Italy. We did a cooking class, and they. Well, have you ever done a cooking class at Italy?
Not at Italy. I've done cooking classes before. We've done them at Sur La Table.
All right, I've done them at Sur La Table. This was different. I expected it to be more like Sur La Table.
We pop into. I'm not trying to stop your story. I'm trying to give a visual with your story, if that's okay. So
yeah, sure.
Let's pop into Twitter.
Oh yeah, there's my focaccia. There's my focaccia.
When you sent me this picture last night, I was like, she is terrible at making pizza. That's
my focaccia. And so anyway, cooking class. They give you walk in, they give you, now I didn't ask for this. I just signed up for the cooking class. They walk in and they give you Prosecco. And then.
Ooh, I'm listening.
And then they give you a cheese platter. And they were coming around with this cheese and meat and olive and just charcuterie platter. And I thought it would be for the table. Everyone got their own. So Lily got one, I got one. Everyone got their own charcuterie board. Everyone got their own drinks. They were starting to pour Lily Prosecco. I was like, she's not 21. Like, they didn't care. So I was like, just give her the sparkling, non-alcoholic sparkling. And then they ask you, do you want red or white? So they give you drinks and food while you're in the cooking class.
That sounds delightful.
So it's different than the other cooking.
Yes, they're serious cookers.
Yeah, you're just really cooking.
You're getting. They want you to focus, no alcohol.
Right. So it was. So there's my focaccia. It might not look so good because that was after 3 drinks.
I thought it was pizza, and I was like, oh, whoa, she burned it.
No, he said you want those bubbles.
I get it if it's focaccia.
Yeah.
I thought it was pizza. It looks great. Did you? Okay, so how was it? Did you try it? Why did you bring me any?
Because I went from my hotel to the dry bar. I was gonna bring it, but I had so many stops, and I would have been carrying this with me all morning.
You would have been fine with it. It's not heavy.
Where do you want me to put it? In my backpack?
Yes, put it in a little bag. Put it in the to-go bag.
I'm in a hotel. I didn't even have a Ziploc baggie. Anyway, it's in my hotel fridge. They still last 5 days in the fridge.
Loose in your hotel fridge?
Yeah.
Just focaccia. You just open the fridge and put a focaccia.
There's 2. Yeah. There's 2. Mine and Lily's. We each made our own. I told her we're probably gonna leave the hotel and forget them. They'll be in there.
I don't think you should eat them if you just left them in a hotel fridge without loose.
Why?
Are they wrapped?
It's in a bag.
Okay, that's why I was like, are they loose?
Why? What would happen to it if it wasn't wrapped?
I mean, you're such a germ. I was gonna say a different phobe, but like you're such a germaphobe. Like I thought you just took the focaccia and just like put it in the fridge.
But the fridge is cold. It's not like things are living in the fridge. It's too cold for.
I don't know. If I would have found out that was loose in the fridge, I never would have eaten it.
It's in a bag.
But that's fun. So
but at the end, they wanted to get rid of you. They're like, all right, here is your focaccia right out of the oven. Put it in a bag and go. And it was like so hot and steamy, it was melting the bag. It probably has melted plastic to it.
It sounds more delicious by the minute.
All right, but look, we got Jackie coming in.
Oh, what is Jackie doing? The nice thing about mid-morning out of the money sell, call, put spread is you don't need to get the direction right. You just need to wait for the SPX to slow down and chop due to declining volume, and that alone can kill premium in out of the money options.
He must have been listening to my story about Jajun, what Jajun is doing.
Must have been. But I'm telling you, a lot of people have similar concepts, right? So we talk about it, and then a lot of times people will start doing the same thing.
Yeah. Okay, and then Ajit is looking. These are names with high IVR. DocuSign. Forgot what GTLB is.
I will look it up for you real quick. You keep reading.
IoT, MDB. Is that MongoDB?
Yeah.
Snow, Target. Oh, Snow, I haven't looked at it in a while.
GTLB is GitLab. Like GIT. Is that the stretch? That's not the stretch, though.
I was talking to Liz on the phone yesterday, sitting in my hotel lobby, telling her about the ticker that runs through the hotel. And I was cracking up because they must have put this ticker in 35 years ago, and they haven't changed the symbols since.
Symbols that are still in the Dow? Because wasn't it like Pepsi?
I don't know. It was like Kraft Heinz. Is there even Kraft Heinz anymore?
What was its symbol?
Isn't it HNZ? So the tickers running through my hotel were like...
HNZ is not a symbol.
I don't know what Kraft Heinz is. And I thought it's just Kraft now, not Heinz. It's KFT. Let's see.
No?
I'm going to look. KRAF. Kraft. KHC. KHC.
KHC?
Okay, so anyone who actually trades isn't looking at anything that's running through the ticker at the Aloft Hotel on Grand Avenue. The ticker was hilarious. These were all so old. So old. Like back in the day. Like back in the day in the 90s, when you remember the big pits.
Speaking of, what's making a vengeance? Corning Glass.
Is it?
They're making Gorilla Glass for the iPhone.
I wonder if I still have my Corning Glass stock. That would be in like an old account.
Big money, no whammies.
Gotta go look for it. Gotta go look for it. But you remember back in the day, I mean, think of the pits. Like Eastman Kodak.
Gone. Xerox.
Gone.
Gone.
Kraft Heinz.
IBM is still around.
Kind of.
Hewlett Packard, still around. That was a big one. Hewlett Packard was big.
Well, and just like when I was on the river cruise, the big buildings, Montgomery Ward.
AOL. The AOL.
Yeah, AOL.
Yeah.
Right, all these big names, the big names back in the 90s, are still running across the ticker in my hotel.
The ones that are gone are your .coms. Those are gone.
Those are really gone.
Yeah. Yeah.
I don't think when was the .com? Like what year was that?
99. Right? It was after we got there.
You think
right
so?
After we got there, the .com bubble.
99. I can't even think of like what we were doing. I don't remember anything crazy going on in my pit. I didn't have any of those .coms.
Oh, I was in all the nuts. 1995 it started.
Oh.
And it ended in 2000. We were on the floor. Like the bubble burst when we were on the floor.
I wonder if this AI bubble is going to burst. I did sell puts in Circle yesterday.
Which one was the one? Let's pop in the platform. Which one had the buying power? I thought it was CoreWeave that had the good buying power. Or is it Circle?
I don't know, but I
just want to see what the buying power is. Because they're...
So I just wanted $5. Like, I just wanted $5. Oh, to open it up, wanted $5.
Yeah, this is the one we can't do. She can because she's big by big, ladies and gentlemen. This is the one we can't do.
Well...
That's why we've always done different things in Circle, because the buying power it's $5,000. It's a lot.
It's got to be...
CRWV, CoreWeave wasn't. And I'm not saying they're the same company. I'm not. They just came out about the same time. They're about the same price. And go to CRWV. Take a look at that.
CRWV, $5. Yeah. Hey, what do you think of $5?
I love it for $950.
Yeah.
I sold puts in this yesterday.
Did you?
Yes.
I think I was looking at... I just think I was looking at, 95 puts gets our break even to 90, and the IPO was 40. Okay, sure, but I'll do that.
It had a $100 pullback. It went from 190 all the way to 100.
And CRCL, I sold the 125 puts for $5 or something like that. It gets my break even to 120, and IPO was 80. And I guess, let's do it.
They're very similar in nature. They IPO'd around the same time, but we have to stick with one. If you're going to stick with an option, you can go down farther if you want to. See how far you can get. They have earnings, though, so it's your earnings trade.
Oh, you're riding this through earnings.
So, you can sell the 80 for $2. See how much capital that is.
Let's get $3 for the 85.
Sure. Now, I would like to show that brings your break even down to,
81 and a half.
Can you show that through the earnings move just to show if you close this up and then go to the earnings move, it'll show you where your break even is for this. Scroll all the way down. Look at that. Oh, no, I think you got to go to the 7-day, Jenny. You're in. There you go. That makes a little bit more sense. Yeah.
Yeah. I'll take it. 320.
It's not bad, because even if it goes its expected move down, now if it goes double its expected move, then we're just long CoreWeave at 81.
And I don't know, we probably won't want it then. We'll be like, geez.
Oh no, we're gonna hate it then.
It'll go back to its, and then one day it'll be like 20, and we're like, geez, can it even get back to its IPO price?
Okay, so can we please jump into Twitter? We have to talk about something. It's not that important. It's not that stressful, but I do want to address something.
Okay.
Let's jump into Twitter. Did you sell that put?
You still have your sunglasses on. Like around your neck.
Oh, I was like, I do not have sunglasses on.
Just noticed them.
Okay, so let's pop into Twitter real quick.
You look like you're about to go, where are you going after this? Baseball game?
Home? Why?
Well, you look real like you're in an active wear with your sunglasses on, like you're heading out somewhere right after the show.
I just didn't want to lose them. I've left them here yesterday.
Oh, you did?
Yes.
Oh.
I just left them out.
Now I get.
Okay, so Jack Tucker, good morning, ladies. I heard that you will be attending the live show in Chicago next week. I'll be there and hope to meet you and other tasty. We will not be there.
So what I will say will be, next week Thursday, and there's an art card. John, if you could pull up the art card, next week Thursday, here in our studios.
You have to sign up for it.
You have to sign up for it. You have to sign up for it, but there's going to be, viewers can come here on Thursday. You have to sign up for it. And here's the art card, open house.
Yes.
Open house, Thursday, August 14th, 12 to 1, open house here in the studios. We will be here for the open house.
So the reason we can't be at the Chicago is because
we're doing our show.
Somebody has to do the live shows. I know some of the personalities are planning on going to be there.
But we're actually doing their show.
We're actually doing our show.
And so here is at Thalia Hall. I don't know if I pronounced that correctly. August 15th, doors open at 8.
Where
and
is
it says
Thalia Hall?
I don't know, but the whole gist of this is you'll be back at work by 11. Our show ends at 11. So we are not going to be there. We are going to be here doing our show.
How many people? Well, there are people.
Okay, but here's the open house
in Chicago. I was going to say if Jack Tucker is going to be at the show, who's going to send us your?
No one's going to be on Twitter. But I will say, so it's support@tastylive.com. Support@tastylive.com. If you want to sign up to come to the open house next Thursday, 12 to 1. Support@tastylive.com to come to the open house.
Yeah, you do, and you have to receive additional info and complete a form before your visit.
Yeah,
because we don't own this building. It's not like when we were at 19 North Sangamon, where it was our building. There was security protocols. We forgot our badge the other day.
And we could barely get in.
And we had to fill out a form.
Yeah, security's tight. Security's tight. That's why you have to go to support@tastylive.com. You have to sign up. You have to be on the list. There's 3 toughest security guards you're ever going to see down there at the door. And then, so you have to be on the list or you won't be able to get in.
Be careful. They are kind of tough.
So sign up if you want to come to the open house Thursday, noon to 1.
Yeah, so we will not be at work by 11, but we will be there Thursday. Okay, let's pop back into Twitter if we can. I want to make sure we get to some of these things. Here's Jack Tucker back into 0DTE SPX after a painful day yesterday. So Jack, that happens sometimes though. You win some, you lose some, right? Collected $5,200 in premium. GTCs entered for 40%, but we'll also be watching closely. So I like it. Thank you. But you know what? He probably didn't lose his full loss because I know he was.
Well, we rallied a lot by the end of the day yesterday.
Okay, and then Maria comes. Is it possible to get that? Oh yeah, there we go. Another one.
Another one is
I got assigned shares and Enphase from the trade you had on. How do I manage this? If I had a short put at the 38 expiration August. So we did kind of go over that, Maria. You and it makes sense. We didn't because we rolled ours out in time already. But this was you and Fabio both got.
And so here's the thing. If you're signed on a put, I know the only time people talk or worry about assignment is with a dividend. That's never going to happen on a short put. A short in the money call, if there's a dividend coming, you get assigned on that short call. Now you short the stock, then you have to pay the dividend. And you don't have to physically pay. It'll just come out of your account. That will never happen on a short put. A short put, you don't have to worry about the dividend. If you get assigned, no big deal. Now you're long the stock. So what? Now you're long the stock. If you don't want it, sell your stock. Get back in with a new put. If we were assigned, I would sell up my 100 shares of stock on one put and then go sell a new put in September.
Yes.
That's it.
Yes, that's exactly what I should do. Okay, and then Gary comes in. I love this. Doing any zebra trades, I find myself using these more and more as a stock replacement than selling nearer term calls against them. So I did one yesterday in my IRA.
Let's see it.
Because my IRA, this is where I know I have to use a zebra because buying the stock is too expensive, and I put it. It's not that liquid. So
what stock?
COPX.
Global X Copper Mines. Oh, a copper trade.
Yes, it's a copper trade.
Okay.
I wanted to get into a copper trade. I wanted something that I was just going to put in my IRA and just hold.
And a zebra's going to be cheap. I know you said not super liquid, but let's take a look.
So I did the 47.45 zebra. So you sell 150 delta, buy 270 deltas. I made it a little bit cheaper. But let's go through the process as if I bought the stock first, though, just so you can see why I do these in my IRA.
Okay.
And in Robinhood, I have zebras in my IRA, and all I keep doing is ratcheting them up, and it's okay. It's a position I'm maintaining.
Sure.
Just keep ratcheting them up.
Okay, so now if I buy 100 shares of COPX, and Liz is referring to her IRA, it's going to use for 100 shares $4,620. It's not going to use.
It's not the end of the world, but it's a lot of capital.
It's not going to use $2,310. That's on margin in a margin account. In an IRA, it's going to use the full cash $4,620.
Yes.
For 100 shares of COPX.
Yes.
So if she wants to replicate 100 shares of COPX, a zebra is sell the 50 delta. I mean, you can go 46, 47.
Well,
Sell the
I
50
kind of
delta.
retrofitted it because when I was putting it in, some of the markets were wider, and I went with the more liquid. I think I went with the 47. Try 47, 45.
Okay, I will. I'll ship them 47, 45. So that's 368. Paying 368, 47, 45, and it should look like a stock replacement where.
No, like I said, I retrofit it, so it's got to move a tiny bit. I see that. You can shift it down if you want to, Johnny. Shift those down.
What you want with the Zebra is to basically have, start making money one for one on the arrow where the stock is. Here, the 44, 46, 450 is a little bit more expensive, right? For every give me, there's a gotcha, according to Dr. Jim. It's a little more expensive, but here is where the stock is, and you start making one for one.
And that's why, this is a true Zebra where you're hitting it right there. I tried to make it a little bit less, but I'm okay with it. It's up $1 today, so I made, instead of making $1, I only made, 60 cents on the dollar because I had to have it move.
And now it should pick up.
And now it'll pick back up. Yeah, so I just, this is when I use Zebras, and I do like them as stock replacements. Now, Gary is saying he likes doing these and then selling nearer term calls. So you could do this if you wanted to. But I don't, I'm an active trader, so if I'm gonna sell calls against it, I don't even mind selling calls against it in this cycle.
And for me,
I don't. I have no problem selling calls against it. Like, add a call in here. I don't have it in there right now. A lot of times with Zebras, if I'm putting them on, if I wanted 90 cents, you can sell the 50 for 60 cents.
You can sell the 50 call for 60 cents or 49 or whatever. Or if Gary's saying he sells shorter dated calls, you can
move your Zebra to the 70 day and sell it in the September.
Right, right. Then I would move the Zebra further out in time. And
I don't think I'm an active trader. I don't need to because I know that I'm going to keep moving my Zebras and keep moving them around. That's not where it's going to end. I'm hoping. I hope it doesn't sit there because that means if it sits there, that means nothing has moved.
Right.
Yeah.
So, and if people want to have a longer term game of selling shorter term calls, I don't mind throwing a Zebra out into a leap, like throwing a Zebra in January and then selling short term calls.
And sometimes that saves me from myself, meaning if it's out there, I don't need to look at it.
Yeah.
But if I want a true stock replacement, sometimes I'm not selling calls against it. Like I didn't sell calls against my copper. I didn't want to sell calls.
If I'm putting on a Zebra, I'm usually not selling calls against it. If I want I want that premium, I'll just sell I'll do like a debit spread. Yeah, I'll do some kind of spread. I'll do a call, just a call
And the
spread.
reason, look at this, it's got a negative rank. That's another reason why I looked at a Zebra instead of selling premium in it. But yeah, this is a non-liquid product. I just wanted to do something, wanted to put like a couple $100 in my IRA in copper. Okay, let's pop back into Twitter if we can. If we can, because I love this tweet. It's so cute. There we go. Here's Fabio, our Italian sensation.
Oh, good morning, Lisa. It's been a while.
That's not him.
I don't need Google. My wife knows everything. That's funny. It's been a while. We don't trade on Google. Any ideas? Okay. Yeah, let's take a look.
Let's take a look. Okay, so let's pop back into Google.
Back to the platform. Up 560 today. I like Google. I do. I like selling puts in Google. I was selling puts in Google, and I kind of took a pause as it got up here in the 200 level, and then it's up 560 today. Yeah. I'll typically watch for a pullback and then get back in with puts. I don't know.
So it's got a 21 rank. There's no earnings on the horizon. They do have a dividend. Did he say? Okay,
you could. I don't mind, honestly. The 175 puts for $1, that's probably, something I would do in Google.
It's not bad. And it's $1,700 for it. It's not. So
I don't want to do it on days up $5.
I know. I agree. We like to sell puts on into down moves.
Right.
Yeah.
Otherwise, you could do a ratio spread. But hold on. Buy one, sell two, and do a ratio spread. Did this ever go up?
Yeah.
There we go. Buy one, sell two. And here's a ratio spread for $1.79. But 42 days is a long time.
42. I agree. Well, Fabio, we're going to keep an eye on Google. We like them on down days. That is the hard part about selling puts is that it's a trickier thing to put in. You got to stick to it and chase it up, which is why I kind of do like the zebras if I'm going to be long-term bullish in something, because it's much easier to ratchet it up than it is to follow the puts up.
Now, I know I said I was going to wait until after earnings and get into DraftKings. I did sell puts in DraftKings.
Oh, it was down today, wasn't it?
Yeah, right. So they had earnings. And it didn't really, it went up, but then it came down, and now it's down today. So that was one of those I was waiting.
That's not a bad put sells today, especially with those the ones that had earnings that are down today too. Take a look at this.
I know it says 5 rank, but I was okay with the 40 put for $1.
That's not bad at all.
No. You're getting 96 cents on the 40 put using 500.
And you know what I was going to say? I know the rank is 5, and we understand the rank. It's kind of looking at things.
I get.
But if the rank were higher, or if it were down lower, the Jade Lizard is an option. I don't need to add 3 legs. I don't need to add 3 premium selling legs when the rank is a 5.
I see that. Right. I mean, I see what you're saying. There's a 70-cent put. We could do a Jade Lizard, but
a put is neutral too. But it's so far down. You're giving yourself so much room to be wrong.
Yeah, but you could. I mean,
I'd rather bring it up to with and this is going to be my new thing. If there's a low rank, which I know the ranks to be damned right now, but with the low rank, I'm not going to sell as much premium as I can. I'm just going to sell one side.
I like the one side because on a pop up you get out.
Yeah.
96 cents on the 40 put. I'll put in a GTC for 50%. On a up day, we'll get out.
Yes.
On a down day, we'll be losing. I mean, there's risk in that trade, of course, getting long DraftKings at 39, but I will put in a GTC for that. Because that was one of those we talked about, let's just wait till after earnings.
Yeah, we did. And that worked out well.
And XYZ we don't have. And that's one of those that...
It's down.
XYZ... Down 250.
I don't know if you're getting filled on things because I'm trying to be pro.
Oh, okay. Let's see.
I don't think you're.
What's out so far?
So far, the only thing is
Rocket Lab and Rivian. All right, CoreWeave. We sold puts in CoreWeave, and DraftKings. We sold puts in DraftKings.
Oh, we're filled immediately in DraftKings.
Yeah.
I want a ding.
It's not. The volume's off on this.
I'd like to hear when we get filled.
So those are 2 puts. What else?
You know whose birthday it is today? And I don't know why I remember this.
Whose?
8/8. Sharon King.
Aww.
One of our friends from the
She was from the trading floor. She was great. I wonder what happened to Sharon King.
I don't know.
She was wonderful. Natural gas. Down again. Look into the 2 handle.
Yeah.
I guess it was before, but
it was. It gapped down a little bit. I mean, we can always. How much time do we have left in that spread? 20 days?
We have time. 18 days.
Because you can always roll that out in time. I hesitate because you're just rolling to a different cycle.
No, it's just a put spread. You think?
Oh, I don't want to roll it yet. If this were, let's say, Google, I would. Or if it's something that's standard listed options, because otherwise you're rolling into a different cycle.
So let's see. If we go same strike to same strike, let's see if we're getting a credit.
I don't think you are.
Oh. No, with dollar it's a debit.
It's a debit, but I mean, that's extending your duration for a little bit. We can hold it, but I was shocked. Shock and awe is what I'm saying here with that.
That we're not paying for it?
Yeah, you're not paying for it.
We're paying 0.000.
I mean, you are paying for it. I understand that, but you're not really paying for it.
What, you want to roll it for even?
No, I know. I didn't. I just the shocking thing is that we're not paying for it. I think we leave it. Natural gas is something I always leave until the end
because they're so close. It's so close that we're like 2.99999 and 3.096. They're close. The 18-day and the 48-day prices are close.
They are close.
It's not like here where it's 3 and 350.
True. We could extend.
I mean, we could if it rolls for even. Let me take out the GTC. But then we're in that for so long. I'd rather have a lower strike in the
yeah, leave it.
Like if we were in the 48-day, it'd be nice to do the 2.8, 2.85, 2.75. They were getting $160 for this.
Leave it. I mean.
Yeah. It's only a 5-point wide.
Yeah. I'm fine with that. Brad came back in on Twitter and he wants to know, got anything working in UVXY? We're out of UVXY, right?
We're not out of it. We have the zebra.
I thought we got out of it.
No, all we did was ratchet it.
Okay.
And I didn't mind 42 days. There's 42 days to go. Is there going to be another vol spike in the next 42 days? Probably.
Correct. So my question to you is,
no.
Bad trading 101.
I am not going to follow this down.
No. I'm saying take off the call.
Oh, for $1.50?
That's my go-to move only in UVXY, not in all other. I would say this. I just want to be very, very clear. Not in all zebras, like that COPX that I just put on. If it gaps down, I'm not going to close the call in it because I'm not expecting a massive pop.
Sure.
And I think $1.50 is a little bit expensive, but I need to kind of clarify this. If I do a zebra on UVXY and it goes down, sometimes I'll just buy back that short call, the one short call, because then I'm left with two.
And then the only reason
it's expensive.
Would consider that is like if you look at today, what did we do? So puts in DraftKings, so puts in CoreWeave. We sold a put in Rivian. I was just going to think of selling a put in XYZ. So we're selling put. So sure, yeah,
No,
I don't
mind.
mind.
$1.50 is kind of expensive, but when I look at those and when I have a zebra on in UVXY, this is not my normal zebra management.
Right.
Because the nature of the beast, because it does pop or can pop. If there is something, it can pop. I don't expect that COPX or whatever I just put in to pop.
Right. So I get it. And we're almost at, 7 days ago, we sold this call for $3. And we've done a ratchet. So we paid $3. We took in $1 credit. So we've got $2 out there. If we buy this, we've got $3.50 out there for two calls that are worth $1.80.
It's not the end of the world. I just want to clarify something though too, because you're like, no.
No, I wasn't gonna go reestablish this.
So can we walk through the steps that we're talking about? And I really want to be very, very clear, and I hope this is crystal clear. This is for UVXY. This is not. UVXY is almost a different animal. Any volatility product is we treat them differently. So if I wanted to stay long COPX, I would be following it down. But to Jenny's point, I wouldn't be doing it here.
Like let's say I wanted 100 shares of XYZ.
Yeah.
And I had a zebra on. And it was down well below, and my whole zebra was out of the money. Then here, I could close it, get this $2 out of extrinsic value, and put on a new zebra where I sell a 50 delta, buy 270 deltas. Now, when I do this, I'm putting more money into the trade. I'm putting $1.40 into the trade. I'm putting more money into the trade.
But it'll pick back up one for one anywhere to the upside. That's kind of how you keep chasing the zebra to the downside. Now, that's why when I opened up, I was like, would you? And she goes, no.
Not in UVXY. Not in UVXY.
Agreed.
Because it's not the same it's not the same as just an equity.
It isn't. And it's got popability. If you get some down move, it's got popability.
And I don't want to throw $1.60 into it.
I don't either.
So, and here's my other question with the zebras. If you're going to ratchet them up, why then pay a debit to move them back down? Then if you're going to pay a debit to move them back down, don't even bother ratcheting them up. Then it's just a game of commissions.
Yes.
If I'm going to take in $1 to ratchet it up, why am I going to pay $1 to move it right back down? I shouldn't have even ratcheted it.
Correct, except for let's talk about my eternal ratchet.
If it keeps going
That's what I'm saying. If my eternal ratchet is to the upside, so sometimes occasionally I'll bring it back down, but that's because if you're going to do it once and you're going to do it once, I agree with you. Then what's the point?
Yeah, like what's the point of taking $1 to move it up and then pay $1 to move it down?
However, in this situation, we can take that off. Then you've got a 2 lot if it pops.
Sure. Yeah, I'll do that.
Right now, we only have one zebra in, and in the pop, it's hard to take off because we have a zebra. You'd have to take the whole thing off. If you buy back that one call, then we've got 2 long calls
for
42 days.
$1.56. I will buy back the one short. I'm working it. Buying back the one short. And Rocket Lab, I still have this $7 wide, and I thought I put an order in for it, but I know I've got to pay $7.01 for this. And I thought I put in the order. There we go. So that's gone. And all we have left is the short call spread. Oh, look. And now it's up $1.15, and it would have been into our butterfly.
I mean, shoulda, coulda. Could have been right down in between the two of them.
I'm just saying, I hope it doesn't go through this 47.50.
Oh, yeah, we left that. We loved it.
If we come in
Short Rocket Lab.
If we come in short Rocket Lab, 100 shares.
We were short Rocket Lab originally.
Yeah, if we come in short 100 shares of Rocket Lab at 47, so be it.
C'est la vie. C'est la vie.
C'est la vie.
Que sera, sera.
So is life? I don't know. Say so it's life.
Is that what que sera, sera means? Que.
What will be will be. What will be will be. All right. We have no red in the money signs to worry about. XYZ is one of those products that I wanted to look at selling puts in there, see what.
Oh, yeah.
Since it's down 206.
It's already 10:52. This is really fast. It's moving.
67 put for $1. Hey, it's a lot of buying power.
What the heck?
You can do the 67.57.
So why is CoreWeave so inexpensive, but everything else is thousands of dollars?
Someone in the margin business is slacking on their job.
Scott, we need to go.
No, I don't think it's even here. Like, I think it's everywhere. Like, why? Yeah, to your point, why is CoreWeave using less than XYZ? Somehow CoreWeave has slipped through the cracks.
They have slipped through the cracks.
They've slipped through the cracks.
And they're just using so much on everything else.
Oh my gosh, my daughter, she's in this law internship, and yesterday there was like a whole thing on white collar crime, and then
from Interesting Consulting.
Well, and then she was talking about Martha Stewart, and I heard her on the phone telling her boyfriend about the different like celebrities and white collar crime, and she brought up Martha Stewart. I was like, let me clarify.
Let me offer you some free advice.
And she didn't believe me that I was like in the pit when this was all going on, when this was all going down.
Did they talk about Martha Stewart at the?
Yeah, they did.
So for those of you who don't know, Jenny was in the ImClone pit. Wasn't it ImClone?
Well, ImClone was the stock that she sold, but ImClone and Bristol Myers, I think there was some kind of deal with ImClone and Bristol Myers. So
I could the Bristol Myers pit. So I thought it was the Bristol Myers pit. I thought it was ImClone stock. So it was Bristol Myers stock.
Well, they both took a hit. So it was Bristol Myers here and ImClone. I could see the ImClone off to my left, and here I'm in Bristol Myers, and ImClone was in a different pit, but it was ImClone stock that she was selling, but it was Bristol Myers took a massive hit because they were somehow connected.
They co-developed and co-commercialized the cancer drug, something.
Okay.
So ImClone and Bristol Myers Squibb were partners starting in 2001 and made an offer to ImClone in 2008.
Yeah. Yeah, and so I'm trying to tell her this, explain to her how all the people in our pit lost so much money because a broker that I will not name came in and bought thousands and thousands and thousands of puts, like right before the news came out.
I think I know who it was.
You know
exactly who it was.
Starts with an O.
And ends with an R. We've protected his identity.
And she was shocked to hear that like I was in the pit when this was going on.
Yeah.
But I will say, great show, the documentary, the Martha documentary on Netflix. Great. Go watch it. Excellent. It just came out like this year.
But I mean, didn't she only sell like $30,000 worth of stock? Something so little? No, I'm not saying so little. I'm not saying there's no amount that, like, it was illegal, okay?
So I watched the documentary. It was something like this. It was something like, let's say my friend Ken works for a company and he had stock in that company and I had stock in the company and I'm at the beach with you and we're at the beach and Ken calls me and says like, hey, I'm getting rid of my stock. And I was like, okay.
No, I mean,
and then we're at the beach.
It wasn't even a targeted call to make sure that you knew that. It was just like part of a conversation, like a bigger conversation, wasn't it?
And I think her friend called her and was like, hey, I'm getting rid of my stock. And then she was literally on vacation at the beach with her friends and she was like, oh, I'll call my broker. Hey, I'm going to get rid of this stock. That's what happened. Her problem was that she lied about it.
Oh.
In court, she lied. Like, she lied in court about it.
Who gave her that advice?
I think that's why maybe they bring it up at this, like, little law internship, and they're going over the case. So because she lied in court.
Okay.
Yeah. Or lied to whoever. She lied multiple times.
That's why she went to jail and got jacked.
Yeah, but then she made lots of friends in jail. She taught the ladies how to garden, and she did a lot of good.
She went to a white collar prison, right? But I will tell you, and I tell my kids this all the time, just because it seems like a ridiculous rule, and it's not a ridiculous rule. Like, she didn't know anything about that stock, right? And just because it seems like a ridiculous rule, that doesn't mean you can't be in trouble for it.
Well, she lied in court.
But it's still the cover up is always worse than the actual act.
Yeah, never lie.
Yeah,
never lie.
Because she went to jail for insider trading, not lying.
I don't know. You have to go watch the documentary. The documentary is very good.
Take it to the tape.
And then she became friends with Snoop Dogg.
Oh yeah, not in jail.
After somehow she became friends with Snoop Dogg.
Okay, so this is gonna be AI. Let's see if it works.
And we're out of time.
Oh, she went to prison for obstruction of justice.
Lying.
That's lying.
Yeah, lying.
And lying to federal investigators.
Yeah.
Into an insider trading, but not for insider trading itself. Huh.
For lying.
I just like calling it obstruction of justice, which is...
And so I felt like when that happened, the crazy thing is, you know me, I like to garden, I like to bake, I like to do all things like that. So when Martha Stewart had her apprentice show, and they had auditions in Chicago for Martha, I auditioned for it.
You did?
Yes, this was like long ago. I auditioned for Martha Stewart Apprentice. Never got picked. And then when the whole Imclone thing happened and she went to jail, I was like, justice. Because I lost so much money from all the puts that they were buying right before this scandal happened.
You just saw all of them. It's crazy.
Yeah, I don't know. I'm still waiting to get my money back.
All right, on that uplifting note, Jenny, I want you to have a wonderful weekend.
Liz,
release Martha from your...
You go out in your athletic wear and your sunglasses.
I'm in a dress. You're more athletic than I am. I think you have gym shoes on.
I do. It's my new city look.
I know. Yes, I do. So I will keep the sunglasses. I'm not going to forget them here this time.
All right. Well, everybody out there, have a great weekend. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We'll see you
on Monday.
Everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. My favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler with me as always, and if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we're going to be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend with my buddy, Mikey Butler. Good morning, sir.
Good morning.
Yes.
How you doing? Happy Friday.
Happy Friday. We made it.
We did.
A special day. A special day.
I don't remember the last time I wore a hat in the studio. It's Party Hat Friday today.
Yeah, we both missed the party shirt.
Yeah. I'm also wearing shorts for the first time in the office ever.
Yeah,
so I'm like casual Friday'd up.
Yeah, I had a I don't wear shorts to the office. I had a little debacle at my first job previous to Tasty.
Shorts debacle?
Yes. I was commuting all the way to Northbrook from downtown, which was the reverse commute, which was really, really fun. And one day I wore shorts, and my boss was like, "What are you doing?" And I was like, "What do you mean? It's like 95 degrees outside." He's like, "Why do you have shorts on?" I was like, "I don't know."
Why aren't you sweating in your pants?
And he's like, "You can't wear shorts in the office." I was like, "Okay." So I drove all the way back downtown to put on pants.
Same day.
Yes. No, I don't wear shorts to the office.
Yeah.
No shorts. No shorts.
That's tough.
That was
It's
a tough
to
one.
hear.
That was a really tough one. That was a really tough one.
Tail between the legs, driving back home.
Yeah. Young guy. I was like, 6 months in, 7 months in.
It's tough.
That really scarred me.
Yeah.
That scarred me.
That's what we call a character building experience.
Yes. I was like, okay, got it. No shorts in the office. It was a very, it was an interesting one. Yeah.
Well, that's sad. Sorry you had to deal with that.
It was way before 2018. This was I don't know, when did I start here? I think I started here 2014. So this was probably or did I start 2015?
Yeah, 2015, because that was 2014.
Yeah. 2015. So this was probably 2013-ish.
Yeah. I see Errol and Thomas in the chat. Let us know how old you were in 2014. Let us know.
They were. Thomas was still.
They still had their pacifiers in, most likely.
But it's a special day because Thomas is actually
presenting.
It's the end of the internship for all of our interns here at the office. So
I'm actually excited for this because I'm intrigued to hear what they have to say based on their analysis of everything that they learned. It's going to be great.
Thomas knows who he should be shouting out, so,
He was 11.
That's what he said, 11?
Yeah. He was still saying goo goo gaga to his parents. I don't know if that's real. Can't be real.
Crazy.
But yeah, crazy day.
Yes. More of the same.
I turn on the market machine and the machine is burring.
Yes.
Green only, except for Bitcoin. Bitcoin's down 15%.
I know, kind of gives me pause here.
Yeah.
But nothing seems to stop this thing. You've got E-minis 4 or 5 handles off the highs of the session here. They're up 43. We have swiftly gotten right back to where we were prior to this little hiccup in the market here, 6,400 and change. You got the NASDAQ up 192, the Dow up 186, and the Russell up 7. It's been nothing but the Big Mag 7 stocks. Apple catching up. It's up $6 and change here at the high of the session. Google as well is now 200. That's been a huge move. You got Nvidia up another $2. It seems like it goes up $2 every single day. Even Tesla's participating to the upside. Amazon's really been the only one that's been choppy here. Meta as well, I guess. But underneath the surface, these earnings trades like TTD, which had earnings after the close yesterday, not something that we trade all that often, but these mid and smaller cap stocks are not looking good. It is really all in the Big Mag 7s here. Twilio, another one, down 21 and change. Just some huge moves. I know we traded Pinterest. That was another one, down $3 and change, bouncing off the lows. But it has been all about the big name tech stocks, nothing else really participating. Yeah. Oil up 38 cents, 64.26. We've had another 2-point range today, so you got some volatility in oil. There's no volatility in volatility itself, 17.15 on the vol futures /VX. The VIX itself, a 15 handle, tells you all you need to know about this market. Bonds actually down 19 ticks, rates going up. They've reversed a little bit of that move higher that it had. Gold and silver both screaming higher. Gold is up $38. I think it made a new high in the overnight session. 35.34 was the high. In the overnight session here. Silver as well, moving higher, 24 cents. And then as Mikey alluded to, Bitcoin, kind of surprisingly not participating in what we're seeing today. It's down 1,200 on the spot. Futures down 1,500. Ethereum reaching new highs today. So it's been besides Bitcoin, it's been risk on to the big name tech stocks, and that's about it. You look at the S&P 100 here. You got some moves to the upside, but everything else pretty much flat and a pretty even split here when you go into the S&P 500, where we look at all of them. There's a lot of red on the screen here, despite what the market is doing. It's really when you go to the upside, it's a lot of the big name stocks.
Yeah. And obviously that's going to bring that upward lift because they have such a large weight relative to the others.
I mean,
especially in the NASDAQ.
Apple up 10% in a week. You're not going to have a down week.
No.
That happening.
Yeah, crazy move in Apple.
Huge. I mean, this is just.
But we've been saying, if you're looking for how does the market keep grinding higher? The other stocks that have already mooned stay flat, and the ones that haven't catch up.
Yes.
That's how it happens.
Yeah,
so
you've kind of seen that play out here.
Yeah. I did close the win earnings trade. I played that to the downside. That was a 75-cent winner. Could have been more if you closed it earlier. It basically rallied off the lows immediately.
Yes. It's now up. I think
it's down $1. Yeah.
Yeah, it was down $2-3 at one point today. Yeah.
But yeah, I placed that to the downside because I heard that Vegas is dead, attendance is low. Bless you.
Thank you.
So just dabbled a little bit, and they reported mixed results. So stock sold off. It's rallying from the lows, though.
Yeah.
I haven't done anything else in this portfolio today, but I do have a bunch of futures positions. I need Amazon to keep climbing.
Mm-hmm.
I need Enphase to keep climbing.
That stock never goes up. Mm-hmm. Yeah. I had a number of earnings trades today, too. We had the pins position. I closed out of that one. I mean, I went 3 for 3 on earnings, which was a very rare, 4 for 4, actually, which is a very rare occurrence. The pins position, that was a good one. Closed out of that short put in Tempest, which I did in both this account and the Johnny Trader account, so I took some profits there. Had the win diagonal calendar. It was kind of a tight diagonal here. I took that one off. We had the XYZ position, which is square block. Took that one off after earnings today, and then I bought in some risk on the downside with my Qs put diagonal spread. Just taking some risk off into what has been just a furious rally to the upside here.
Yeah. Live cattle, big sell-off from the highs.
Need that. Okay.
Does that mean that they've got the screwworm under control?
Maybe. I'm still right at the money on my call spread, so I got nothing to do there, but would like this to continue for a day or two, and I can close this one, scratch this one, move on to something else.
Yeah, there's still some things moving, but yeah, kind of an interesting day. Feels very strong, but it's really concentrated around a handful of stocks.
Yeah, I don't know if it feels very strong. I look at my positions, and it's pretty mixed.
On the surface, it looks strong.
On the surface, the numbers are going up, no doubt, but it seems like it's just the same names over and over again. I know I was chatting with you a little bit and Vecchio as well. It's like, you got these stocks like Palantir every day. It's $3-4 to the upside. It's just amazing.
It really is.
Yeah.
Yeah, Palantir is crazy. Big recovery from the lows of the year.
It's hard to look at this and be like, oh, I got to get some of that. I got to buy some of that. I think the same thing with NVIDIA. You got NVIDIA earnings coming up.
Yeah.
And you look at this thing, it's like, all right, it's a $4.3 trillion company. All right, is your bet for $5 trillion? Like, is that what you play for?
Yeah.
I guess so. Yeah. That's it. That was the easy trade.
It's hard to be patient. And this is an important point. Like if you buy NVIDIA at 180 and your goal is to make 10%, that brings it up to 201, let's say.
If you're playing for $5 trillion.
Well, no, if you're just playing for 10% from here.
Yeah.
That's an 18-point move to the upside, which brings you like 201.
Yeah.
But if you are patient and you get a sell-off back down to 170,
what are those?
That's what I'm saying. It's hard to be patient when you just see these stocks go up every day.
100%.
But you can make more if you are patient and you get that sell-off and then you enter, because now you don't need as much of a move to make your 10%. So it's tough getting long at these highs here. I don't really have the FOMO that apparently some people are having in the market, pushing it higher. But
yeah, it's been a good ride. I mean, we've taken advantage of this ride higher, but at a certain point, it's like, woo.
Yeah, but down the road, there will be something most likely.
Yeah,
That
he
sends
always-
the market down 10%, 15%, and that could be 20, 30% in these bigger names, and it erases multiple years of movement to the upside. So I would rather be patient than try and latch on here.
High of the day on the E-minis,
There you go.
47.
Yep.
Got it. We did it, baby. We did it.
If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat. We've got the Cherry Picks newsletter in there.
Awesome.
At the top. And I'm also going to put in the crypto newsletter that comes out tomorrow.
And if you haven't already signed up for the Chicago event, if you're in the area, that is still open, so you can sign up for that as well.
Next week.
Next week.
Next Friday.
Yes. And San Diego and Dallas for us for our next round.
Yeah.
We have the open house as well.
We do have the open house.
If you want to come, you have to send the email.
Yeah.
You know, we're big corporate business now, you know, like big.
You need a security pass.
You got to get a little pass, you know, you got to get in the system.
Mm-hmm.
You know.
Hard in, hard out.
Yeah.
12 p.m. to 1 p.m.
Yes.
Quick and easy.
Yes. Be fun, though.
It's a good office.
Yeah,
good
we might have some hors d'oeuvres.
I don't know about that.
I think we're going to get some pizza or something.
Yeah. Fair.
Can't have people come to the Tasty offices and not feed them. I mean, we talk about, speaking of lunch today.
I heard it was good.
Cafetola.
Heard it was good.
Very good. Empanadas.
But yes, there is still 2 days left for our show in Seattle on Sunday at the Crocodile, August 10th. If you want to join us there, just go to tastylive.com/events. You can sign up for free. We'll be there.
Yes.
Cool. Very nice. I'm going to go to the top of the YouTube chat here from what I can find.
Cool.
And we'll get to some questions. Is there anything wrong with doing a super narrow Jade Lizard? I want to sell the put, but I also want to hedge with the short call spread. But it only works if I sell them both at the money. Yeah, if you have an at the money call spread, I would just sell the put. Because if you're playing for another move and your call spread is right at the money, that's only going to hurt you if you are correct. You know, and if you want more hedge, just move it out in time. Just move the put further out to get the hedge.
Yeah, I would look at just the value of the call spread. I mean, it's hard to dissect it without like knowing what stock you're looking at. If it's a way different call spread if it's $1 wide versus $10 wide. I mean, those are kind of the considerations here. But yeah, I would just like look at the call spread and the value of that call spread. Sometimes, as Mikey said, you know, just lean a little bit directional is probably the way to go.
Yep. Do you ever do covered calls instead of short puts? Yeah, but it's usually after I sold a short put and I get stock. Because a short put, as long as you're not in a cash secured account, a short put will utilize less buying power than a covered call.
Yeah, it's really just a matter of buying power. I mean, like if you were just thinking of a low price stock, I'm looking at Lyft here. You buy the stock, you sell the 14 strike call, uses $600 in buying power. You have the same position with just selling the in the money put, and you'll use $300 in buying power. So most of the time, if you're looking at this as a trade, meaning you're only holding it or intend to hold it for a week, 30 days, 40 days, whatever the case may be, I think you lean towards the naked put just because it's way more capital efficient. If you're keeping stock as a longer duration trade, then go with the covered call because you want that stock. Dividend, if the stock pays a dividend, that's another thing that it will be priced in, but that's something that you have to consider as well. If you're holding this for a long period of time, you probably just want the stock.
If you had $200, what would be the best trade to place, or what trade would you make if you had $200?
I mean, it's a battle. I would do probably an iron condor, or if you want to lean directional, bullish, bearish in something like QQQ or SPY, or if you have a specific stock that you are bullish on, sell a put spread there. That's the sort of thing, that you can do with a couple $100. It's, the barrier to entry in trading is capital.
Yeah.
So 200 is tough. It's tough to be in the game with that amount.
Yeah, you're limited to a 2-point wide credit spread, or you can go to like something like iBit if you want Bitcoin exposure. You can buy a call in December for $200. Something like that.
And that's like a shot.
Yeah.
Yeah.
But in terms of like selling premium with $200, it's gonna be very difficult.
Yeah, I would look to do like a $3 wide spread, because you'll collect around $1, so you'll use your $200. You go like in SPY, you go to around a 20 delta, or we could do the Qs too. The Qs might have a little bit of extra volatility for you. So you go to September, let's say the 20-ish delta. We'll call it the 545. We'll go to the 542. That's on the put side. On the upside, we'll say it's $5 wide strikes on the upside, but just for argument's sake, this one's $300. 1/3 the width of the strikes. This one you would widen out the downside just to make it even. You have $5 wide strikes above 585, so we're a little limited here. But this sort of setup where you're selling around a 20 delta short option, you go a couple points wide, and that's your position, and then managing it at 50%, rolling to the next monthly expiration. That's really all you can do. I think that's probably the best use of capital.
Yeah.
Give yourself a high probability trade.
Mm-hmm. Sticking with liquid products.
Yes.
How about Campbell Soup, CPB?
Oh,
I was looking at
favorite.
Yeah, a short call spread, 33.38, but I also like the 32 strike on the put side. Yeah, I would personally lean with a diagonal spread. Like you can even buy November, sell September for $150.
I've earned it, yeah.
If you're leaning bearish, like a 33.31 for 150. I'm not sure I like being right up against the stock price with a short call spread and only collecting a quarter of the width of your risk with the strike right at the stock price. But that's what happens when you have a 34% IV. I don't care about the IV rank of 93 when the actual implied volatility is 34%. It's still very low.
Yeah. And so I would be careful in here. I'm just like looking at some of the expirations, the weekly expirations. These markets stink. I mean, you can go into the November, the September, and they look fairly decent, 10 cents wide. But there isn't a lot of liquidity here. Even some of these, like, your 34 call is 75 cents at $1. I mean, these are, I think you can overall find a better use of your capital somewhere else. It's not that enticing to me.
Yep. Do I get back into the lean hogs trade that I just closed? Could just do the same thing. The 235, 236, long October, short the SEP 5. It's basically the same price. It's basically the same price it's literally the exact same price I bought it for. I'll get back in.
Good.
We'll do it.
All right.
Do it for the YouTube chat.
Yep.
So yeah, long the 235 in October, short the 236 in September. Basically a very narrow diagonal spread for about $700 in risk. I'm gonna leave it right there. Strangle on Apple not going well.
No.
Yeah.
That's a tough one. $7. It's high of the session here. This thing has not had a downtick.
Yeah, these are the scenarios where, like, if I had a strangle on in here and now if I had like the 230 call, let's say I had like the 210, 230 in September, I might just buy this back and shift it to like the 220, 240 or the 225, 245 and just not have the upside risk if you think it's going to keep ripping, because you're not going to be able to collect enough premium by moving the put up to offset your short delta risk here.
Vol has not been high here either.
No.
So, I don't think I would have had the strangle on to begin with. You got an IV rank of 18 right now.
Yeah, it's tough. It's tough when you have 27% implied volatility in an equity that can rip or drop dramatically. It's not going to be the same feeling if you're selling a strangle in SPY or the Qs, because you don't have these 3% moves every day, like we're seeing in Apple right now.
Yes.
But yeah, you can still manipulate that if you want to. 205, 235. Okay, yeah.
And I would roll up the put too. 205 put has lost probably half of its value today.
Yeah, just rolled up from 190 to 205.
I would probably go again.
So yeah, this is a $6 strangle right now. If you bought this back and you sold the 220, 245 and just shifted your downside risk to upside risk, if that's what you want to do, you can do that for a scratch. So that's always on the table too. I don't think we talk about that enough, because sometimes
it changes your delta.
But sometimes you don't want the short delta. Like in iBit or DraftKings, I don't want the short, well, not DraftKings, but iBit.
Yeah.
I don't want short delta ever. So if this happens, I'm just shifting the whole thing up. And you can do it for a scratch.
Yeah.
But yes, it does change your delta. You're moving it with the momentum of the stock, but it alleviates a lot more upside pressure if that's your goal. Like, I personally would rather have downside risk in something like Apple than upside risk.
Yeah.
There's no right answer until you're done with the trade.
It's hard when you had the position on previously. When you're putting on a position, you should understand that you're short at one point and long at the other. You know, flipping the cards is a tough decision to make. When I'm doing these sort of things and you're buying the guts and selling the wings kind of adjustments, it's usually with a rollout in time, because you're reducing the delta exposure, but you're still adding, more extrinsic value with that adjustment. Here, you're not adding any extrinsic value. You're just shifting your delta exposure, which is cool if you're comfortable with being long, flat delta now.
Yeah. Yeah, it's just an inopportune time if you're already in September is another way to put it.
Yes.
For sure. Quick question on Iron Condor and Palantir. How do you manage the trade?
What you got?
I have the 160, 170 short call spread. You got the same one. So it's done. Unfortunately.
In September or
in August. Yeah. And I've had this on for a long time.
Yeah.
So
got 50 cents.
Yeah. This one is, there's not much we can do when you have a 25-point rally in 4 days.
Yeah.
And I didn't really ever have a chance to roll this.
No.
Unless you just got rid of it. Because it was creeping up towards the short call spread. It was always a loser. And then now it's fully in the money on the call side. There's still 7 days left. Crazier things have happened.
Yeah.
If you get a move back from 185 to 175, even if it's completely in the money, it'll trade for $5 as opposed to $9.50.
Yeah.
So you can still make back a couple $100 if there's a sell-off in Palantir. So I'm not closing anything right now. I'm just going to let this go, because the risk reward moving forward, there's only 40 cents of risk and a couple $100 of value we can get back if there's a sell-off. But yeah, Iron Condors are pretty limited in terms of defensive mechanics.
Especially when you have a move like this.
Yeah. Let's say you lose on a long earnings calendar or diagonal. You're short the weekly call and you're long a call a week out at the same strike, and you lose big on the down move. Do you ever just try to recoup some losses by keeping the long call and selling the call below it? Not really. So turning it into a credit spread by selling the call below it. Because now you're just flipping your assumption. And if you do get the reversal, you're now taking more losses as opposed to getting value back.
Yeah, you can't. And especially when you're going that short duration, that's an all or nothing type trade. If you're going further out in time and you're going to, 30 days out, you'll probably have the opportunity to calendarize that position or make it into a diagonal spread or something like that, where you can maintain your assumption on the trade. But if you're doing a 1 day 9-day or what would it be? 1 day, 8-day? 1 day, 7-day? You got nothing else you can do. Like you're just, those options, they move too quick.
I just got filled on the lean hogs trade for the exact same price I got filled at a week ago. Beautiful. Just posted that to the follow page. Can you do a pairs trade getting short gold and long crude?
So I have some short delta in gold. I have an iron condor as well in the futures as well as in the ETF GLD. So I have that position that is leaning short given the move. In crude, I am also slightly long. I have the 57.5 put spread, and then I have the call spread on the upside 73.75. So I have this position on already. I think you got filled on the MCL position yesterday, right?
Yep, I'm long MCL, just under 65. So I'm losing a little bit on that, and then I'm short. I have short delta in gold with the call Brookwing Butterfly.
Okay.
But if you wanted to use the pairs trade function, you can do like a straight up long crude, short micro gold. You just have to notionally match those two if that's what you're actually trying to do.
Yeah.
So like the long MCL, short MGC.
MGC is, I think they would be, you'd have to think about the volatilities here because MGC is 100 ounces, right? I believe so. It's 100 ounces.
Yeah, so GC.
$100 per tick.
Yeah, and it's a 30K product as opposed to a 6K product.
Yeah.
So you'd have to be long multiple crudes to match your short gold. Yeah. So it's tougher to do with straight up contracts, which is why we use options.
Yeah, I would do like a put spread in /CL, call spread in GC, and do them like equal notional amount of risk.
Yeah. And that would mean like if you do a
2-point wide.
Yeah, you'll have twice the width on your gold because the gold's 30K. No, sorry. The gold is 300K.
Yeah.
So yeah, you'd have to notionally match it with the spread width.
You would do like something like a 2-point wide around a 30-ish delta on crude futures. This will use $1,500 in total risk on this and trade for about $500. And then in gold, let's say you go to the same sort of duration. We'll just go to the 48-day. You go to around a 20-ish delta or 25 delta. We'll call it the 36.30, and then go, 20 points wide. You have the same amount of risk on both trades. They're both going to use buying power because they're in different products, but that sort of setup, 20 points wide in gold versus a 2-point wide in oil futures. That would be, you'd have the same amount of risk on both trades.
CrowdStrike, short iron condor for next week with the short legs at 20 to 25 delta. Your choice.
I think I might just do a put spread. I actually was looking at the stock. The stock's had a big move, 100 points or so from the highs.
They have earnings at the end of August.
Do like the 20 delta. Ish.
Yeah, 20 delta. So yeah, you're at 405 or 400 ish, and then you're at 440, 445. You can just do it right at the orange bar.
Earnings.
Well, if you're doing it for next week,
yeah,
then you're doing it pre-earnings because the earnings are August 27. But it's a $2 credit for $300 in risk for next week, if that's what you want to do. But yeah, I would keep it super small because you don't have any defense here. If you get a gap where you're in the money.
And these markets stink. Yeah. I'm gonna sell the 390, 380 put spread if I can get filled.
In the 40 in the September cycle.
Yeah, September. I'm not messing around into earnings. Markets aren't great there. I'm going to sit at 305, and if we don't get filled there.
Mm-hmm.
All right, I'm going to let that one chill.
Do you throw excess cash into interest rate funds like BIL or SGov? Those are the two that are somewhat popular.
Mm-hmm.
You can, but it still takes buying power. So.
Yeah, I mean.
Like if you have cash but no buying power, that's because you're selling premium. That's why you have cash. But if you have no buying power to use, you won't be able to do it.
I mean, we've talked about it before. Like, if you have an excess amount of capital, sure. For me to do it with 5 or 10 grand that I have on the sidelines, it's just such a small amount, and I'd rather have that capital available if something's happening in the futures market overnight. You know, like that opportunity is way more valuable, and you need, you know, if something. Volatility spikes and you have expansion in implied volatility for your positions, buying power will increase. I mean, those things, like, I think people get caught up in the idea that they're like missing out on something because they have cash. If you're trading options, you are leveraged by at least 2 or 3x whatever your notional value is. If you're using 30, 40, 50% of your capital. So like the leverage you're getting via options is more than accounting for the small amount of interest that you get from an SGov or BIL.
Yeah.
It's just like, it's so minimal. It's like when we talk about the carry cost for our FX positions, which I closed out at 2 of them today. Probably $15-20 out of them. Just one click.
Oh, yeah. Long the Aussie dollar.
Yeah.
The Aussie franc.
Yep.
And then long the dollar yen.
Yeah.
One click close. $15. One click close. $10.
Yeah.
$25.
Yeah, I got 30.
This thing's up $330.
Yeah.
Just trading like micro lots.
Yeah, 15%. Me too.
Love to see it.
It's fun. It's been nice.
Great.
I think I think the killer for FX, because it's always been, I mean, prior to us launching Tasty FX, which you can sign up for if you click that button, Tasty FX will prompt you to sign up if you don't have an account. But I always thought of it as like, you know, kind of blow up your account type thing, like FX.
Well, if you're too big, yeah.
Yeah, because the leverage is absolutely massive.
Yeah, that's why you just got to be super small.
So, but through trading these and keeping them small enough to where I'm taking 15, 20, 30, $40, I can hold this forever.
Mm-hmm.
I can see, though, where people really leverage this stuff to try and make, you know, $200, $300, $400, $500, and it's all the capital they have, and then it's poof gone if you can't hold it.
Yeah. I was making 50 cents a day.
Nice.
Holding those two.
Look at you.
I got an extra, let's see, $1.70 to carry the two. I got an extra like $5.
Carry the two.
Yeah, I got an extra like $5 out of that.
Yeah.
You love to see it. And that's just trading with positive carry, which is something I'm going to try and just always do with the FX products, which is really just, if you're looking at the watch list, you're on the same side as where the positive swap bid or swap ask number is. So yeah, it's fun. I've got
something new.
Yeah.
Yeah.
New and exciting.
Yeah.
Shiny new toy.
Yeah.
LLY Iron Condor. Close the call spread.
Is a pig. Okay.
Close the call spread, holding the 670, 650 put spread. Mm-hmm. Considering rolling the put to October. And converting it to just a short put. So if you do that, you are multiplying your risk. You have to be willing to hold a $600 stock, 100 shares of risk in a $600 stock, first of all.
You can't go from just close the current, like, it's the obsession with like changing it and making it bigger and I'll leg out of this, leg out of that. Like, just close the position and start with an at the money put. Like, you don't have to make it overly complicated here. I mean, you got a position that's got $700 in risk. You know, you're gonna roll to a naked put where if you have a move like this on Monday, you're gonna lose $700 just that day. You know, it's a way different trade.
Yeah.
You got $700 in risk over the next 42 days, but you know, naked put, you can see that in a single session with the way the stock's moving.
Yeah. So you would, yeah. And also this put spread is not even that far in the money.
No, it's 50-50 shot.
Yeah. You're at 670, 650. So you've got, you're basically right there.
Yeah.
I would lean towards just holding this put spread because if LOI keeps crashing down, you're not going to be losing nearly as much with just holding this put spread. Relative to going undefined risk and multiplying your buying power requirement.
Yeah.
So I would say I would just wait. There's so much time. 42 days is so much time for this thing to recover, if it's going to. And if it doesn't, you take this hit on this put spread and maybe LOI's at 500 and then you can sell a put there.
Yeah.
So yeah, I think waiting is what I would do. Apple. 220, 185 strangle in September. Rolled up the put side to the 200. Move continues higher. Should I adjust again or wait until next week? So yeah, same. If you missed what we talked about earlier, yeah, I mean your move now is rolling to a straddle if you're rolling up. The call is in the money, so it's harder to make the adjustment that I was talking about earlier. Where if you had like the 235, 205. Like Andrew did, you can shift that whole thing up and alleviate all your pressure.
Mm-hmm.
Because the 220 is in the money, it's harder to do that. So I would say if you're trying to hedge this, maybe you roll the put up.
Unbelievable.
Yeah. If you roll the put up, you could roll it up to a straddle. But right now it's trading for $1,500. So going through the same exercise, like where can you pick up $1,500 if you're shifting this thing? It's really difficult. Like you can't even roll this to a 225, 230. You'd have to like go nuts and move the whole thing up to a 230 straddle, which is also fine. So there's things you can do, but right now it's tough to battle this thing when it's moving at the pace it's moving at. It's basically moving. The realized volatility is equivalent to the 2-week implied volatility, but you're doing it every day.
Mm-hmm.
So this thing is way outside of the implied volatility, which is a situation you can run into when you've got low implied volatility. Let's see. 45 long put in DraftKings as a result of the earnings trade early in the week. So should I wait?
Nice.
Or run like a thief in the night?
Run like a thief in the night.
That's a nice move down.
Yeah.
I closed mine yesterday for a nice profit. But yeah, I would just get out of it personally. Like this is the perfect move.
Like you got it in the 0 day?
November.
Ooh.
45 long put. I mean, in theory, if you wanted to, there's just not enough premium here. Like if the 42 or the 41 for next week were trading for like $1, I would say you could sell that, and if it keeps going down, then you're out. But 40 cents to sell premium against, like if you're going to do that, it's just not enough because you could see a 2-point rally and now you're losing money. So I would just get out.
Lightning in a bottle here.
Yeah.
You got a 5% move today. It's
especially after the up move.
Yeah.
Initially. And since that up move, this thing has gone down almost 10 points.
Take that money and run. Thief in the night.
What's the minimum net portfolio long delta you would keep per 100K in capital, given that you both lean long overall instead of short? I would say if you're leaning directional but still neutral-ish, with 100K, I would say it's
100 at least.
Yeah, but like 100 to 500 delta.
Yeah.
Like 1 to 5% of your net leg.
Yeah.
Is leaning bullish, but not too crazy bullish.
Yeah. You can think of it from like a notional value perspective, if you got 100K and you were just buying shares of SPY, you'd be able to buy 150 shares ish, you know? It's about 63,000 per 100. So, 150 shares would be all in cash if you were buying shares. Obviously, with leverage and options, you get more than that. So if you're 2 or 3x that, that's pretty normal from a leverage perspective to have that sort of position. So I agree. 1 to 500 is definitely where I would be.
Yeah.
But I'm not. My lean is dynamic delta. Like, I'm picking up short delta into this move. Like, I am not the same level of long as I am at lower prices. So, that range can change.
Indeed. What do you think about selling SPX 0-day iron flies?
All or nothing?
Yeah, all or nothing. If it's all or nothing, if I'm doing this every day, I think I could maybe do like 5-point wide, 10-point wide.
You can't
it's
do
just
a
like it's just
wide here. You can't do a 10-point wide.
Well, in terms of risk. So like $500 of risk.
Yeah.
So that's a 15-point wide. I don't like the iron fly at the money personally. I think it can work for sure, but the problem is if you have a narrow iron fly on a $6,000 product, for you to have the product pass through your range and for you to extract 20% out of it, you'd have to put it on in the morning and you'd have to close it at 2 p.m.
Yeah.
Otherwise, it's just going to trade for a similar value.
You got to take the 10 or 15% profit on it.
Yes.
Because you can't, it's not going to move until the last hour.
Yeah. I think the iron condor
I would prefer
will work better over time.
Yeah.
Just because now, let's say you put it on in the morning and you get a pass through your range at 11 a.m. Now you can take it off for a profit because your strikes aren't right up against each other.
Yeah.
Selling the lean hog short put 207, 56 days out.
I am short the lean. Oh no, I'm at live cattle. What's lean hogs? HE?
Sorry, LE.
Oh, live cattle.
Yeah, live cattle. Did I say lean hogs?
Yeah.
Yeah, I always mess those up.
All right.
The 207 put $500 in premium, $560 for $700 in buying power, but this is a massive product, 80 grand of risk.
Mm-hmm.
So you'd have to be cognizant of that. I like to stay defined risk in here, but I mean, it's a high probability trade. So if you can absorb that risk, I think it's fine. Iron Fly and IWM, 221 strikes, guts, 1 standard deviation out.
Yeah, I don't mind. I have a similar position. I did this for the cherry picks. Short the 210, 195 put spread, the 225, 240 call spread. So 15 points wide on either side. This one I did it just under $6, $5.97, marked at 572. So I'm up like 20, 25 cents right now. So I'm with you. Neutral.
Yeah. So yeah, the 236, 206.
There he goes.
236, 206 is 15 points wide, collecting 950, risking 550. Yeah, I kind of like this. I mean, it's another one where if you throw this on now and 30 days from now, if you pass through this range between 212 and 232, it'll be a couple $100 winner. But it's going to take some time.
Mm-hmm.
Jade Lizard and Cisco.
Speaking of, Gus chatted me yesterday.
The thong song? The other Cisco.
He goes, have you heard of the thong song? And I was like, Cisco? Of course I have. He's like, I'd never heard it before.
Yeah.
The shock.
I've had people tell me they don't know who Blink-182 is. And I'm just like, I can't talk to you.
Kids.
I can't talk to you.
Like, what are we doing in Cisco?
Jade Lizard, short put,
I can't do that. That stock up at highs. Can't you give me something? I short it. Let me do a short call spread or something. I gotta. Can't bring me a jade lizard with the stock like this.
I don't even know. This must be the wrong ticker.
Does this go? Or is there a different ticker?
Yeah, because it's a 57.5, 77.5, 72.5. The 57.5 is worthless.
Maybe they had it on.
Maybe it's the 67.5. I think it's the 67.5, 72.5, 77.5.
Yeah.
All the halves. Yeah, this is too little premium for the buying power.
Yeah.
28% IV is low.
Not my jam.
And they have earnings coming up next week. I like to stay defined risk for earnings personally.
Apple up $10 now, $2.30.
Yeah.
Unbelievable. So what? $30 move in 3 days? Mm-hmm. All they had to do was give like a little gold iPhone.
Little $100 billion.
Daddy.
Yeah.
The $100 billion that's in the wind.
What are you talking about? That's this move. This move is from that announcement.
No.
What do you think
it's playing? It's playing nice with Daddy. There's been 1,000 times that Apple says, "Oh, we're going to invest in America, $500 billion, $200 billion, $300 billion." Never happens.
Okay.
This is kissing the ring. Zuck did it, and look at Meta. This is kissing the ring.
Bending the knee.
Yes. Jensen, NVIDIA. Look at this. Semiconductor tariffs on everybody except for NVIDIA and all the other ones.
Yeah. That's what I'm saying. All you have to do is look up, and you'll see those green bars eventually trickle that direction.
Yes.
Options spreads on futures contracts. What's a good minimum account size to take this step? I currently trade in an IRA, if that matters.
I think you have to have 25K for an IRA to trade futures options, right? Because you have to do the IRA works.
Yeah.
I think it's 25K.
But yeah, it's all the same stuff. I think you just need to just keep your eye on the risk. I'm not sure if you get span margin privileges in IRA. Probably not.
I don't know.
If I were to guess.
I don't know the answer to that. I don't think so.
If you throw on a spread, just like to show it on the trade page, just look at your buying power effect relative to your max loss. If it's the same number, then nothing really changes. You're selling spreads or buying spreads, and your risk is what it is. And it's a very similar feel to equity markets. But if your buying power is way less than your max loss with the spread on in futures options, you are getting span margin, and you just need to keep your risk in check. And I would just base it off of your max loss. The span margin is a nice to have thing, but if you start to get tested, it can be really problematic if you were trading with a size in mind with your span margin, and now that is multiplied.
Yes. E-mini's crashing, only up 40. 7 points. We got them. I mean, they got to pin 30 or 6,400 today, right? 7 points away. I mean, like that's a given.
Is it ever worthwhile doing credit box spreads and margin account versus paying interest? I don't have portfolio margin. Yeah, I mean, it's box spreads they're just like smaller ways to get exposure to interest rates.
Yeah.
I think you could use SGov or BIL if you're trying to just get straight up interest rates on cash. But yeah, the problem with box spreads is, let's say you sell, and it's not a problem, but let's say you sell a box spread and then they cut interest rates. You're going to see an extrinsic value loss on that position until enough time passes for you to offset that. So it's tricky.
Yeah, and you got to be careful because that position still, like, it doesn't.
It still has a bid-ask spread you have to fill at too.
Of course, but the credit you're getting on that position. I mean, you're paying a debit, but you're locking in a value. That's not
over time.
It's over time. So like you have to hold that position. So you want to make sure that you're not over margined to where you are borrowing capital, because the margin rate is going to be a lot higher than whatever your rate is on the box.
Yeah.
because you're getting capital for that trade. Because the $10, 100 point wide, the trade's at $97 or $96. So you get $4, but if you're leveraging that into new positions, buying something, then you're going to be in a margin situation.
Yep. CrowdStrike short put spread for earnings.
Yeah, I tried. Did I get filled on this?
385, 375. The markets are super wide there, so
I'll go down to $3. That's the last stop.
yeah. These are 2-point wide spreads. The 385 is pretty wide. The 375 is less wide, but just keep that in mind if you're selling a put spread here.
Yeah.
Let's see, one more here.
Cool.
I'm still holding the naked call from the call diagonal on Apple earnings, 210 call. Loving the Apple move.
There you go.
Great job. I closed my Apple spread.
Too early.
Too early, apparently.
Yeah, I missed out on $400.
Yeah. Yeah, I sold it at 725 at the 215, 225.
Unbelievable.
But yeah, I mean, when you get bailed out after a sell-off, you're gonna take that off.
Yeah. Can't look back. It's
no.
Inside. I mean, come on.
But yeah, I was happy to get the money back, and I closed it. And sometimes you do a diagonal spread with earnings, and it goes the opposite way and never comes back. But sometimes it comes back, and that's the nice thing about the defined risk debit spreads with a long option far out in time is you can get this move and just get absolutely bailed out.
Yeah.
I think that's it.
Cool.
Thanks for tuning in. If you got any further questions, you can reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. If you're in Seattle, we'll see you in a couple days. If you want to sign up for the other ones, tastylive.com/events. Totally free. But yeah, have a great weekend. We will see you on Tuesday because we'll be traveling on Monday, so we won't be on air. But have a great weekend. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
We're back. It's Friday, August 8th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we are enjoying a Mirren melt-up here this Friday.
Apparently. I don't see any particularly good reason why this is happening in terms of just looking at catalysts. It doesn't look like there was any one thing that set this off. So it might as well be a Mirren melt-up.
Mirren melt-up. Stephen Mirren, one of the president's economic advisors, has been named as the temporary replacement on the Federal Reserve Board of Governors. Kugler is leaving, and so there's a temporary opening that could become a permanent spot, but her term does need to be filled out. And so Mirren will be taking that role. And all of a sudden you look to next year, Ilya, and you see a world in which 4 of the 7 Fed governors will have been appointed by President Trump. And you think about that FOMC voting board with members in Minneapolis who need a vote, like Kashkari, who's been calling for cuts. Daly's been calling for cuts. Okay, maybe the market does have a bunch of liquidity coming down the pipeline. And today kind of feels a little bit like a reflation trade to a certain extent.
I don't really see it in the bond market or in Fed funds rate cut odds, though, which is, I was following that same sort of thinking, going, well, okay, you got a dove, market likes lower rates. Now they're going to get a bunch more easing coming through, somewhat easier maybe. I mean, incrementally, that this is one more vote. Okay, fine. But yields are up across the curve today, and the pricing for next year has become a little bit less dovish. Not by any means far from where it's been. We went from 75 basis points to 70. So, it's still veering on 3 cuts. And the 50 for this year are still very much in the forecast. But it doesn't look like the markets are pricing in a way that feels like there's a dovish shift.
The market was already there in a certain extent, right? We saw the rate cuts they were piling in for next year. We're going to talk about the market reaction in a little bit, but next week we have a little bit more of an eventful economic calendar around the corner. This week,
yes, exciting.
There wasn't much there, right? Last week was the big week for us. We had our acronym week: GDP, FOMC, NFP. This week, things
ISM ended up being a lot more action-packed than one might have anticipated.
But the reaction didn't stick. So
no,
we go to Tuesday, and that's when we find out the latest update of inflation for the US. Inflation is expected to tick higher here because the rates of change are still in that 0.2 to 0.3% range. You really need like 0.18, 0.2% to go over to your 2% medium-term target.
Who can we fire at BLS if this thing gets a 3 handle and the president doesn't like it?
I don't know. But this one, due out on Tuesday, S&P 500, we'll look at the options change shortly. It's not exactly pricing in fireworks. We have the UK GDP report coming up on Thursday, and then US retail sales Friday. So not exactly a super packed week, but inflation, retail sales sentiment, that's enough data as we make our way through the turn of August to stir something of a market reaction.
Sure. Well, sure. And between the consumer sentiment and the inflation numbers, you have exactly the kind of thing that you're looking for to kind of gauge what the Fed's reaction function and level of comfort is going to be with any kind of extrapolated rate cut effort, because, of course, that's the whole thing. And I don't know the extent to which this audience was paying attention to the Bank of England, but I certainly was, and so was Macro Money. We did a whole deep dive on it this week. They're facing a very similar issue to what the U.S. is concerned may happen, and arguably is already happening, because, of course, growth is already veering in the wrong direction, while inflation is already veering higher. This won't be the first uptick in inflation. It's been edging up. And so the Bank of England very clearly opted for the cut, but much more begrudgingly than anticipated, and the pound was higher for it, because the actual upshot was, oh man, we don't really know if we can afford to do this. Inflation's at a 17-month high. Granted, it's for fuel cost reasons that are factoring out of the statistical calculus from the negative side. And so there's a little bit of a statistical, not so much anomaly as a non-influential factor that you wouldn't extrapolate into future expectations, more like a statistical readjustment. Nevertheless, you don't want to let inflation get so high that expectations do become unanchored, because people just see prices going up and go, oh, well, that means they'll be even higher tomorrow, and it becomes a self-fulfilling thing. This was Powell's whole song and dance, really, since March, saying it's not so much that we expect the tariffs to be inflationary in a lasting way. It's that whatever one-off inflationary adjustment occurs, we don't want people to run with that idea and build out inflation expectations to where this whole thing starts to feed on itself. And you already see a level of reluctance with this kind of stagflationary flavored policy conundrum. And next week, front and back, you get that whole story, because between the CPI numbers and consumer sentiment, and of course retail sales, which are already showing signs of significant weakness. If you look at the second quarter GDP data, you look at the ISMs, you look at what's been happening with jobless claims, of course, NFP, the ingredients are there. And so this might be the kind of thing that people look at and go, well, the Fed was already skeptical, and if this is going to go this way, is September on the table? Or are they going to pump the brakes on this thing?
September's on the table if the data gets worse, like the the non-farm payrolls number was suggesting, like the PMI was suggesting.
Right.
If it doesn't get worse, then where were you at the July Fed meeting? Fed's thinking about a cut.
They're thinking about thinking.
They're thinking, but GDP is still in a place, and growth is still in place broadly. Inflation is still in a place. Jobs are still in a place where, like, the economy's not screaming the need for a cut.
I think that's really the key. Is things slowing is not a case for a cut. Things need to get bad.
Yeah, Mary Daly just did a episode of Odd Lots that came out today, and I was listening through it earlier.
The great San Francisco Fed president, Mary Daly.
And she was pointing out how like the labor market indicators that she's looking at are showing slowdown, but not screaming we're falling off a cliff.
Right.
And so jobless claims, anything that's more updated more frequently than non-farm payrolls, basically. But you have to look at the rates, not the levels, because the drop in the participation rate could largely be attributed in her mind to some of the immigration policy changes that have been going on. So look at the rate, and it's still fairly low, and inflation's pushing up. So patience is the best path. That said, we get news this morning that there's a potential truce coming down the pipeline between Russia and Ukraine. Today was a deadline of sorts, Ilya. We heard this last week. We now see that Bloomberg is telling us that Moscow and Washington are trying to reach a deal to halt the war that will lock in Russia's occupation of seized territories. Oil is probably the one that's getting hit the hardest on this. It was a bit higher earlier, now a bit lower. It's actually rebounded back quite nicely after the headline, I will say. It's a little bit higher than I imagined. But that seemed to be the precipitating factor to help kick us into gear today. Volatility on the other side of it getting crushed over the course of today's session. How do we, as people who have been, you're bearish, I'm flirting with it because August has usually been a bad month for me as a bull. Perhaps I'm letting my own biases and recent experiences color my perceptions. But this is, again, I would say on the other side, you have made the contention if we have the trade deals and this and that, we can't go to the upside. If the earnings, when they're bad, they're really punishing the market. How come volatility can't just stay a little bit stickier?
It seems like what we need is some kind of a catalyst. And you had no problem finding it when there was news. We were just talking about how this week there wasn't really much news, but the response to the little bit of news that there was, the ISM news, you got a response. I think the most striking thing about that response, we've talked a little bit about this before, but it continues to kind of weigh on how I'm thinking. You got not one, but two service sector PMI readings from different data aggregators, one from S&P Global, one from ISM, within 15 minutes of each other. Now, granted, the S&P Global one was a final revision. The original numbers, the sort of early look at the numbers, came 2 weeks before. So the markets knew that those those numbers were going to be positively flavored. But it doesn't sound right to say, oh, well, so that's a reason to dismiss them, because they were actually revised higher. So the fresher, more recent data that was added to the survey, as far as the S&P Global was concerned, it was good. And so S&P Global tells you this is a great service sector. The economy's very chipper. 15 minutes later, ISM tells you the completely opposite story. And the markets take those two things, they're 15 minutes apart, and they go, yeah, we don't care about the positive one. We're only going to move on the very negative one. We're just going to pretend like the S&P Global numbers didn't happen. This starts to become a pattern because the previous week you have the US-EU trade deal that gets faded. You get the Microsoft and Meta earnings that get faded. And then you get the jobs report that gets embraced. So it's not like the market is fading all news and only caring about AI. No, quite the opposite. It's not like the market is saying, oh, and you've talked about this vis-a-vis the earnings season. When you get a positive thing on the earnings front, there's a reaction. When you get a negative thing, there's a reaction. And it's about a two-way market. No, the market is biased to going harder on negative surprises, whereas positive surprises are getting a smaller than average response historically, albeit not by a lot. And so you start to see this shift in the lens through which markets look. So maybe the absence of a real potent catalyst this week was just not enough to tip things over. Because if we look at where the S&P is, if we look at where NASDAQ is, we're at the starting line for last week's sell-off. We haven't overturned it. We're essentially back approaching a test. We'll see, by the way. We were higher than this yesterday and couldn't stick it. So we'll see ultimately how this closes today. If it's another doji candle, hat tip to a friend of the show, Josh, that loves candlestick terminology. That one's for you, sir. We might again be in the situation where, what have we actually done? Tested the underside of a range that broke? That's it. So next week, we don't have a shortage of catalysts. Next week, we have a deadline for a trade deal with China and CPI and a bunch of consumption data after the GDP numbers, as we have said repeatedly, showed us that the first 6 months of this year, consumption-wise, and of course that's the lion's share of the economy, were the worst 6 months since the first 6 months of 2020, the COVID recession. So let's see. Maybe we just don't have the spark yet.
64.05.5. Right now, I'm still leaning on that short iron condor position that hopefully we stay in the range, 62.40 up to about 62.50, to me 64.50 through the end of next week. That's what I'm playing for here. What alarms me about that is the old NASDAQ, because the NASDAQ here is really firming up. And after bottoming out earlier this week on Monday, it's treating that early mid-July support as one would hope if the uptrend is to remain in place. Ilya, the simple math here is if this is a range that's been carved out and we break out 22,800 to 23,800, we're talking about 1,000 points to the upside still. This can see continuation just on the measured move basis. And if volatility is going to be in the tank, what VIX has a 15 handle, it's difficult to justify being too bared up, right? Not aggressively, at least.
Yeah. I mean, at this point, if you're already short, as I am, I don't think you have the ingredients to say, okay, this trade is invalidated. Because, and this is sort of the way my logic always works with risk management, if you entered short getting into this near the peak in August, you sort of waited for it to peak and come down a little bit and fade, and you go, okay, I'm in now, as I did. What is a reasonable stop, right? At what point do you go, I was wrong, the market is telling me this is not what's going to happen, I've got to get out? It's the high. If you get over the high, then fundamentally, the underlying assumption that you made, that is to say, that was a peak and now we're going lower, that assumption has been invalidated. So whatever you might think, whatever hopium you might be huffing, you got to get out at that point right there. So
well, if this thing goes up 22,800 through the high, we'll call it 23,845, so just over 1,000 points, you start to peer into 25,000 around the corner as a potential upside move. And at these levels, 1,000 NASDAQ points, it's another 4%.
I mean, and by the way, we have something of a precedent for how this might work. I mean, if you look at what the NASDAQ was doing the last time it attempted something of a top, where you have that sort of stalling around late, sort of second half of May going into June. You see it from the S&P right there. It's the same kind of a thing. Is you get a pullback, lots and lots of indecision, and then this slow crawl higher. So might we have another similar kind of a thing here? Of course. I'm not married to a short position here. I'm just looking at a pullback that seems to have broken the upward sloping sequence and going, is this the one? Let's take a risk defined shot. Let's see. If it is the one, risk reward is incredible. volatility is dirt cheap. If it's not the one, okay, fine. You lose a little money. It's not a lot. That's what trading is. You flip the other way. You go again.
Taking a look at this, I see that what you're saying about the similarity in price action, you break the uptrend and you get a sell-off, but it bounced off of that 1 month almost immediately and then grind up.
The moment you close above that high is the moment you're on the wrong side of it. You've got to go, which, by the way, is exactly what I did. The moment it broke above that high, I said, oh, nope, that wasn't the one. I was wrong. Got to go.
Maybe that happens here. The Russell, I'm still leaning with my short call spread up here. Not hot about it because we're right at the
this one can't seem to find the kind of thing that we see in either NASDAQ or the S&P even. This one still looks very much just like a retracement in a reversal.
Retracement and a reversal. That's kind of what I'm seeing here too. Those wicks that we've had perk up here the last few sessions, trying to find some semblance of a return above prior swing levels. It's just not playing out. Not quite playing out yet here. So I'm out at 2250. We haven't broken 2250. I guess I'm holding this through the weekend. Sector performance here today, Ilya, not that it's a remarkable kind of day. Volumes are light. S&P 500, 763,000 contracts traded. That's a little bit smaller than what we typically like to see, but it's summer, so maybe not all that atypical. Top performing sector, we track 25 here on Futures Power Hour, as we do on overtime. There are only 5 now in the red. Utilities, real estate, industrials, and retail is only up by 0.01%. Otherwise, metals, mining, materials, that's where the gains are in today's session. Telecom, likewise, up a bunch to a new all-time high. Put this back here in the daily, but this would be a new closing high here. And regional banks perking back up. So not everything's bad. It's not great. Muddling. Yeah. What's your biggest takeaway after this week, though? Because it felt like non-farm payrolls would have been that game changer a week ago.
Mm-hmm.
And then in hindsight, that was the flush. So it seems.
Yeah, I mean, I think last week was a bit of a game changer, and it wasn't just NFP. It's this difference in the way the price action is working that really jumps out at me. I really thought that those Microsoft and Meta earnings would give the market a spin up and that I was already wrong by then. And then that didn't happen. And I thought that was a really big tell. Because if ever there is a story that is impervious to worries about tariffs, seemingly, or seemed that way, impervious to geopolitics, impervious even to the economic cycle to a large extent. I mean, we heard Dylan running around going, do you not know how a supernova works? And it really seemed that this was not so much an unreasonable argument to make, because of course I don't agree with that argument. I have to Dylan's point, put on my cardigan and shift my glasses and go, well, actually, if you look at the history of bubbles. And so I can't help doing that. I've read too many finance history books. But it did have that flavor to markets. We pointedly broke from that last week. Multiple times. We then pointedly broke from it this week. We just only had a very small data offering to test the response function. But I mean, just look at how the market is behaving now. Does it really care about the Stephen Mirren news? Not really. It's not really doing anything triggered by the news per se. Gold had a little bit of pop. You and I were talking about it. Did it stick? No. So we're looking at this whole thing and saying, okay, well, maybe the lens is already different. And we just need inputs. We just need to feed things through the lens to get markets to see those things that they want to see, because their finger is above the sell button, but they need to see something to press the button. Maybe we just haven't seen that thing, but the change in the way that the price action is behaving relative to news, even AI news, even explosively positive AI news, which, by the way, because Meta stock rallied and didn't come back. Microsoft rallied and didn't come back. It's not like the market looked at those earnings and said, oh, there's a dark, deep blemish on these things. The top line is whatever, but under the surface, it's all skeletons. No. So the market got news it believed was good and could not make it go. So maybe the lens is already different. We just need to start feeding visuals through it now. And next week, we're going to get visuals.
This would be an all-time high close for the NASDAQ up here. So I don't want to dismiss that.
Because, of course, there was a gap there.
Still an all-time high closing level. S&P 500 gets there.
Okay.
64.22, so 16 more points. Well, I mean, again, for the average person, they're not looking at futures, right? So when they look at SPY and their portfolio this weekend, they're going to see this closing right near an all-time high. If they look at their triple Qs that they have, they're going to see it closing at an all-time high, right? Mm-hmm. So psychologically speaking, market's not in a bad place if people are looking at it. Let's move over to the bond market here, though. You and I...
Well, not in a bad place. Let me ask you one qualifier on that. Let's say you have no exposure in the S&P or the NASDAQ right now. And by the way...
You've had a miserable 4 months.
Yeah. And by the way, you've got nothing on, and we're talking tactically. We're not saying, AI will eventually prevail in 5, 10, 2, however many years, or the stock market always goes up eventually. Yeah. Okay, fine. Nobody's disputing these things, but we're trading. We're not investing. So you have capital to lay out. Are you a buyer of the S&P right here? You've got nothing on. Does the risk reward look good?
I mean, if I'm dollar cost averaging in over enough of a time frame, I don't really care what the index is.
You don't have anything on. From a trading perspective, you're flat.
Yeah, I'm not long right now, and I'm kicking myself for it.
But are you putting anything on now, here? If you don't have anything on.
But if the NASDAQ, I'm close to. If the NASDAQ goes above,
I was looking for.
If the NASDAQ goes above 23,800 or 880, then yeah, I'm going to ride it up into 25K.
That's a different story. If my short is invalidated, I am completely open-minded to flipping the other way. I'm not making an investment call, nor do I particularly care about this or that. If the price action is telling me this is where I'm going, I'm trying to make money.
Well, today's market is being led higher by Apple, by Tesla. So that's some of the names, at least in the tech sector. Palantir continues to run. We turn our attention to the bond market here today, which after this week coming in a touch softer. So stocks were able to claw back some of their gains, claw back some of their losses from the non-farm payrolls report. Bonds gave up some of their gains. And so you can almost see how those two things are interrelated. Recession concerns up, stocks down, bonds up. And if recession concerns continue to fade, then bonds probably come in a little bit more. But the 114 level here in our ZB market, this has been the turning point. It's where we flash crashed to the other day. Again, the explanation that we saw coming from Ed Bradford at Full Carry on Twitter. He pointed out that you have someone who is testing the opening print orders in UB and Ultras, and probably fat fingered something. So too many contracts went through, the market sold off into there. Interesting that that's the place where the market ultimately gets picked up. But that gives you a reason to think that this may be a line in the sand, even as we come back in. So right now, Ilya, where we find our market peering off 116, it's basically been a range high the past few months. If we break down through 114.5, probably going back down to 113. Below there, opens the floor to 111.5. But this is a market that's probably not going to move too quickly unless there's something really, really bad happening. And if it's bad, it's probably going to mean it's moving fast to the upside.
Mm-hmm.
So I think directionally neutral stuff still makes a lot of sense in notes and bonds. Even if you have an upside kicker on, just play the grind. The grind's been working.
Yeah, I mean, I look at this and we were talking yesterday about how it was interesting that through the flash crash, it seemed to hold the retest of what has looked like an attempted breakout through the late June, kind of going into July top. It's trying to undo it here, but it's not really going anywhere. We're still in a sideways drift. In some ways, I look at this as parallel to what's going on in gold, where sort of like this, since April, you've been in a sideways drift. Gold had a rally around the Liberation Day shenanigans, then stalled. This had a sell-off, then stalled. In many ways, they're different sides of the same coin. So maybe next week we finally get some level of engagement with this. What I'm going back to kind of over and over and over again is when you look at the June or even the May low here, what do you have since then? A series of higher highs and higher lows. Then you look at the June low internally to that larger move. What do you have there? From that June low upswing, series of higher highs and higher lows. Has that been overturned? No. So what are you doing here? You're clawing and scratching higher. Now, you're not rallying up a storm, but this isn't Bitcoin. This is the 30-year bond. It's slow. Even when Fed policy expectations are jumpy, it's slow. All that typically lives at the front end. So for me, this has been, you know what, when you get an opportunity, put something on, bake a ton of duration into it, and wait. Because vol is incredibly cheap here.
Vol is incredibly cheap here. It's a 3.6 IVR in bonds. It's a negative 0.7 in notes. So IVR is scaled up to 100. It's percentile rating. So when you're below zero, we're now 0.7% below the lowest volatility reading that we've seen in notes over the past year. Wow. That's really, really, really cheap vol. There are different ways to approach this, right? You could go for something like the short iron condor like I'm doing here. And again, the question is this a good place to put it on? Maybe preferably closer to 111.5. This is the top side of the range. So if we're going to have a trade where we're going back to the midpoint or so, maybe not a bad place for a short call spread. Although the risk to reward, risking 1 to make 4 for a 61% probability of profit, not the greatest thing in the world. But perhaps because this seems like this is something that could move, I think looking further out in time, you talk about having duration here, going out 77 days. We could do something like reverse fly. And if we were to do that, what we're looking for is now basically this market needs to get away from where it currently is. And do we think that the market's going to be pinned near 112? If the answer is no, then you could capitalize on that view, 62% probability of profit, a little bit more profit to loss, just over 1-to-1. We just want a market to get away from where it currently is right now. So it could be higher, it could be lower, it just can't be here.
Mm-hmm.
Maybe that's another way to express the view and take advantage of the low volatility. This thing is going to move. It's going to move at some point, but because of the low vol, I'm going to get myself a ton of duration. And as this drifts closer to 109, I can take it off. If it drifts up closer to 115, I can take it off. I just need it to move.
Mm-hmm. Yeah. Yeah. I mean, that's one way to go about it. I mean, the reason I've gone directional with it is because vol is so cheap that you can log a very simple, I mean, in my case, it's just long the long end, call vertical. You can lock in risk reward that's like 5-to-1. Okay, cool. What's the worst that's going to happen here? You build a lot of duration and you're looking at making something on the order of $600 for every 120, 150 that you're risking. I'll take that bet. It's a good bet. And if it goes wrong, it goes wrong. That's trading. But man, is the risk reward excellent. Kind of have to take a bite of that apple.
Does the Mirror news change anything for bonds? Was a question that I saw yesterday to always great feedback from the producers. What does the Mirror news do for the bond market? Incrementally, it adds a more dovish voice to the Fed right now. And without the permanence of the appointment, it probably means that Mirren's trying out for a job. And if he's trying out for a permanent job, maybe that means he's going to be a little bit more in line with Trump's view. Now, Trump's view was to just cut rates. So what happened to the bond market last year when rates were cut too aggressively? Rates went up. So the Fed lowers at the short end, but the long end blows out because we're adding fuel to a fire. An economy that was growing near 3%, unemployment rate near 4%. 25 would have probably been more appropriate in hindsight, but it triggers reflation. So strong gold, strong higher yields, higher stocks. The dollar was up a little bit
Weaker
too.
Dollar, yeah.
I mean, but you're not like seeing all of that play out today.
Definitely
but
not.
Higher yields at the long end has usually not been good for the market. But now it is. It's not bothering anyone. Whereas the past few sessions, and you had yields going lower, bond prices going up, stocks had struggled. That's kind of normal. It's kind of a normal market.
Yeah, I mean, it's kind of where I think we're going as the news.
Back to 60-40 portfolios?
Not so much back to 60-40 portfolios, back to the kind of risk aversion where when stocks wobble and sentiment unravels. If you look at stocks not as the indexes, you look at them not as anything necessarily buy and hold, which is the 60-40 portfolio world, but as a sentiment gauge. And you say, okay, if people want to be tactically, incrementally, as traders long the stock market, sentiment is positive, risk on. If they don't want to do that, and those speculative bets are coming off the board, risk off. And the classic kind of risk off environment looks like higher bonds at the long end, sometimes higher gold. Gold is a finicky animal in these environments. If it's recessionary and rate cuts, then yes, it goes up. And higher dollar. Because money goes to liquidity. People cash out, but what do they cash out into? The most liquid currency they can find, so that it's easier not to get run over both on the way in and on the way out. So if you cash out into an illiquid currency, first of all, it's going to spike, so you're going to be buying it expensive. And then when sentiment improves and people get out and want to reallocate to assets, it's going to crash. So you better be early on the way in, early on the way out. That's the kind of foresight nobody should hold themselves to being able to achieve. So where does capital go when markets cash out? They go into liquidity. There is nothing more liquid in the cash realm than the dollar. So I'm sort of thinking we're angling in that direction, ultimately. But I think at this point, you don't really have the kind of conclusive catalyst, at least not this week. Again, it seems like the lens is changing. It would be consistent with emerging risk aversion of the classic variety, that the market becomes immune to good news and starts only caring about bad news. That's that kind of an environment. People are looking for an excuse to divest. They know they want to, but they can't justify it unless something's wrong. So they're looking for the thing that's going to give them the out. So I'm looking for that, but we didn't get that this week. ISM was, frankly, a more potent attempt than I anticipated from that kind of data. We'll see. But next week, we do have the catalyst.
We do have some catalysts, and directionally, given the way the spending data has been going, retail sales, now that we're getting away from the initial tariff bump, probably the one I care about most. We see here, though, that gold is trading higher, that triangle getting a bit of a breakout now because of some news that we are slapping on a 39% tariff on gold coming from Switzerland. Switzerland is a major refining hub in the world. Basically, all gold that comes through the United States has probably made its way through Switzerland at some point.
Yeah, it's a big minting site.
You know what the problem that is for me? Gold's supposed to be the place that we hide out from the tariffs. Do you know what happens if they now take off the tariffs, Ilya? Gold probably gets punched in the face, even though it'd be a dip to buy in my view, because we're now using a safe haven as something that's caught in the tariffs. Okay, that's fine for us. I mean, at least fine for me being long. I wonder if it changes your perspective on this, because I know that you've been leaning a little short. So before I get all gloaty, how are you handling now this being like a potential tariff metal? I say that because of copper. I can't just forget about what happened with copper once it got thrown into the tariff blender.
Oh, what a blender. I mean, I look at this and sort of think, okay, well, first of all, gold is not copper. It is the kind of jumpiness that you see in copper, you don't see in gold. But more importantly, the way that I've expressed this view has been through selling vol. And what has happened in gold, and I've been on both sides of this range. I've been on the top side. I've been on the bottom. I've been long through selling puts. I've been short, and I am short now, through selling calls. But the entire way that I've been doing it, because it's been listless, has been to just say, okay, well, which side gives you better risk reward to extract vol right now? Because that's really all I'm looking for. I just want to get paid some premium, not lose more of it to the P&L than I've received, and then reload when the opportunity seems juicy. So I'm looking at this right now and saying, okay, well, where am I on this calculus? We're at the top of a range. We tried testing it, and again, hat tip Josh, doji candle at the top. No conviction. The Mirror News is really not doing anything here. It gave us a little after hours gap here, and that gap has gone nowhere. So, okay, this thing doesn't want to build out vol. Fine. I'm going to keep sitting on this and let it choose what it wants to do. I mean, as I look at my P&L today, I'm actually a little bit up today versus yesterday because vol has ticked down. And the premium I've received by more than twice subsumes the overall loss on P&L because it's drifted up to the top of the range since I've sold. So, okay, whatever. That's fine. Let's see. From my vantage point, the way I have the trade structured, it would not make sense at all at the top of a range to jump off the boat. Because the risk reward is kind of like, okay, well, would you go long when something is testing the top of a range, resistance that's held on multiple tests? Well, no, you'd wait for a break. And a break is but a hair away here. So if we get the break, okay, fine, I'll take the remainder of my premium. Thank you very much. And if not, then we're coming back down. And the P&L side is going to look better. All right, let's see. And your audio's gone.
Sorry about that. This would be an all-time high close for gold here. 3490.90. As for me, I'm still leaning long in the metals if this is the world that we're in right now. So GCZ5 is where I'm continuing to operate. Grunting a little bit long in the tooth here, Ilya. Playing fast and loose with that $3,500 call in GCV5. So need a little bit more juice to the upside to make that work for me. 34.62. Otherwise, the longer dated stuff that's certainly sitting out there at 3,500, 3,550, 48 days. That has plenty of time to keep going. Silver here, yeah, we gap open higher like gold does. Some of it mirroring, some of it the tariffs, I think. I only say that because we have the mirror news yesterday right around 3:15 Eastern. And then we get the tariff news basically at the end of the session, right before futures closed. So yeah, there's been a lot of meandering today, but 7.7 IVR, maybe that's a tell because IVRs were up in the 12 or 13. So this contraction into the weekend, contracting vol and silver has not been a pretty thing. You want to be, you don't want to be on that side if you're long, basically. So, staying frosty here, if you will. I'm leaning long. I have so much time, 80 plus days in my silver SIZ5 position right now. There's 81 days left to expiration. I'm going to sit tight. But I understand if a short-term trader is looking at this and saying, okay, this is 6 days up in a row for silver. As Sauna pointed out yesterday, we had 5. How often does that happen? Not that often. Like to get a 6th day in a row, it's basically a coin flip. And then as you go further out in time, odds of seeing a 7th day, they dwindle, an 8th day dwindle. So just thinking about this early next week, metals pullback, then keep going 38.20, maybe 2.5% lower from here is a place where a floor would be found. It's right where we saw resistance in June and then support through July. So again, keeping an eye on like 38.20.
Yeah. Yeah.
That's it.
It has to do something. Right now, this is in the middle of a range. There's no IV. It's got to show something. There has to be some sort of a level of directional conviction here. And you just don't have it at this point. Now, again, next week we have relevant event risk. Let's see. Let's see if this thing can actually make a decision.
Are you doing anything in copper? I'm still staying away from.
This is one of those things where I don't have a product that I like to take exposure. And I know in the magical world of infinite money, you could say, well, I'm bullish this or I'm bearish that, and just that's it. Good. If I'm right, I'm right. If I'm wrong, I'm wrong. But I'm actually trading these markets with money that I have to spend. And so when I look at this, I go, okay, what product am I going to take exposure in? It's not going to be copper futures full-sized because this is a jumpy market. It doesn't lend itself like, for example, currency futures, gold, silver. It doesn't, micros. It doesn't lend itself to the kind of a thing where you might say, okay, I can look at this, put something on that's small, that's risk defined. If it doesn't work, okay, fine, next trade. I don't want to get overrun. And I don't think you have the kind of instrument here that, unless you've got, let's say, 50, 60 grand in an account as a capital base, just relevant to even the micro sizings, that gives you a way to say, you know what, I'm only going to risk 1 to 2% of equity, which is typically what I look for as an initial kind of, let's poke the market and see if what's going on here makes sense. So I generally stand aside and look at copper more as an indicator.
Copper here, I mean, I'm looking at 48 days. There's a certain extent, it's a decent trade setup. 63% risking 3 to make 1. Not bad. Buying power. That's the lack of compelling reason for me. It just, the margins here have gotten a little bit wider after the tariffs. And so getting in and out, the products are a little bit thinner. If I wanted to do this today, Ilya, there's literally zero trading volume in the 49 strike calls at 48 DTE. So I could get in. I'm sure someone's willing to make me a market, but getting out might be a problem. So I'm not loving it. I'm not
No
loving
one
the
needs that.
coppers. Just not loving the copper situation.
No one
Today,
needs that. No one needs
energy
to have
prices-
money at risk in copper with no way to get out, given how fast that thing moves. Nobody needs that. It's like, yeah, I'm going to strap myself to the front of a drag racer. What could go wrong?
We had 7 down days in a row for oil prices. We find ourselves back into a familiar place where the market resistance becomes support. 50%
What have we been
mark.
saying all
This is kind of the place to be. And
this is it.
As far as trading goes, right, we've been looking at short iron condors wrapped around the midpoint of the recent trading range, and they have worked out well enough so far. I see zero compelling reason to get out of anything oil related that's directionally neutral at this point in time.
If it's directionally neutral, you're absolutely right.
Yeah, just sideways chop. This is a doji down here. Maybe we have a little bit of a rebound back into the 64s next week, but not compelled directionally one way or the other still.
No. And there's not a lot of IV, so I wouldn't get married to anything. But yeah, I mean, this is sitting directly at the oscillation axis for the long-term range. And no, that's not a technical term. Just use your eyes. You have a range here between 54 and 75, give or take. And there's a band in the middle of it around which we've been oscillating. You're at the band. Either you bounce or you break. That gives you some directionality, maybe. But at this point, there's nothing to do here. Unless you're directionally neutral and you want to attempt to claw a little bit of IV out of it.
It's feasible. Natural gas has a better volatility situation, although it's been coming off the board. We see here some stabilization near the lows that we had last November.
Yeah.
Today's news flow, for whatever rhyme or reason, well, makes sense. If you're getting a peace deal between Russia and Ukraine, one would have to imagine that sanctions are lifted and European demand for Russian gas goes up a little bit because we're ahead of the winter months. So 38 IVR.
Yeah. Yeah. I mean,
I'm not touching it though. I've had 2 bad trades in here recently.
I'm not doing this. I'm not doing this. Like, I look at this and I go, yes, okay, this looks like a tradable bottom. Also, this is the Leroy Jenkins of markets. It does not care about anything other than what it wants to do when it wants to do it. So, okay, sure. Let's see. It'll be an academically interesting exercise to see if Russia and Ukraine actually do come to some kind of a ceasefire, what this does. And then ultimately, whatever knock-on effect that has will be an interesting trade in the euro, will be an interesting trade elsewhere. And I'll do that.
British pound with their energy situation.
I mean, I'm looking at that one very closely because I think this is possibly the most interesting currency trade on the board.
Why is that?
So let's consider for a second. This rate cut that the Bank of England did, this brought them to 125 basis points in easing from where they started in July of last year. This is their first step ahead of the Fed. Because people seem to have magically forgotten with all of the, oh, Powell is too late and he never cuts and in the immediate news cycle, the Fed cut by 100 basis points last year. The Bank of England started cutting earlier, but the Fed cut more. And not until this week did the Bank of England actually get ahead of the Fed on the easing front. But the pound topped back in July and has been trending lower. Now, if you look at the outlook from here going forward, you see that for the Bank of England, you have maybe 50 basis points on the menu. And I can look at the Sonia futures as we speak here and tell you it's even less. It's only about 50 basis points through the end of next year.
Isn't inflation going up in the UK?
Oh, yes. And so you get to this and you go, okay, so they're going to cut by 50 basis points between now and the end of next year. The Fed is priced for 125. What business does the dollar have rallying against the pound when there is a vastly more dovish outlook for the Fed? And indeed, the Bank of England only just caught up to the Fed's easing. So you had all this dollar selling at the front part of the year. That made sense. You're like, oh, okay, well, lots of dollar easing. Other central banks aren't going as fast. Sure. Okay, fine. But the pound has been selling off from the peak in July, despite the fact that it has a yield advantage both backward-looking and forward-looking. That's a weak currency. And now it seems to be right up. I know I'm not a big sloped line fan, but we do have a series of lower highs and lower lows. And
no, you're a horizontal man like Josh.
We are at it. We are at it.
We're getting into that teeth where we're trying to back test some, and the dollar dream seems to be fading.
And look at the highs.
I know, I see them. Yeah. I mean, the Canadian dollar here hasn't been able to break through the closing low that we had in mid-July.
I'm short this thing because again, it can't do it. The franc, same story.
This is where I'm short against, because it's like if we get through this area, I could see the trend breaking and the euro already looking a little bit firmer. I might have to cut and run, Ilya. What's next on the calendar?
I mean, listen, if we have to cut and run, we have to cut and run. That's markets. But I don't think we have evidence to do that at this point.
The next 2 days, 3 days, quiet. Well, it's the weekend. That would surmise some quietness. We do have a speech from Fed Governor Bowman tomorrow. She's been calling for rate cuts. So you'll have that in the news perhaps over the weekend. Monday, there are no major data releases.
Not Waller candidate for Fed chair.
Yeah. In any event.
Is she the fourth? That's what I want to know. He's like, we got the Kevins, we got Waller, and one more. Who's the one more? Is it Bowman?
Maybe not.
Because I think the president would love to nominate somebody that the Democrats would normally give themselves a big pat on the back, going, see, we nominated a female Fed chair.
Who's that?
The president would love to poke him in that eye.
Who is the gold bug? Judy. She was almost added to the Fed last time in Trump's term, but she couldn't pass through the Senate. Either way, who cares? We're done here. Up next on Tasty Live, programming continues. Ilya and I are out. We'll see you later, either today maybe, or for first call on Sunday. Dr. J's coming up next with From Theory to Practice. Have a great rest of your trading day.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do, man. I'm so glad that you guys are here. It is really only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube if it is real time. If it is right around 2 o'clock Eastern, 1 o'clock Central on Friday, August 8th, 2025, then you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. And you can let me know, man, what just happened to the metals market in the last 2 minutes? Because gold just dropped about 50 points. So Josh, bring us into the market here. Man, what is going on out there, man? Something's crazy. Something's crazy indeed. Look at this. You've got gold is now, gold down a point. Wow, that's nuts, man. This thing was up it was up 40 points, 45 points. And then all of a sudden something happened at 2 o'clock. And the shifties, man, they're not feeling it. You know, they've lost command of the fastball, much like Walker Buehler is going to do tonight out in San Diego. But you've got E-mini S&P's up 51. You've got the risk-free instrument, also known as the NASDAQ futures, up 218. You've got the boomers up 249. You've got the Russell 2000 futures up 7. And so the market is happy. Like the equity bros are happy, but man, what's going on with the metal crowd out there? Guys, let me know in the chat. I would really like to know what is going on out there because I was getting, counted in for the show, going through the last minute preparations, and all of a sudden I just saw gold drop like a stone. And so let's take a look at the gold really quick. Hold on, let me move let's see here. Let me move that over. Okay. So we move that over. Let's go to gold. Hold on. This is crazy. Like this is some wild stuff, man. So let's go to, I need my Earl Coleman settings. Hopefully he's not watching again today. He kind of jumped out of the bushes at us yesterday. And so, let's do a 1 day. Let's just do like a 1 day, 1 minute. Let's see if they'll give it to us. But yeah, I mean, gold was 34.90. Look at that. I mean, look at that. That is the final boss candle right there, right? That's like, you've been beating up on the lower levels. You've been, doing the lower castles, whatever. And boom, there's Bowser right there. 100%. It opened at 90 and it closed at 64, had a low of 60. So that's a 30-point drop in gold right before the 2 o'clock print. So I don't even know if it was a 2 o'clock number. Like, was it a preemptive number? Like, what happened? Like, guys, let me know out there, man, because I do not know what happened. But man, if you guys have a question for me, drop it in the chat box. We'll try to get to as many as we can. We do have an extra long show today, so we're going all the way to 2:15 Central, all the way to 3:15 Eastern. So this would be a good day to ask me a question if you do have a question for me, because I will be able to get to a few more than I normally do. I normally get to about 1 to 1.5 questions per show. Today, we might even be able to get to 2, given all the extra time. But let's take a look at what's going on in the portfolio here. So, all right. So what I want to do, we've got a few things that, man, gold is like, man, this thing is in play. This thing is moving around. Like, once again, I think that, oh wait, Josh is hooking me up. He's going to issue okay. Thank you, Josh. So we're getting details from the administration about the gold tariff. Yeah. Didn't Trump come out last night and say he's going to start tariffing Costco gold? Like, he started saying, like, man, you buy gold at Costco, boom, I'm slapping 30%. 30% to the big guy, man. Like that's going right on top of your Costco gold. And the market, well, the market didn't really care, but gold skyrocketed because obviously you've got tariffs, you've got additional costs, whatever. Then the cost of goods sold, the cost of goods tariffed is going to go up. That's a new accounting term for us now. That's COGT. And so the cost of goods tariffed is apparently going to get it's going to get rewritten. Like it's going to get whatever. And so all right, thank you, Josh. I appreciate that. Josh said gold will not be tariffed. Now I'm pretty sure that's what your boy said last night. And so but we'll see. All right, so let's go ahead and let's see here. If I go to all right, so AMD. All right, guys. So I mean, we gotta pour one out for AMD, man. And you can pour out a little Natty Light Ice. You could pour out a little banana daiquiri. Although I probably wouldn't pour that out because that stuff is delicious. But for AMD, it looks like it's over. Like we took a shot today, right? We gave it the extra day, and unfortunately, even with all the Nasdaq strength, I mean, if you would have told me today, Nasdaq up 225, like if you would have told me today, like Nasdaq up 225, and the tech market's going to be super strong. A lot of the tech stocks are going to, have a great day, whatever. I would have said, all right, well, it looks like our AMD butterfly's got a chance. Like it looks like our AMD butterfly might actually, we get out for a scratch, even less of a loser, whatever. But that just did not happen. It did not happen at all. You've got AMD at 171 and some change. And we've got a 177, 197, 217 butterfly for AMD, and Autumn took away my LMNTs. She wouldn't let me have one today, so that's kind of sad. But the AMD butterfly is it's over. It's done with. Like there's nothing to do here. There's no time left. It's just gonna go out the pasture and it's gonna get disappeared, today. And then Monday it'll be like it never happened. It'll be like the AMD butterfly was just kind of never a part of what it is that we are trying to do, which we still don't know. But maybe one of these days we'll figure it out. So AMD, there's some AMD commentary for you. Best Buy, man, look at this. Yeah, a little something to thwart the P&L Open Bros today. The P&L day is looking good on Best Buy. We don't worry about the P&L Open Bros. But, man, they're coming for me. I mean, they're coming for you. I mean, the P&L Open Bros, they come for us all. But Best Buy up 90 cents today. That's not too bad. Like, let's sit tight. Let's just see if we can't, get that guy to maybe print something over 70. And then maybe we'll look for an off ramp. Like maybe we'll look for an exit ramp around, I don't know, 75 might make some sense for Best Buy there. So that's Best Buy. But going on down the list here, I'm really distracted by this metals situation because it was just such a significant move, right? And so Josh, thank you so much for helping me out in terms of letting me know what was going on. But I mean, that was like crazy. Like it looked like it was just going to be a pretty normal close, like nothing super wild, nothing super crazy, no big data points coming on down the chutes, and then boom, the administration comes out and says, we're not going to tariff gold anymore. That's crazy stuff. And so it's crazy that they were even going to do it in the first place, I think. But anyway, I digress. So let's go to a couple. Oh, Pinterest. Look at the guys. Oh, it's brutal, man. It's so brutal. Because we knew it, man. Like, we knew it. Look at Pinterest down $3 today, right? I didn't see the earnings call. I didn't listen to it, but I know what they said. They said, we're filing Chapter 11. And that makes sense. It's Pinterest. Pinterest in August. Like, they're going to file Chapter 11 now, kind of get their act together, and be back in October. Be back in November. They got to run this thing. It's like a Christmas tree operation, just like we talked about yesterday. But, man, Pinterest down $3. I don't know why we played this thing to the upside. We just tried to get cute, and we just tried to get fancy, and we did not use common sense. We did not use common sense analysis. And, you can get into all the technical analysis you want to, man. You can find your abandoned babies. You can count your Elliott waves. You can do all those kinds of things. But still, common sense analysis reigns supreme. You can do all the fundamental analysis you want to. You can dig into some 10Ks. You can look at some statements of cash flows. You can do all those things. But common sense analysis is still going to be numero uno. And we missed it, man. We totally missed it. Pinterest. Now, I'll tell you right now. I'm going to tell you right now. Somebody remind me in November. Because let me think. Yeah, it would be November when Pinterest has earnings, right? So Pinterest earnings in August, we talked about this years ago. Pinterest earnings in August, it's like walking over into the corner and picking up a pile of cash. How can you not be bearish? I'm like 35 to 40% sure that that's the way that you should play Pinterest in August. Now, Pinterest in November, that's a totally different story. That's a totally different situation because now everybody's searching for blueberry cobbler. Like everybody's searching for, how do I make these, marshmallow cookies or whatever. Marshmallow cookies. That's not really a thing, but man, that would be pretty good. That would be pretty good indeed. And so remind me in November because Pinterest owes us some money now and we will be coming to collect in November. And so, all right. So Pinterest, unfortunately, that guy's going to be gone too. And we even played it in the 0-day cycle. Man, look at this. Man, I didn't think we were shooting McGavin. Like I wasn't trying to be shooting McGavin. But man, look at this. We're doing 0 DTE, 1 DTE vertical spreads and Pinterest to the upside in August. Like that's going for it, man. Like that's going for a triple in the triangle. Like you're not hitting ground balls now. You're not trying to just lace it up the middle. Like you are really going for it. And we totally struck out. So Pinterest, there you go. But the good news is we actually do have a couple of positions that are working in the portfolio. So number one, Procter and Gamble. Man, look at Procter and Gamble. That's some good stuff right there. So Procter and Gamble down 40 cents today because again, cancel crash, cancel the apocalypse. Cancel iPod Touch. I mean, iPod Touch told us that yesterday was the day. Now, of course, he took a victory lap when the NASDAQ, went down 18 points, as he should. But now you've got NASDAQ, closing in on 24,000. It's like, man, I don't know, dude. Like, I don't know at all. I'm pretty sure that the apocalypse, we dodged it yet again. And so Procter & Gamble down today makes sense because, when people are, when it's just people are celebrating in the streets and it's, party like it's 1999, then nobody's really thinking about soaps. Nobody's really thinking about, lotions. Nobody's really thinking about personal hygiene because that stuff just kind of takes care of itself. And so Procter & Gamble being down today makes some sense. But for our strangle, this is not too bad because now we've got, 145, 165 strangle. It's got the stock at 153. And I mean, you can see right here, this is not my opinion. This is not my, personal just bias or conjecture on my part. This is objective truth. Like we sold the strangle for $2.97. It is currently selling for $1.31. I'm no Julius Spina, but that looks like about 50% of max profit. In fact, I think it's even a wee little bit more than 50% of max profit. So this is one of those situations where, trading is so gray. Like we try to make it as black and white as we can, and we've got the mechanics, we got the this, we got the that, but still, at the end of the day, it's so gray. It's so gray. I think that most of the decisions that you're going to make, there's no clear pathway forward through the forest. They're all littered with gimmies and gotchas. Now, the way that you trade, hopefully there is some clarity around what you're trying to do, why you're trying to do it, what are the gotchas you have to absorb to get there, and so on and so forth. But objectively across the board, I think it's really difficult to establish like writ large, like, always do A, never do B, like those kinds of things. I think it's really, really tricky to do that. Now, there are a couple of things that are, I guess, close to that. Like, I mean, if you really want to zoom like way out, like let's zoom way out and go 10,000, 20,000 foot view. I mean, obviously we're leaning more towards selling options than buying options. But even that is not an always never type of thing because we're buying vertical spreads. I mean, I just bought a vertical spread in Pinterest. I mean, sure, we lit the stack of cash on fire, but that's an irrelevant, unimportant detail. We buy premium from time to time too, and we typically do it in the fashion of a vertical spread. And so again, it's not usually always and never. It's usually gimmies and gotchas. And it's like, all right, I like that gimme. I'm willing to absorb that gotcha and let's go for it. Like, let's absolutely go for it and kind of see what happens. But when it comes to, this strangle right here, I'm not exactly sure why we got off on that tangent, but hopefully you are out there, which if I'm not, you're probably not. So my apologies. Hopefully it made a little bit of sense, but it's only 4.5 minutes of your life you'll never get back. So Procter & Gamble, I think, what I was going to say was 50% of max profit. That's what I was going to say. It doesn't usually make sense to hold for more than that because you're really, I mean, the risk return scales. Remember, when you sell premium, like just remember, whether it's undefined risk or defined risk, I'm going to close the loop for us all. When you sell premium, right? And you're trying to do high volatility, you're trying to do a high probability, right? Those are good things. Those are beneficial things. Those are your gimmies. What's your gotcha, or at least one of the gotchas? Well, usually it's the simple fact that your losses are going to be bigger than your gains. Like if you want high probability, that's not free. Like you're not going to find a trade that's, 75% pop and, I'm going to make more than I lose if I win. Like that doesn't really make a lot of sense. That doesn't exist. You have to make a choice. You have to decide. I mean, do I want to sell high probability and I'm willing to accept the bigger losses if it doesn't work out? That's usually the game that we like to play for all the reasons we talk about on the network every single day. But when you have a situation like this one, the strangle that we have on in Procter & Gamble, it's working. We're at a little bit over 50% of my max profit, which was just dumb luck. If we were at 50% of max profit today, we'd be having the same conversation and I'd be essentially performing the same actions that we're about to perform. But this is actually an even better teachable moment because, just keep in mind, once you spill over 50% of max profit, remember that as you start building up a profit in a position, it could be any position, it could be a strangle, could be vertical spread, could be calendar spread. It doesn't make a difference. Whenever you're building up a profit in a position, you have to remember that your maximum loss now on that position, it's essentially increasing. It's essentially moving higher because you're going to have whatever the maximum loss was on trade entry when you didn't have any profitability, plus whatever you've earned in the trade now. So you're up 50 cents, you're up $1, like you're up whatever. So you have to understand that not only do you have the potential, the possibility that you have to absorb the original max loss on the trade to begin with, but also you are now essentially putting at risk whatever profit you've earned in the position. And so when you get to a point of 50% of max profit, the scales are really tipping not in your favor in an undesirable way to stay in that position. And so that's why once we get to 50% of max profit, that's usually the ceiling. That's usually kind of, the final stop on the train tracks in terms of what type of profit we're looking for from that position. You bank the profit, you close the trade, and you look for something else to do. You could go back into the same underlying the next day if we really like trading that underlying, go into something new. I mean, there's so many things you can do, but this is essentially one of the core facets of what we try to do on a daily basis. And so, being up 50% of max profit in Procter & Gamble, it just doesn't make sense to hold the trade anymore. I know, especially when you're directional, I know that oftentimes like, man, if I just squeeze a little bit more out of this, it's going to help to soften the blow on the inevitable losers that I'm going to have because everyone has them, right? That's true, but you just got to be careful. You got to be really careful because the 50% is turning into 60% is turning into 70%ers. You're going to have a lot of things that reverse course on you. And I mean, there's a reason why, all the tasty research kind of points towards, some of these clearly defined markers, kind of along the way, if you will. So, all right. So there's some Procter & Gamble commentary for you. Let's go ahead and let's close this guy down. We can free up a little bit of capital, which is of course a good thing. And then we'll move forward. So I can't get filled at $1.28. Let's try $1.30. All right, so we got filled at $1.30. All right, perfect. Okay. And man, I see you guys in the chat. I'm gonna get to as many of you guys as I can. I see Scuba Steve's in the house, man. Oscar Martinez in the house. Steve Lim. I see Ash Finn, Gasman, Sam L. Joe, Tony Brandt in the house. Margin Walker. Man, Lobo Does in the house. Lobo does? Yeah, Lobo does probably. Brad Glazier's in the house. Margin Walker in the house. Man, look at you guys. I appreciate you guys so much. And so let's see here. If I go ahead and let me see. If I go ahead and do let me see here. Oh, you know what? I forgot to put my comment in the stream to demarcate my show from the previous shows. So, man, this is going to be the Wild Wild West when I head into that YouTube chat. But that's okay. I mean, is it really anything other than that? Like, not usually. All right, so that's Procter & Gamble. We talked about AMD. We talked about Pinterest. Let's go to ETHA. Man, look at this. Man, look at this. The crypto bros, I mean, they're struggling a little bit today with Bitcoin down $300. Down to 116,000. So that's, that's not too bad. It could be worse, I guess. ETHA. We played it to the upside. I think one of you all brought this to my attention. So thank you so much for bringing this to my attention, whoever you might be. I will take all the credit and I will take it from here. But we sold this guy. We sold this guy for $2.36. It's currently marking at $1.14. Again, I'm no Jacob Perlman, but that looks like about 50% of max profit. In fact, that's almost 50% of max profit on the nose. Like we've got maybe a little bit more than 50%, but not too much more. And so ETHA, this ended up being a really, really nice trade. Now, let me bring up a chart of ETHA. So if I go into my chart here of ETHA, let's see. If I go ahead and let's do, is that a daily chart? Hold on. Yeah, I don't want a minute chart. Now I want a daily chart. So let's go back. Hang on a second, because we got to bring up our chains. So if I go back, so when did I put this trade on? It's been a couple weeks, I think, right? Yes, 7/18. Okay, so it's been about 3 weeks that we've had this trade on, and so 7/18 is going to be right here. Okay, so that's really, really nice. So let me grab man, let's get some lilac in the mix. So this is going to be all of the price action that I've had to endure over the life of this trade. Again, using very, very advanced technology here with the Final Jeopardy pen. But hey, it's lilac. I mean, how often do you see lilac on the internet? The correct answer is never. Only on the Tasty Live network. So here you go. But so we've got this on 7/18. If I go into let me move that over. My strike on this was 26. or is 26. I guess it's not quite past tense yet, but that's going to be right here, right? That's intended to be a straight line. It's not that. It's not that far off. So you can see, I mean, we almost took a little bit of heat, about a week ago, but we were never tested, right? We were never tested. There was really no heat on this position. It got a little bit close there, got a little hairy there for a second, but not really. I mean, until the strike gets tested, in my opinion, there's no reason to really start getting like up in arms about what's going to happen. Just kind of sit tight and let the strategy work. Now, if you want to be hyper aggressive and adjust more aggressively, it's totally fine. But if you want to take a more laissez-faire, more Adam Smith, invisible hand type of approach, then you can certainly do that too. And that's what I personally prefer. But again, there's many, many different ways to shear a sheep for all of my shepherds that might be watching the program. Y'all know what I'm saying. And so if I go to the 26 strike though, and you look at the price action, this is a great trade for us. There isn't really anything else to say. There isn't really anything else to mention here, other than the fact that I wish all trades were like this. If only every trade was like this one. If only every trade was like our Procter and Gamble strangle. Now it is kind of funny. Like it's funny, and I've brought this up before actually. Notice how whenever I say something to the effect of, man, I wish every trade was like this, right? If you actually pay attention to when I say that, when I utter that line or some iteration of that line, it's almost always connected to a strategy that has a lot of like strategic benefits kind of baked into it. So a strangle, obviously, you're selling both sides. You've got theta, you've got negative vega, you've got all that stuff. Even a short put, is it bullish? Yes. But man, you can do really, really well with the stock essentially going nowhere. Right. And so whenever I say that, it's usually tied to some strategy that has all of these statistical advantageous, redemptive qualities to it. Right. I'm not usually saying that with like a vertical spread. I'm not usually saying that with like a butterfly, although maybe I have said that before with a butterfly, because when those guys pay off, they're pretty nice. But again, you've got to know what you're signing up for. I mean, you are taking a directional shot. Nobody knows what's going to happen. Right. It's random. It's unpredictable. Right. Not me, not you, not your favorite, YouTuber, not your favorite talking head, like not your favorite whoever, not your favorite podcast host. And so nobody knows what's going to happen next. And so being strategic with, your strategy of choice makes a lot of sense in a lot of ways. And so, yeah. So anyway, I digress. So let's go ahead and, let's close this guy down because I want to get to, there's one new trade I want to do today, at least one new trade. And then I want to get to you guys, man. Let me see where you guys are at. All right. So we'll close out of ETHA. And that will be that. All right, so gold has settled down a little bit, kind of taking an eye or keeping an eye on gold. So it has settled down to 34.60, which is still some crazy stuff. But again, the move last night was crazy. Like if you go to gold, in fact, here, let's do that here in a second. What's silver doing? Hold on. Where are my Hunt brothers at? Okay, so silver kind of, it wasn't nearly as significant and pronounced as gold, the drop, but silver took a little bit of a hit too. Even though apparently Trump was just talking about Costco gold. I don't think you can buy silver at Costco. I mean, I'd sort of be shocked if you couldn't, since you can pretty much get everything else at Costco. And you can bet your bottom biscuit that silver you're going to get, it's going to be organic. It's going to be gluten-free. Like they got the good stuff at Costco, man. So silver is probably there, but just in case it's not, I'm not super surprised that silver didn't react the way that gold did, just like it didn't really react last night when gold went up a bunch. And so if I go back to gold, let's go to gold really quick before, just before we do this new trade. So yeah, let me just look at like a 5-minute chart for like the last like couple days. That's all I need. Because last night on the futures open, I guess the news about the tariffs or whatever came out like during that 5 o'clock to 6 o'clock window. And so the futures open was crazy, man. Like it was crazy, crazy, crazy. Like if I go back here, you're going to see it like, yeah, like plain as day. Like there it is, right? You've got gold closing. Everything was fine. Nothing super crazy. Gold closes, after the futures closed down last night at, looks like it closed at, 5. Yeah, they closed them at 482, right? And then on the opening 5-minute bar, when the futures opened up, they took them all the way up to 35.34. So they rallied them up That's what, 50 points, 55 points off of the close that was just an hour prior. And so that's a huge rally in gold. That's like 1.5% move in essentially a 5-minute window. I think a lot of this happened actually in the first minute of the open there. And then there was a lot of back and forth, as the market tries to find, the new equilibrium point. And then now today, tariffs go away. And you're kind of right back to where they closed them yesterday. Actually, a little bit below where they closed them yesterday. And so pretty wild stuff. Pretty wild stuff indeed. But all right, let's go into all right, what I want to do is, man, this market move is crazy, guys. I mean, is this market move not crazy to you guys? I mean, it's totally crazy to me. I'm like, man, how can you not, how can you not just do a little something to the downside on the old NASDAQ for next week? And again, it won't be for next week. I mean, we'll do a 42-day cycle, but you have an IVR of 11. So selling premium doesn't make a ton of sense here. Probably buying some premium probably makes a little bit more sense, in the form of like a spread or something like that. We're not gonna do anything crazy, just buying naked puts or buying naked calls or whatever. But I think we go into September with 42 days to go. And I don't really think we need to overthink this, guys. I'm thinking, let's buy a 580. I mean, Amelia did all this analysis for us before the show, so I'm just going to do what she told me to do. That usually works out pretty well for me. I buy a 580, I sell a 570, and I mean, there you go. And if you're new to the show, Amelia is my trading assistant. She's my intern for the show. She does all of my trade analysis, and she is also my 5-year-old daughter. And so in between her coloring sessions, she knocks out a little trade analysis for us. And so 580... That's actually true. 580 to 570. I'll ask her opinion all the time. Like, she'll be coloring like some Paw Patrol, like printout or whatever. And I'll be like, hey, what do you think about the NASDAQ right now? She's like, oh, it's definitely going higher. I'm like, well, that's what I'm saying. That's what I'm saying. That's what we pay all this money for. And so 580, 570, look at the price on this put spread. It's about $4. So this is actually a really, really good example of how the volatility skew in the marketplace can make it very favorable to buy put spreads and very favorable to sell call spreads. So generally speaking, puts are expensive, but put spreads are cheap. Generally speaking, calls are cheap, but call spreads are expensive. And one of the reasons why is simply because if you look at the implied volatility as you move across the strikes on the option chain, you can look at this on both sides of the market, and you'll see the phenomenon that I'm trying to kind of highlight here. If you look at specifically the spread that we're buying, you've got QQQ at 574. I'm buying a 580. I'm selling a 570. And so for those of you that are listening to the program, the audio only crowd out there, we are in the 42-day cycle in the September expiration. And so I'm buying a 580. I'm selling a 570 put, of course. The implied volatility on the 580 that I'm buying is only 13.4. 13.5. The implied volatility on the 570 that I'm selling is 15.1. So that's a 1.5 point spread. And so what that's doing is it's allowing me to buy low volatility and sell high volatility, which is helping kind of suppress the price that I have to pay for this. Now, this is also what makes it so difficult sometimes when volatility is low to sell put spreads for decent prices without getting right on top of the stock price if you're trying to be out of the money. The same phenomenon is going to occur if you're trying to sell premium using put spreads. And it's also it's sort of irrespective of volatility. Even if volatility is high, you're still oftentimes going to see it. It's difficult to sell put spreads. It's easy to sell puts. It's more difficult to sell put spreads. But look on the call side. So on the call side, you see the opposite phenomenon, right? You see the 570 strike call now selling at an 18.7 volatility, and you see the 580 selling at a 17 volatility. So you have the same phenomenon, it's just reversed. And so look at what happens if I were to flip this over and try to essentially buy the same spread but on the call side instead of the put side, you're going to see it's going to be very, very, very expensive. So if I flip this over, if I just flip it over to the call side to where I'm buying a 570 and selling a 580, look at how much that's going to cost me. That's going to cost me $6. That's going to cost me $6 for something that is only $4 in the money right now. There's only $4 of intrinsic value that's baked into this spread because you've got QQQ at 574 and my long call is 570. So the 570 long call kind of starts the strategy. You kind of start with a little bit of a head start in a way because it's $4 in the money already. And of course, when you buy a spread, you want it to move fully in the money. So on this side, it's like, man, I'm not really getting a good deal on the intrinsic value that might be in this spread. But go back to the put spread. Let me go back to this guy quickly. I buy a 580 put, I sell a 570 put. This is like an amazing trade from a pricing standpoint. Now, again, nobody knows. I don't know if this is going to work out. And it's like, I mean, the NASDAQ could be 24,000 on Monday. It could be 24,000 before the close today. I have no idea, right? But I buy a 580, I sell a 570. You've got the stock at 574. I already have almost $6 of intrinsic value, and I'm only paying $4 for it. Like that, from a pricing standpoint, is a really, really nice setup. Now, again, nobody knows what's going to happen. It doesn't guarantee the trade's going to work. Like nothing is ever like that. But the volatility skew in the marketplace is really helping us out here. And also, I mean, there's a cost to the positive drift. That's another element to this. I mean, the market wants to go higher, just, writ large, day in and day out. I mean, it's 53.47. Like, I mean, all the models show that. All the research has shown that. Like, the market is kind of, it's structured in a way to where it's going to naturally drift higher over time. Now, of course, some people think it's all Uncle Jay, it's all printing presses, it's all fake, it's all imaginary. It's like, some of that's probably true. But also you've got growth and innovation and just all, you've got capitalism, at its finest when it comes to, the equity markets, at least in the US. And so 580, 570 here is a nice price. You are battling against the positive drift, of course, but it looks like a decent setup to me. And so I think we're going to do it. So let's see. If I go to, let me clear away my drawings. If I go to, 391, no takers. Let's do 394 just so I can get filled. Okay, so I got filled and I actually got improved to 393. All right, so there's my downside play in the NASDAQ for the next couple of weeks. So once again, what should you be doing? You know the answer to that if you've seen the show for any longer than, a couple hours. And so QQQ, we're playing to the downside. And then, as far as anything else to do, I mean, it's tough sledding, man. It's slim pickings, like if we look at Tom's watch list, to get him that royalty check. Because again, every time you guys click on Tom's watch list, he gets 19 cents. And as we know, the second Range Rover, it ain't going by itself. And so we look at Tom's watch list, though. I mean, there you go, man. There's nothing to really do. That's not associated with earnings. It's really difficult right now. I mean, you've got Target, but they've got earnings on August 20th. You've got Salesforce.com. They've got earnings on September 3rd. You've got some futures like I think ZC is, what is that, corn? Yeah, corn. Man, I haven't traded corn. I think I traded corn a little bit like when I first learned about futures and had no idea what I was doing. Like, not that I know very much more now, but back then I had literally no idea. Like, no idea. Like, I didn't even understand like the mechanics and like the functions of like the contracts and tick sizes and whatever. I think my very first trade was in corn. And, it's one of those deals. I mean, everybody's got a corn story. Everybody's got a corn trade story where it's like, man, I was long this corn contract and I was like, I better get out of this. Or, there's going to be 5,000 bushels on my doorstep. Everybody's got that story. Well, I've got one too. And it's pretty, it's a harrowing experience when you're like, man, when does this corn future expire again? Because, I mean, I like cornbread as much as the next guy, but it's like 5,000 bushels. Ooh, baby, that's a little too much corn. But anyway, we're not going to trade corn today. And then you've got, you got Cisco, you got Crowd. It's like it's tough sledding right now. That's not associated with earnings. You got Florida down 44 cents today, which, I mean, that makes sense. I mean, you can't breathe outside. So I'm surprised it's not down more, honestly. But yeah, so I'm just going to go with the Qs. I'm going to go with the Qs trade. And then that's pretty much it for everything else happening in the portfolio that I wanted to focus on. Let's see where you guys are at. Man, where are you guys at in the chat? Man, I see you guys. Oh, you guys are making me laugh. I'm just catching a couple near the end here. Miko saying Amelia should demand a pay raise. Yeah, I keep her well stocked. Like, I'll slide her some extra gummies when Autumn's not looking. Like, we have our little, we catch gazes, and I'm like, I got you. Like, I 100% got you. Don't worry about it. I slide them to her after she's brushed her teeth. Like, that's what dads are for, man. Like, this is what I'm here for. Like, I understand my role. Jackie W saying Amelia is Dr. Jim's quant. Yes, she is. She is 100% my quant. So let's see if I can get to. Here we go. Let me surprise and delight somebody in the middle. I do see Tomas in the house saying, "Hey, Dr. Jim, we appreciate you, man. I appreciate you, and I appreciate you appreciating me. So thank you, my friend." But I'm gonna go to Rex Kramer 22. Hey Rex, what's going on? I don't know if you've popped in before. I think maybe you have. I'm not sure, but Rex Kramer says, Doctor, give me the news. ATYR, short the 3, long the 2. Oh, are you guys dragging me into the dumpster again? No way. What is this? What is this garbage? ATYR. I can't do it, Rex. Are you the guy who brought me Wolf a month ago? Rex, my man. Like, I appreciate you, man. Like, I love you so much, but I can't do it, dude. I can't do it. Like, Wolf took me down. Like, I know Pinterest filed for chapter 11, filed chapter 7, whatever it was last night, but Wolf, like, legitimately did it. They, like, legitimately did it. I got out of my short put, and then they righted the ship. I think they're doing great now. Like, they're amazing now. And so, Rex, I can't do it, man. I'm going to pass on this. And all kidding aside, I would encourage you to potentially do the same. Simply because, I mean, when you're dealing with these penny stocks, anything under $10, let's say, penny stock, right? When you're dealing with these penny stocks, it's really, really difficult, in my opinion, to build up some consistency. It's difficult to sometimes get good premiums in the options, especially if you want to do like a spread, like what you're suggesting. You know, I would encourage you to, I mean, go to, you know, again, click on Tom's watch list. Like, let's get that man that second range. Like, let's do it. It's up to us. Like, it's our responsibility, right? So click on Tom's watch list. You could even go to the Tasty Default watch list, and I would just focus on those stocks for a little bit, Rex. I mean, that is my overall suggestion. You know, if you want to mix it up from time to time and do a little ATYR, like, hey man, go for it. But I'm going to pass on this simply because I think it was you, Rex, that took me down with Wolf. I mean, I'm just assuming it was you since you're bringing me ATYR. But please know that I love you, Rex, and I really appreciate you. But I'm not gonna do it. And so let's see, where am I at? Oh, here we go. I'm going to surprise and delight somebody else that's right next to Rex. And so away from the numbers, what's going on away from the numbers? All the way from the UK. Man, I appreciate you away from the numbers. Hey, Dr. J, Chipotle underline, next stop 38.96. Man, I don't know. Probably. Awaiting assignment. What's the dividend yield? I think they just pay you in chips. I mean, they've got so many left over because they keep them for weeks, right? I mean, they sell them for weeks. And so after about 2.5, 3 weeks, that's when they're finally like, all right, we should probably do something with these. And they just send them out to the shareholders because it's not too different from what they're giving the actual customers every single day. But I don't think they have a dividend yield. Look at this thing, man. Wow. Chipotle down another $1. It's bad. I mean, did salmonella break out again at Chipotle? I thought that was just a distant memory. But did it happen again? Man, that's something. That's really something. But again, look at this, man. You couldn't have less extrinsic value, and we still have not taken assignment. So again, at this point, it's a fun little experiment. Like, because I've made peace with this. It's fine. I'm okay holding long Chipotle for a while. I'm totally cool with that. So it's like, let's just see. Let's see how long we can ride this thing without taking assignment. And then when we are assigned, then we're assigned. Maybe we'll hold the stock. Maybe we'll sell calls against it. Like, we'll work it out together as a team. But yeah, I really, I can't believe it. I don't think they pay a dividend though. Do they? I'm thinking no. Yeah, no dividend. Yeah, that makes sense. No cash dividend at least. Again, I mean, they've got chips. They should put chips in here because they've got so much inventory that they've got to get rid of it somehow. And so you can expect a few bags every quarter, you know, dropping on your doorstep, along with that, 5,000 bushels of corn for my corn traders out there. But anyway, away from the numbers, I appreciate you so much. And so let's see. Let me go back to the beginning now, because I know that's what you guys have come to know and love. Maybe not love, but you know that this is how we do things. And so where am I at though? I didn't put my comment in. I meant to, but I didn't do it. Let's see. Where am I at? Okay, I think I got it. Brad Glazier, I think, is in the house. What's going on there, Brad Glazier? Greetings, Professor. Hope you have a great show and weekend, man. I appreciate you so much, my friend. We're cleaning the house this weekend, and so that's the big goings on in the Schultz Manor. Like Autumn, man, she lays down the law. Like when it's time to clean, like no questions. Q&A time, non-existent. You just better get to work. You better get to work, all of us. And so that's what we're doing this weekend, which, she runs a pretty tight ship. But it always feels good, though, when the house is clean, of course. And then let's see. Lobo is there overtime on Fridays? I think so. I'm not sure, though. I may not be the best person to ask about that, but I think so. Joe's in the house. Says Dr. Jim Time. Yay, I appreciate you, man. Thank you so much. Yes, Mikos, gold is crashing. What just happened in gold? Josh hooked it up and let us all know. I guess it was a half an hour ago now. Sam L's in the house. What's up, Sam L? Best way to wrap up the week with the legend himself, man. I don't know about that. Dr. Jim. Like a Friday finisher set High reps of market wisdom, zero rest for the P&L haters. Yes, and the P&L bros, which are, synonymous with the P&L haters. And so, but Sam L says, Doc, you were right. Pins should have definitely closed for the summer. That's what I'm saying. Always do the opposite trade and you're golden. Again, I don't know how many times we have to go over this. We're going to have another opportunity next week, right? With this QQQ put spread to the downside. So you're welcome once again. But yeah, man, speaking of finisher sets, if you really want something that's just gonna, man, if you're looking for a way or another reason to just like, man, I really want to ruin my weekend. If you haven't trained yet today, man, hit some legs and finish with some extensions, but slow down the negative on your extensions and try to get pretty close to failure. I did that today. Oh, it's just nasty. It's just filthy, man. Like the pain, the lactic acid, it's all building up. And it can get pretty brutal with not very much weight at all. And so Margin Walker, Dr. J, I'm going to follow you into every trade today. No, I don't do that. But flipping a coin each time to decide if I inverse you or not. How do you know I'm not flipping a coin myself to see if I should inverse myself? And so you become inverted, you're inverting an inversion at that point. And so you got to be a little careful. I would just fade me sight unseen, cross the board. Your pop just went up at least 10, 15 points. But I appreciate you, Margin Walker. Ash Finn, what's going on? Ash Finn, appreciate you, my friend. Thanks for being here and being a part of what we're doing. Let's see. Sam L says, can you believe Pinterest's male audience is booming? Did they say that on the call? They reported over 171 million guys thanks to Gen Z's obsession with wellness, grooming, AI tools, and dad life content. Hey, man, maybe that's it. Like, all kidding aside. Like, again, like... You'll know that I finally, if you can't beat them, join them. Like, here's how you'll know that that's like legitimately like a way of life for me now. When you start seeing some Dr. Jim options ads on Pinterest, like when you're on Pinterest, you're like you, Sam L, and everybody else, Ash, Brad Glazier, all you guys, when all you guys are like, man, let me see what Pinterest has going on. Like, let me look at let me surprise my wife and look up this peach cobbler recipe. But then at the same time, who's going to hit your feed? I'm going to hit your feed. I'm going to show up like, hey, did you know about extrinsic value? Like, did you know what you can do with volatility cross? You're like, whoa. This was not supposed to be part of the peach cobbler, recipe at all. And boom, there I am. That's how you'll know it really is if you can't beat them, join them type of situation. But Sergio's in the house. There he is. Greetings, Dr. Jim. What's up, Sergio? Appreciate you, my friend. I hope that you know that. Tony Brandt, what do you think of an RKLB? Is that Roblox? That's not Roblox. Let's take a look at October 17th expected move short put. Let's take a look. So RKLB, a Rocket Lab. Let's take a look at it. October, 70 days to go. Okay. So that's a little bit further than we typically like to go because it's going to be a lot slower moving. And so we like the 45-day entries just because like that's where, the extrinsic value begins to decrease. That's where it begins to pick up its kind of dissipation over time. 70 days is okay too, but it's kind of slow. It's kind of slow moving at that point in time. And so let me change this slightly there, Tony. Let me go into September. So I could do a September one and I could sell like a 38 put, which is about a 20 delta. And I mean, I'm just slightly inside the expected move in September. But I mean, wow, look at that. The buying power, look at that. The buying power is $400. Man, so I'm glad you brought this up, Tony, because if you have a smaller account, so if you're working with limited capital, let's say you've got 10 grand that you're working with, right? This could be a good option for you. Because again, for an undefined risk position. Now, if you've just started trading, I wouldn't do any undefined risk yet. You're not ready for it. You've got to jog before you can run. You've got to walk before you can jog and all those kinds of things. Like it's coming down the road. It's not a race. It's not a competition. Like, just wait till you're ready for that. That's a whole new world, right? Aladdin style for my Aladdin fans out there. But this is a nice looking trade in terms of those of you with limited capital that do want to do some undefined risk. Now, the thing I don't love about it is an individual stock. And so you do have the individual stock risk that you wouldn't have with an index. But sometimes it can be difficult to find indexes that are around 50 or 60 bucks. You can find them, but they have to be, international indexes. They have to be like some of like the SPX or S&P 500 sector indexes or whatever, which are totally fine too. But man, this really fits the bill from a buying power standpoint. It fits the bill from a pricing standpoint, stock price standpoint. If you're trying to find opportunities for, lower priced, kind of like some lower priced stocks. And so, man, I like it, Tony. Like, let's do it. Let's 100% do it. So let's go in here and let's see here. I'm going to try to, the mid price is 154. Let me try 152. All right, so no takers at 152. Wow, it's really bouncing around a lot. Now the mid price is $1.30. Let's try $1.35. The markets on here are pretty wide, I guess. All right, so we got filled at $1.35. All right, so there you go. So we got Instant Rocket Lab. I like that there, Tony. I like that a lot. And so if you're keeping score at home, I'm not sure if you should fade that or not, because that was not even my trade. So you should probably follow that trade. So let's see. Sam L says, by the way, Doc, what generation are we supposed to be as viewers of your show? Talking about the Pinterest stuff. Yeah, I don't even know, man. Like, I have no idea. Like, I'm a millennial myself. I'm like one of the eldest millennials. I'm not a Gen Xer. My older sister is a Gen Xer. I am not a Gen Xer. And so I am a millennial, born in 1981. And so, I mean, a millennial, I will say this, like a millennial, like my younger sister, born in 1985, is also a millennial. We are very different in how we view the world. Very different in how we view the world. And so a lot can happen in 4 years, man. Like, a lot of things can change in terms of, just like life and experience and all those things. And so I don't know. Like, I try to appeal to as many people as I can. As we kind of talked about yesterday, it's like I want to give a little something to the 65, 68-year-old grandmother that is searching for blueberry cobbler recipes on Pinterest. And then I show up in the feed and it's like, there you go. Like, here I am teaching you about extrinsic value. And so I don't know what Josh just said, something about 1981, but I missed it. And I'll have to check it out after the show. And so let's see if I go to Sergio. There it is. Samuel. I lost my place. Oh, there we go. Mikos. Oh yeah, White House announces change in the gold tariff policy. A new gold order is to be posted in the near future. And so yeah, that's just funny, man. It's really, really funny. And then Jackie W says gold traders must have watched Futures Power Hour segment. Yes, that could be true. And I mean, Chris Vecchio may have unloaded his position. That could also be the reason for the drop, right? Yeah, I mean, if you got Chris and Ilya unloading their gold positions together, like, that would be about 30 points in GC, I would think. And so that could 100% be it. But Andrew Cortado, Dr. Jim, the Palantir strangle, we were up and didn't take the tendies. No, we didn't. We didn't take the tendies at all. And here we are. Now we are, we're back in the hurt locker, but it's okay. It's okay because, again, remember, this is something I've mentioned many, many times on the show before, but this is the perfect time to bring it up again. You've got the stock at 186, right? The strikes on the strangle are 125 and 210. So 125 and 210. So for my money and in my view, this trade is still working. I understand the P&L may not necessarily suggest the same. The P&L might kind of say, it's not really working, Jim. You're kind of losing some money. You're losing some money P&L day. You're losing some money P&L open. Like, it's all there. It's all lining up for this trade not working. And that is true. That is true right here and right now. But it's very helpful to actually fast forward and say, all right, what pathway is this position on through the forest? Like, if nothing else changes, what's going to happen? This trade's going to be profitable. Like, this trade's going to be profitable because my strikes are not in the money. And this is why when you think about, an out of the money position, I'm selling out of the money premium, I want time to go buy whatever, the stock is going to move in the middle. It's not just going to sit there. It's not just going to go nowhere. Like, every stock moves. And especially, a stock like Palantir, like, this thing is a mover. It's a shaker. It's going to go all over the place. And so as it's doing that, as long as it's staying between the strikes, we're in a good spot. There's no reason to do anything. There's certainly no reason to panic, or there's no reason to think, oh man, I got to get in there and mix it up or whatever. I don't think you have to do anything. I really don't think you have to do anything. We're not going to do anything. And so we did lose a chance there, Andrew, at some tendies. But man, we may get like a whole bucket of tendies next week or 2 weeks from now. Where now it's not even the tendy. We're getting like the whole chicken breast. Like, we're going to get the whole deal in the next, 8 to 10 days. I'm like 35% sure of it. So Rancher's in the house. What's going on there, Rancher? Okay, I sold the 80 strike in CoreWeave. Here we go. Liz and Jenny sold the 85. The 90-95 strikes have plus 90% pops for $1 credit. Hey man, I'll tell you what, following Liz and Jenny, I haven't traded CoreWeave in a while, maybe ever. I'm not necessarily going to start today. So I'm going to pass on that, just because I'm not as familiar with the stock. But if you follow Liz and Jenny, man, you should not be fading them. You should be following them. They are two of the better traders that I know, personally. And so let's see. Joe says looks like GLD is back. I mean back down. I mean it's still down 34.58. I know you put that comment in there about 45 minutes ago, but Rancher's in the house. Oscar Martinez in the house. Dr. J, you rock, man. I appreciate you, Oscar. I'm gonna send you that cash we talked about for you planting this comment in the stream. Thank you. Thanks for sharing your energy and knowledge. And yes, we have extra time today. Yes, we do, and it's already almost over. That's pretty crazy. But yeah, we're just doing what we can. We're doing what we can to help you guys in some way, shape, or form. Trying to help you guys with your knowledge, trying to help you guys with your know-how, trying to help you guys, maybe even lighten up your day a little bit. And so yeah, we're doing what we can. And so, but I appreciate you, Oscar. Thanks for being here. Michael's in the house. Michael says, I'm reaching, but this could be an anticipated lack of demand from Indiana's a response to noir increase tariff. Yeah, I think it's all tariff related, Michael. And I think Josh kind of helped us figure all that out. But let's see. Steve Lim, Financial Juice. Yes, a good source of info. I say that seriously. Like if you're talking about Financial Juice on Twitter, like I follow Financial Juice. Like he hooks it up, man. He or she, I can't remember who it is specifically, or it, if it's some entity, like the entity in Mission Impossible, which I haven't seen it yet. So no spoilers, although I have a feeling that Tom Cruise saves us all. But yeah, the White House is to clarify misinformation on gold tariffs. Really? A gold order is to be posted in the near future. Okay, there you go. So the same thing that I think Michael kind of put in there. So thank you guys so much. Scuba Steve, Advanced Money Destroyer. That's correct, 100%. You got it. Tony Brandt says, with the AMD Butterfly, do you just let it expire or do you close it out? Yeah, you don't have to close it out. That's a great question. You don't have to close it out because it's all out of the money. And so you can see that this is all out of the money. So if nothing changes, it's not going to, the mark price is just, it's not going to change very much. The mark price is going to go down to zero. Right now, it's currently marking for 2 cents. If we actually try to close it, I'm not convinced we could get 2 cents, to be honest with you. And so that may not be quote unquote real. It might be marking there because of the spreads and the whatever, but when you actually go to get filled, you have to get somebody to take the other side of your trade. And so if there's nobody out there that wants to take the other side of that trade, why would they with, an hour left in the day before it expires? It doesn't really make a lot of sense. And so when you have a butterfly that you miss, if it's out of the money, just let it go. It doesn't matter. If it's in the money and you miss it, so this would be where you got the directional move that you wanted, but the magnitude was too great. So you overshot it on the upside for a call butterfly. You overshot it on the downside for a put butterfly. That's where you would actually need to go in and close it out because everything would be in the money. Now, if you didn't close it out, is it the end of the world? No. Everything would cancel out come Monday. You would just pay the assignment fees, which are a lot more significant because closing orders on options on Tasty Trade are zero. There's no commission to close your trades on Tasty Trade. So that makes a lot of sense to go ahead and close it down just from a cost standpoint. But in terms of like positional, or in terms of what position you have on the other side of the trade, it's not going to be a problem even with an in the money butterfly. And so hopefully that helps though. Let's see. Andrew Cortado. Andrew Cortado says, I thought Dr. J was joking about doing the opposite. No. And I know there's a lot of B- humor on the show, and it's going to keep coming at you, and it's going to stay right at that B- level. I can assure you of that. But no, you should be doing the opposite. Now, from time to time, I'll catch a hot streak. From time to time, like I'll give you a 12-game hitting streak, Roman Anthony style. Like that's going to happen. But it ain't happening now. Like we're about as cold can be. And so, yeah, I would stick with the opposite trades for a while. Weiss is in the house. Hey, Dr. Jim, I'm late to the show, but you're here today, man. So thank you so much for popping in. And, your boy needs that watch time. So I appreciate you guys. Sam L says, another 75 minutes with the doc. We'll never get back. That's correct. St. Pete's underappreciated wizard. And the Versa grips of our trading gains. Again, we've talked about Versa grips before. If you don't have a pair of Versa grips, I don't think I can take your trading, suggestions seriously. Like, if you've got an extra 70, 80 bucks lying around, it will be the best 70 or 80 bucks you've spent. It's way better than so many other things you could do with $70 or $80. And I know that that's not necessarily an insignificant amount of money, but if you're serious about trading, you've got to have a pair of Versa grips. And you can even get whatever color you want. Like, it's amazing. And so, yeah, take your strap game to a whole new level. Gasman's in the house. Hey, Dr. Jim. Would you ever sell covered calls when assigned shares like Best Buy? Yes, absolutely. So that, like, if we get assigned on Chipotle, that might be what we do. And so that is a very classic next step to a position that you took assignment on. Now, the thing to consider and why you see me not selling calls in Best Buy is, if you are like really far down in terms of your basis, like you look at Best Buy here, right? You can see that, I'm 85. I was assigned to 85. You have the stock at 69, right? So if I go into like a trade page here, let me show you. Best Buy has earnings on September 4th. What could possibly go wrong? I think we'll be okay. So we go into September, 42 days to go, right? So you can see that this is our basis on the trade. Now I've collected some premium from the original trade, whatever. So this is not our true basis. Our true basis might be 82 or 81 or 83 or whatever, but I'll just use this number to make it really easy to follow. The tricky part about you take assignment, the stock is down a lot, you're trying to figure out what to do. If you want to sell a call when the stock is down a lot, you're not in a great spot to do that because you either have to do one of two things. Number one, you sell a call above your purchase price on the stock, so above your basis. But the reality is you're not getting anything for those calls. I mean, you can see it right here. I have it right there in the yellow, circle there. I'm getting 20 cents to cap my upside. And I mean, what if what if Best Buy merges with ATRY or whatever Rex had for us earlier? Like, what if Best Buy just scoops it up? Like, that could be really good for Best Buy. Could be really bad for Best Buy. I don't know. But I'm just saying, like, crazy things can happen. And now your risk is capped on the upside. It's like, man, that doesn't really make a ton of sense. Okay, so I don't like that move because if I'm going to sell premium against a position, I want there to be a little bit of juice. I want there to be a little bit of financial juice, right, in that premium that I sell. Again, another shout out to my boy Financial Juice. They're giving us some good news on the internet. But the other option here is, what if I sell something below my 85, entry price? So there's my 85 entry price. Grab my trusty lilac. What if I sell the 77.5, let's say 20 delta? I sell it for, it looks like about $1.15 on the mid price. I don't love that move either, to be honest with you, because now if Best Buy does rally back, you've locked in a loss. Like if Best Buy does rally back, now you're in a situation where you're not going to be able to get out of the trade for a scratch. Now, I like this move better than the previous one though. Like if you're in a situation where you're like, hey, I just want to be done with this trade. I want to get what I can get and then just find an off ramp and just be done with it. Then this is the type of move you should make. You should sell some underwater call and just call it a day. Some under your basis call and just call it a day. And if the stock rallies back, it's like, hey, I got what I came for. Like I got a little bit of premium. I got a little bit of stock move back in my favor. And I call it a day. I close the trade. I'm done with it. Also though, option number 3, which is what I'm doing in Best Buy right now. If you have a long-term bullish bias, or even a short-term bullish bias, you can always just hold the shares. Like you can just hold the shares. Like you can just play clean delta to the upside. There's no rule that says you can't do that. Like there's no gatekeeper that's like checking like ticket stubs. Like you got any long shares? Can't come in here. Like, no, like that's totally fine. And so that's what we're doing in Best Buy. That's sort of what we do in Starbucks from time to time with this investment style covered call. And it's what we're essentially going to be doing in Chick-fil-A here, the next couple of days when we finally get assigned. And so hopefully that helps a little bit there, Gas Man. But great question. Really, really good question that I think can be helpful for a lot of people out there. And so, all right, so let's go into, let's see, if I go to, so Joe says, I keep snatching defeat from the jaws of victory on Costco. I bought a share at a dip and the stock kept moving down. I put on a credit call spread on it, so it has shot up. Minus $35 a share, 160 on the spread. Any ideas on a trade when the IV is literally 0 for Costco? Okay, so you bought a share, so you bought some shares at a dip and the stock kept moving down. So you put on a credit call spread on it. So it has shot up. Okay, so a couple of things to think about as far as Costco is concerned. So let me bring up Costco. Did you say you didn't say where the strikes were on the call spread? Okay, so here's a couple things to consider. And this could be really, really applicable to you. When you have some shares, the stock has gone down, right? If you just sell a call, then what that means is, the short call and the long shares, beyond the strike price are going to cancel out. So you're kind of left in the lurch a little bit where it's like, I'm in a situation where I can't make any back beyond a certain point. But if you sell a call spread, so now I have a call spread on where I'm actually short, you didn't share the strikes. So I'm short, the 950 and I'm long in the 960 or whatever it might be for Costco. If the stock rallies back, like if the stock does rally back and the call spread goes fully in the money, once the call spread is fully in the money, your shares are still going to be able to, essentially enjoy any gains beyond that long call strike. because the short call and the long call cancel out. The long shares can still pick up value. And so you may have to assume maximum loss on the short call spread. But again, if you stay in the trade and the stock keeps going higher, then you can still make, dollar for dollar gains with the underlying stock price as the stock does move higher. And so that's a benefit to selling call spreads against shares as opposed to just selling calls. Now, what's the gotcha that comes alongside that gimme? Because it's always there. Well, the gotcha is if I sell a call spread, I'm not going to pick up nearly as much premium as I would as if I just sold a naked call against the shares. So I guess a naked call is a bit of a misnomer because it's not really naked. But hopefully that helps a little bit. So let's see. Ichabod says, I never understand buying contracts for earnings. Yeah, I mean, we don't typically, around earnings, if you want to play direction, I would do a spread. I wouldn't buy a call or buy a put because you'll get crushed on the volatility crush after the earnings call. But yeah, around the earnings day, like on the earnings day, if you want to play it directionally, like you can certainly do that. And so, so let's see, Mr. Pillow's in the house. Happy Friday, Dr. Jim. I'm here for whatever it is we're trying to do. Yeah, I don't think we're going to figure it out. We haven't figured it out yet. And it's already been an hour, as gold is still going down. So now it's 34.52. Man, that's crazy. That's some crazy stuff. And so let's see, where am I at? Ichabod, Mr. Pillow, iPod Touch in the house. What's going on, the iPod Touch? Who correctly identified the apocalypse yesterday. The 17-point drop in NASDAQ, that was iPod Touch. So that's a good call. Dr. Jim, I will bet you $100 you don't have a Pinterest account. Well, so you would be wrong, actually. I do have a Pinterest account. And, I've gone through some baking phases. And so you don't even have to pay me. I just appreciate your support. But I'm going to sneak up on you on this one in that I've done some blueberry cobbler searches in the past. I've done some like, hey, how can we spruce up the patio searches in the past? And so I'll surprise you from time to time. And so, but I appreciate you, iPod Touch. Let's see. Ashvin says, I feel like Pinterest is so 2013. Yes, it most certainly is. But apparently, again, they're appealing to, man, that's a shocker, though. The young male demographic. That is obviously not the demographic that I would think would thrive on Pinterest. But I haven't been on there in a while. I really haven't been on there in a long. Maybe they're reinventing themselves where they are more appealing, with like wellness and, grooming and things like that. Go for it, man. That's awesome. So, Laid Back Trader says they got me on that gold move. And so, yeah, apparently they did. So David C says, hey, Dr. Jim, how do you modify the approach when rolling out and down short puts with CL when it's in backwardation? Thanks and have a great weekend. Okay, so David C, thank you so much. So you've got CL. So let's go to CL. I haven't looked at CL in a while. So if I go to CL, then let's see if I do. All right, so I go to CL, and if I go to it's in backwardation. So CLU right now is that's going to be September. And so let's see here. What's the next one? What's the next letter going to be? October, is that V? I think that's V. CLV is October. Okay, there you go. Because oil's on a monthly basis. Okay, so I've got CLU and CLV. Okay, so you can see, David C is correct. You do have some backwardation in the oil right now, in the oil, like the Facebook. You do have some backwardation. So how do you deal with rolling a put? Okay, so I don't know what strike you have, but whatever strike you have will apply to what we're saying next. So you're in the U cycle right now. So let's say you have, if you have an option that's like right here, let's say. So I have this option that is in the U cycle with 7 days to go, right? So you've got that. And again, the trick here, David C, when you're looking at an option chain is you have to look very, very closely. You have to look in this kind of, it's not really a column, but in this vertical landscape and look at which underlying that option is tracking towards. It's going to be right here. So you see all of those are tracking to you. And then let me grab, I'll grab magenta. You can see now it spills over and it starts tracking to V. So that is why when you look on the one option chain that tracks to you, it's going to look a certain way. You look at the other option chain that tracks to V, it's going to look a totally different way because it's tracking to a different underlying price that we see up here, right? Okay, so let's say you want to roll out and down, right? So I'm just going to assume, let me just assume that you have the at the money strike. So let me just assume that, things that, you sold the put, oil's come down, and now it's at the money. And again, if that's not the case for you specifically, whatever we say in the next couple of minutes should still apply, at least in a general sense. So if I open up, let me delete all of that. If I open up the 7-day cycle, you have the at the money strike, which I'm just going to say for our purposes right now is 63.5. So this is 63.5. Okay, so what you would need to do if I was going to roll this thing out and down, I would want to buy back the 63.5, right? And then I would minimize that. Or not, I would minimize this cycle, but I would delete that circle that I had on the screen, which you may not have on yours. But if I go to, if I minimize August, so let's say you want to sell something that's, let me go all the way out to like September 17th. So if I go all the way out to September 17th, which is essentially the last V option that's out there, you can see after this, it spills over into X, which must be November, because I know Z is December from doing all the financial futures. And so if you want to go to September with 40 days to go, that's going to be V. But remember, the at the money price for V is 62.78. So it's going to look a lot different, right? So if I go ahead, let me delete all that. Let's open up September. The at the money price here is going to essentially be, they don't have a 62.75 strike, but they do have a 62.5 strike. So if I wanted to roll out, so if I just wanted to roll out, I would, and keep the same relative strike proximity, I would roll out to this option right here, the 62.5. You'd be rolling from the 63.5 to the 62.5, and that's essentially the same position. That's an at the money put. And if you did that, like here, if I just actually do it, you're going to see it's going to be $1.49 credit, which you see right down there. Okay. Now, this is not really rolling, quote unquote, down, because you haven't really rolled down in terms of the relative nature of the strike with where the actual underlying price is. It looks like you've rolled down on the actual option chain, but you haven't, because again, the V contract is actually, it is in backwardation. And so you need to obviously be aware of that. Okay. So how would you roll down? Well, it's not that difficult at this point. Now you just take this V cycle, the 62.5 that we have on, and maybe you roll it down to like a 61.5. And so now, instead of being at essentially, the 50 put, you're at the 40 put, which you see right over there. Now, your credit goes down, of course, just like it always would if you're not selling the at the money strike. You're going to get less credit. That's just a general kind of axiom of the, derivatives markets. But this is how you would roll out and down if that's what you're trying to accomplish in oil with something that's in backwardation. The same thing applies if it's in contango and it's a different futures product. Just make sure you're looking at kind of that ticker that's on the option chain to see which expiration, I should say, of that product that specific option is tracking to, because that will make things a lot more doable when you're trying to, kind of work through the strike selection. And so hopefully that helped them a little bit. But that's a great question, David C. Very, very good question. So Brian Dowdy in the house. What's going on there, Brian? Hey, Dr. J, healthcare stocks have been going down, like Eli Lilly, UNH, Moderna. Can we put on something like XLV? Yeah, I guess we could. What is XLV is, yeah, this is going to be one of those X that I kind of referenced earlier. So this is, this is one of the X indexes. That's kind of one of the sectors of the United States economy. This one happens to be healthcare. It's $130. I mean, the IV rank is 33. Excuse me. That looks pretty good. I actually like this. I like this trade a lot. We are kind of getting, okay, I mean, I've got about 10 positions. I've got about 11 positions on. I don't normally like to carry too much more than about 12. And I mean, next week we do have, what's happening next week? Is anything happening next week? Man, if I'm not mistaken, on Tuesday morning, guys, this is not good. On Tuesday morning, there's going to be an economic print that is going to be unlike any economic print that has come before it. We have a CPI number coming out on Tuesday morning. Guys, I have never, ever seen a more impactful economic print coming on down the chutes than that 8:30 a.m. print on Tuesday morning. So that CPI, you've got the weekend. You've even got Monday to get all your affairs in order. So I would not take this lightly. This could be your last chance. I would make sure you get all those things squared away before Tuesday morning. So, Brian, I think I'm going to pass on this just because I do want to leave some powder dry for that CPI print. So just in case we do sidestep the apocalypse, again. I mean, we got through iPod Touch's apocalypse, which was quite a surprise to even me. And so I'm going to leave a little powder dry, but I appreciate you, my friend. Let's see. Margin Walker setting the calendar reminder to remind Dr. Jim about Pinterest in November. That's exactly what you should do, my friend. And so, yes, please do that because, again, that's a slam dunk. That's a slam dunk. And by slam dunk, I mean it's one of those half-court shots where they pull some guy out of the crowd that he never makes. And so, Jamie, Jamie is in the house. Appreciate you, Dr. J, man. I appreciate you. Appreciate me. Could you talk a bit about the difference between dollar wide wings versus delta wide wings? My instincts are to sell delta wide to benefit from skew, but y'all don't do that. I don't, yeah, we typically, I think the difference, generally speaking, so thank you, Jamie. Thank you for being here. So generally speaking, the difference is going to be marginal. So the difference is not going to be that significant where like, you're able to like find some type of discrepancy or some type of like edge from like doing one relative to the other. It's kind of like, it's very similar to like if I go to like the option chain, like if I go to any option chain, like XLV, for example, like, this is actually a perfect example. Like if you look at the expected move in the center, that's the copper strip. That's one version of the expected move. Another version of the expected move is the blue dashed line. I mean, I get this question all the time. I get this question constantly. Like, Jim, what's the difference between the blue dash line and the brown copper strip? And it's essentially this. The blue dash line, and this isn't the question you answered, but it's going to be, some version of my answer to that question. The blue dashed line is the one standard deviation marker on the theoretical normal distribution that is at this point in time based on all the real-time parameters in the market. Okay, it's very theoretical in nature. The copper strip is just essentially 85% of the at-the-money straddle. Now, there's a little bit more that goes into it. I think it's maybe a proprietary equation that Tasty Trade uses, but that's essentially it. It's 85% of the price of the at-the-money straddle. So that's a more practical version of the expected move. That's why we gravitate more towards that than using the blue dash lines. But they're both giving you some measure of the expected move. Same thing with your question. If I'm trying to measure wing width, should I go with delta or should I go with dollar wide? I think the research team has looked at this actually before. In fact, I'm certain that they have. If you were to Google this, like, Tasty Market Measures, delta wide wings or dollar wide wings or whatever, you'll probably find some segments where they've gone over this. I just think being consistent is the most important thing because I don't think the differences between the two are going to be that significant that it's going to like completely drastically change whatever it is you're trying to do. And so hopefully that helps them a little bit. O'Brien says there is no overtime. It's Friday. Okay, I didn't know. I thought maybe there was, but apparently not. And so let's see. Margin Walker talking about overtime. There you go. O'Brien says TTD is down 30% today. What a move. I'm glad I didn't play that. 37%. Yeah, I heard that thing was moving around quite a bit. TTD is that the trade desk. Okay. Wow. Whoa. Look at that. The 38% drop. That's crazy. That is some crazy, crazy stuff. Indeed. And then let's see. Margin Walker's in the house said, you said my name twice, man. Now it's been like maybe thrice or even more. But should you buy a lottery ticket or sell 0 DTE in the money premium? Man, now that is a power move. I can't speak to the lottery ticket angle, but man, if you're selling some 0 DTE in the money premium, man, you, sir, are Shooter McGavin. Like I'm pretending to be with these Pinterest verticals and this other stuff, but that is a power move. And so I appreciate you. And Andrew Cortado, I appreciate you so much saying he loves the Dr. Jim segment. Man, I appreciate you guys. I mean, you guys are the reason that we can do what we do, man. You guys are the reason. So watching the live show, watching the archives, watching all the stuff we have on YouTube, like whatever, coming to the live events. We've got another one coming up in October in Detroit, which is going to be amazing. But it's all because of you guys that we can do what we do. So thank you guys so much. But I'm just about out of time. I've got to run. I appreciate you guys so much. If I can help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello and happy Friday. Well, we're ending the week on a green note. Kind of a mixed bag on this end for me. I've got 30 different short positions. I just looked. 17 are down, which is good. Remember the short, and 13 are up. And none of them are up nasty. Don't have any axons out there waiting for me. And some of the down ones are down pretty good, like MDB, Mongo database. So even with absolutely green market, NQ up hundreds of points, lifetime high, RTY green, ES green, still hanging in there. So on the whole, a good day. The only kind of black mark is that big old cube put position, which I'm still hanging on to, but because it's got like 70 days left. It doesn't expire till October 17. So we're just gonna diamond hands that one, I guess. Next week is pretty heavy on inflation data. They got the CPI before the open on Tuesday. The PPI strangely skips a day. It's not going to be till Thursday, but people usually don't care about that. But yeah, earnings season behind us, all the fun games of that gone. Now we're back to, and even the trade wars seem kind of to have died down. So there's not a lot to budge things here and there in this quiet August. So let's look at what we've got before we wrap the week up. Here's the spider. We are in the vicinity of lifetime highs and might be a lifetime high close. We're below where we were on the 31st of July, but that was a down day and it closed down here. So it looks to me like the got a pretty decent chance at a lifetime high close on the spider, because we have for the whole of this week been just kind of fighting back. So we started Friday, Monday, Tuesday, Wednesday, Thursday, Friday, kind of toggling each day. Red, green, red, green, red, green. So if you're feeling a little seasick, that's why. Can't make up its mind. Here's the diamonds, which are up more than 0.5%. In the same zip code as lifetime highs, but not quite there. The peak was back on the 23rd, and we just kind of hanging around here, just like we did here and here. One of these consolidation periods, put your feet to sleep. Over in China, FXI down a little bit, 0.17%. I pointed out the key item here is this blue trend line still. And so it broke here, and since then, just resist, 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 resist again and again. So the idea is that we've got plenty more potential movement on the downside than the upside. Earnings wise, this is a stock I've never traded. I don't even know what they do really, but the big news was Trade Desk Inc., TTD, and it's getting walloped by about 38%. And so we're trading at price levels now that we were trading half a decade ago, which is pretty amazing. It had been a real superstar for a while there. Since then, it's been just all over the map. Lifetime high on this not too long ago, back in December, and we are well more than, gosh, looks like about 60% or more drop from that level. So that's the big loser today. Something I do have a position in, which is down nicely, is microchip, MCHP, which I believe reported last night. We've got a nice tumble on this one. Strictly speaking, that stop could be a little looser, like so. There's the price gap. So I think that's the more appropriate level as a new stop loss. But MCHP taking a fall. And let's just kind of doll this up a little bit to highlight that reversal pattern. Pretty nice little head and shoulders there. So yeah, it's little, as you can see, but it's going the right direction. So far so good on MCHP. It's pretty minor though, because NVIDIA keeps raging higher, therefore SMH keeps raging higher. As we look at SMH, it's quite close to lifetime highs. It has been ever since a month ago, just really going nowhere fast. Tons of smoke, no fire at all. Yeah, just grinding away. Another high-tech darling, which is blasting higher and is showing lots of fire, is Palantir PLTR. This one has gone from a few dollars a share back in December of 2022 up to the triple digits and approaching $200. So, you know, quadruple percentage gain on this one, and there's the lifetime high. The earnings shot up like so, and since then it's just padded them and padded them and padded them. So this is just can't imagine anybody would still be short this, what the short interest is, but this has been a tremendous rally on PLTR. Also, breaking the bounds of its trend line is Apple. Tim Cook, the CEO, had a nice meeting in the White House yesterday, presented the president with a 24-karat base and a pretty glass thing, one of a kind. Don't know if that has to do with any of the trend line breakout, but there's a big burst of activity here. Apple had been really down in the doldrums below this dashed line, and just this week, on Wednesday, Thursday, and today, it just shook that off and blasted higher. And so, not a lifetime high. Apple's been a pretty bad underperformer for this year, but it's the best move it's had in quite some while. So yeah, Apple having a very welcome good day. Gold, GLD, is pretty much unchanged. And here too, this has gotten kind of dull. This has been just exploding higher and terminated on April 22. On April 22, it opened very strong and has been just banging around ever since then. It's been quite range bound for May, June, July, August. So 4 months now, third of a year, just grinding away. You know, gold is something like a $3,400 critter, give or take a few dollars. And of interest to me, as I said yesterday, is the miners. GDX is up again, but I gotta say, it's looking really long in the tooth. And so, yes, it's up today, but I would expect this to experience some profit taking. And as I said, I don't think this is going to be a big move down, but I think it's a pretty easy shot back down to the support level, like so, which is admittedly not far from here. It's only $4 away, $3-4 away, not much, but this has gone very far, very fast. So looking for some short-term weakness there. Over in digital land, Bitcoin, the king of kings, which I think is well over $2 trillion market cap now. This is still at the mercy of this trend line. You can see here that, yes, it's at a very strong 6 or 7 days, but it's just been grinding below that trend line. This was the peak still back on the 14th, over $123,000, and it's been struggling ever since then. You know, it's not doing poorly. It's only about $7,000 below where it was at that peak. But it's at best taking a breather at these levels. One item that has taken a bit of a fall today is crude oil. There's rumors about maybe a Russian truce, anything to liberate the oil controlled by Russia, or which has been sanctioned out of the markets, would create a lot of new supply and, of course, batter the crude oil price. CL has been in the throes of this right triangle formation for literally years, approaching half a decade. It is a monster pattern, even from this great distance, which goes back to Ronald Reagan's first term. you can see the size of this massive pattern here. And over the course of the past couple of decades, we've had three major tops. We had this one here, which produced a big fall. This one here, pretty big fall. This one here, which was so monstrous it actually produced briefly negative prices in the futures markets. And then now we've got this one, which is bigger than all of them. It seems pretty steady at these levels, but it's still a very large pattern. I think would be weakened sharply if bad global economic news started to tumble out. So Intern, I'm still short a couple of energy-related items like HAL and COP. As far as XOP itself, I don't have a position, but this will inform, I think, all those other energy shorts, and it's looking potentially like it could still break down. But I've not participated in the big ETFs for energy. Tesla got some good news today. They got a thumbs up on robotaxi in the Austin area. And so they are pushing higher, over 2%. It's been pretty quiet, relatively speaking, for some months now. But as you can see, it's sort of oscillating in milder and milder waves. But it has found for a long time now good support at this double Fibonacci. And it's sort of range bound at this moment. I mean, no matter how much good news flows in, it's going to have a real hard time bumping past about this 384 level, I would say. But it's having a good day for now. And of course, robotaxi is very important to the company's long-term future. I mentioned but didn't show the chart yesterday of Lucid. Not good. This is, of course, the Tesla competitor, much smaller competitor, sort of the protest vehicle for people who just don't like Elon personally. And that's not much of a business model, it seems. They're down about $2. Most EV-related companies, be they ChargePoint or any of the about dozen EV car makers, they all pretty much stink as far as charge goes. The only good one has been Tesla over the long haul. Just plucking out some favorites from the short port. CrowdStrike still my darling. Not down huge today, but going in the right direction. We're down over $2 on CRWD, about 0.5%, which on a multi-100 point green day on the NQ, not bad. The pattern's complete. It's driving lower, so hanging on to that one. Looks like a beauty. Hyatt, symbol H, kind of a sloppy chart. Not going to be as richly valued as a tech stock, but it too is heading the right direction, down again about 2%. Rigetti, which was my nutty short that I was a little nervous about. So far, so good. We peaked on this one back on Tuesday, and it's been subtly slipping lower. And this is even with the other quantum stocks, QBTS, QUBT, up today. So I'm liking that one. This looks like it's been a good choice so far. Here's a little kind of seldom seen one, Green Plains GPRE. This is a funny one. It's been in this weird descending channel for a while, had this huge top here. My basis for this one was pretty simple. Over the course of many, many years, there's just been this channel, and we've been banging within the channel ever since 2013, and we got quite close to the top of it. And so I shorted it, and it's been just slipping nicely, like so. And so I have a long-term eye toward that working its way lower and lower within the channel. And of course, our old buddy Royal Caribbean behaving itself still. And this one's down over 2%. And it's been a good week on the short side for this one. Friday, Thursday, Wednesday, Tuesday, Monday. Pretty much, good solid week. And hitting a new low here, short term. And yeah, looking really, really good. There's a lot to like about the channel. I like the violation of the channel here, which shows kind of inner weakness. Shut up, dog. And then we didn't even manage to reach the top of the channel up here. So yeah, looking good in general. So just to wrap up with a couple of other symbols, IWM, small caps, up a little, about 1/3%. This is I'm still short this one. Very tight stop on this, anchored to yesterday's high, 222.84 being that high. And the cubes, a little bit of a nemesis for me right now. Lifetime high on this one. Looks like a lifetime high close. My puts are out of the money at the moment. They're these 565s right here. As I said, expire on October 17th, so about 70 days left. Anywhere down here, that's where we want to go. If, just to pretend, if things, just a meteor was heading toward us in imminent destruction, this is the fall zone here with a very firm support. If we can just dream a little dream down at 490.99. But I'm not thrilled with the fact this is pushing lifetime highs because highs tend to beget new highs. So I might trim this back for the close, getting a little antsy about this one. And last thing, which should be informed by next week's inflation data, TLT off about 0.5%. You know the drill. It's a big pattern. It's taken a long time. It may not complete, but I'm going to keep an eye on this. So if we ever cross under that green line, that'll be a pretty big deal. So anyway, I hope you've had a good week and you have a good weekend, and I'll see you here on Monday. Good night. Bye-bye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
What did you get up to last night?
I had a rough night. I was doing webinars till 7 o'clock.
Oh, no.
Yeah.
It's hard being a cam girl.
It is.
You had breakfast for dinner?
Breakfast for lunch, breakfast for dinner.
Oh, no.
Yeah.
Was it even good cereal?
No.
Well, yeah, I was like, what kind of cereal do you eat?
I had some...
You're like a Mueslix guy.
I like Raisin Bran.
Okay.
Special K and granola. I like oatmeal too.
Okay, congratulations.
We weren't talking to you. I like cream of wheat.
To me.
I like cream of wheat.
I was literally talking, and he's just like, I like oatmeal. It's like, okay.
I'm gonna tell you right now, St. Bart's.
Yeah, here we go. See, I knew I'd get Tom going. I have to
only
just talk about St. Bart's.
I've been there a couple times. I love St. Bart's.
Couple of times?
Couple times.
Are you sure it's not going to get you in trouble? Would you like me to get that cut out, or would you like to keep that in there?
Keep that in there.
Okay.
What's the other?
Tough
What's
guy.
the other?
Wait till I tell about St. Bart's a couple of times. Wait, I could be wrong, but wait, I have it here on film.
Wait a minute, hold on. I've only been there once. What do you mean?
I already texted how many times you've been to St. Bart once. Like, ooh, do I have news for you?
I'm getting tickets. You're coming with.
I'm not.
Yeah, you will. I'm buying good seats, and you're gonna
I'm
come
not sitting through it.
You're gonna tell me Elton John's no good?
Radio was
one of the worst concerts I've ever seen in my life.
In the day, you're gonna tell me Elton John's no
In the day, what? I didn't see him 40 years ago. I'd rather see Lady Gaga.
So
you're a freaking poser.
So then I said, hey,
what? Give me one name of one Lady Gaga song.
I don't know the names. I just like before we get all excited here and start, using those little what do you call those things that you blow out on New Year's Eve?
My what do you mean? What?
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the closing bell here on South Off on a Friday. Even the S&Ps are up 44 handles. They got as high as 64.19. They're 64.10. Just a skosh off of their highs. After we left the show, they just slowly climbed and then sat there for most of the day. NASDAQ up 108. That's your leader in the clubhouse to the upside. Russell up 460. That was the leader early on. Took the role of being the dog and has stayed there, up $4.70. Dow up 206. Volatility in by 75 cents on up under 17, 16.95. It was just the beginning of the week when we were flirting with 20 on volatility. It is now 17. Bonds down 19, 14.30. They were kind of soft all day. They tried to stay bid a little bit, but they've slowly and surely have gone down over the last hour or two. Bitcoin down 1,200, sitting right at 116,870, but still a good week for Bitcoin since Monday at least. Ethereum, that's your big win of the upside, Sadnov, up $172. That's a big 4.5% move. Oil down 15 cents, doing nothing. Gold took a big reversal, Sadnov. Look at the range in gold here, just about $80 top to bottom. It's unchanged at $34.52. Silver up 14 cents. Some of the stocks that we looked at earlier today, on the downside, it was TTD for earnings down $33. The range here was really only about $3.5 top to bottom after the stock came down by about 30 some odd percent. It really just sat there. Twilio down 21, Dual DUO down $20, Snow down 14, and Lilly, after selling off yesterday, continues to sell off today, down 13. DoorDash down $11 on news that Josh will not be using DoorDash anymore since they screwed up his order. On the upside, Netflix up $31, App Lovin' up 21, Apple up $8 and change, Sadnov. When was the last time you saw two runs in Apple like this? I mean, over the last 3 days, the stock's gone from 205 to 228. I don't think you've seen a move like that in quite some time.
Three straight days with just a parabolic move in Apple. Yeah, I don't know what I want to get more short. Apple. I'm kind of trying to decide what's the best short
Apple
play
had a
here.
rank of 18. I think you're getting saved here. I almost wish volatility was a little bit higher so you can get yourself in some real trouble. I mean, don't get me wrong. I mean,
I didn't get in any real trouble today. Just for the record, I didn't get any real trouble. I just asked you a question though, and you didn't answer it. I want to get in trouble, and I feel like trouble is selling. I really want to get short Apple here. I haven't said I wanted to get. I loved Apple because I thought it was too cheap compared to everything else. Now I really want to get short it. I didn't get short it yet, but I think gap up on Monday. Do we whack them and how?
You're gonna.
I'm a little pissed.
You got to do what you do in the spies. You think about something, you got it right. You sell a little vertical spread upstairs.
I don't want to sell a vertical spread. I gotta.
You really want to get in trouble.
I gotta hit the long ball here in Apple. But you know what's weird today?
You want to take out the fungo bat? Do you think the kids know what a fungo bat is?
No,
these days?
I don't think they do. But
yeah.
I had this hunch all day. I never said it. I had this hunch all day that stupid tariff news on gold was all crap. And gold was so strong.
I told you, my emailers got it right, Sadnov. They were talking about getting short gold, and it did sell off.
It was up 40 when I woke up this morning. I thought it was up almost 50 actually. And then I was watching. I'm like, you know what? This is such crap. This needs to be sold. And it sold off. And I didn't take advantage of it. And I feel like I feel like Apple's in that same boat. You know, like, listen, I can give a maybe once in a few years it has a $10 move or whatever, and then it has, but back to back, nah.
Yeah, this has been a big move in Apple. No other way to.
And we're back. Just by the way, we're also back on the Nasdaq right here. This is. You remember the other day I was saying we kind of made a high in the morning at 23,645. Well, we're now a little over that number. We're
97. So yeah. 23,697. I mean, this will be a closing high. We closed at 23. Yeah, this will be a closing high if we can stay here.
Yeah, I've got to put the 2,700, 23,700. Did they get up there yet?
Pardon me. 23,724. They certainly did, Sadnov.
Missed it.
By that much.
I got my 23,700 offer in now for the close.
Volatility hasn't had an uptick all day long.
No. Volatility is a PIG pig. And yeah, I thought there was a good chance that based on the tape action yesterday.
I think if you're trying to play that move to the downside, I think you're better off buying /VX or do the micros and sell some calls against it in VIX. I know you don't get any margin relief and it's a capital intensive trade, but if you want to play a little bit of downside action or just volatility staying bid, I think that's the play.
I like short the NASDAQ better.
But I didn't ask you. I'm telling you that I said that. I didn't ask you what your play is. I said my play.
Oh, okay, Fred. Well, I just sold the NASDAQ, so I'm happy about that. So I'm not listening to your play.
You sold even 700. Man, I'm telling you right now, if you can make 20 handles on this NASDAQ today, it'll be the best thing that happens to
20
you.
handles on the NASDAQ today. You mean the one I just sold at 700?
Yeah.
Don't even. It's in the clearing firm. I'm not covering it today. I don't care if they go down 100.
Oh, you can't do that. You don't know how to do that. That's old Saz behavior. You don't do that.
No.
You're 20 tops.
I don't care if they're down 100 from here. Okay, I'm not covering it.
I'll never be long bonds. That reminds me of that statement too.
I am long bonds. I put a small long bond position on today. I want to buy more, but I feel like they didn't do anything all day. They didn't have an uptick. They didn't have a downtick. They traded in a two tick range the entire day. Yeah. I feel like it wasn't worth trading. Today was not the day to trade bonds. Let's put it that way.
Yeah. There wasn't too much two-sided action.
No. Yeah. You had gold today. The only two-sided action.
Gold was the commodity to trade. You could have money on either side of the spectrum. Look at this big candle with the where I'm right here at unchanged. So
the only two-sided action today was gold. And the S&Ps, man. You know, I tried to get short them this morning. I tried to get short them midday. I tried to get short them this afternoon. There was never.
We don't make lows on Fridays, Sosnoff. Everybody knows that. What are you trying to do? Why you work so hard? You know, you got to work smarter, not harder.
Hey. Hardest working man in show business, man. Don't give me your crap. I don't want to end up like you.
Oh man! Wow. Separation anxiety or something for the weekend. Wow. Oh.
I don't want to do that to myself, my
Yeah,
family.
separation anxiety for over the weekend, Sal. No, this is bad for you, man.
No. I can't take that chance. I mean, I gotta, I gotta grind. So yeah, no, I there wasn't a lot of two-sided opportunity today. They came a little, I want to say they came for the pigs, but they didn't even come for the pigs. I mean, Coinbase was down a bunch and they brought it back a little bit. And there was a few other stocks like UNH.
I wouldn't consider Coinbase a pig. I mean,
I'm just saying it's not, it hasn't been
has
acting.
sold off the last 2 weeks, but I don't think it's a pig.
Well, other than that, I mean, if you look at,
I'll tell you what a pig is. Like Intel's a pig.
Oh, don't call Intel a pig. That's my boy. That's my baby.
18 cents. Hey, Sadnov, somebody sent a tweet out about Intel. It was funny. They said the year's 2075 and Intel is still $20.
Yeah, that's probably pretty true. It's funny.
I thought that was funny.
It's probably the only stock I kind of want to get long here. Literally the only stock.
I know.
Let me just see. There's nothing else that I look at. Let me just see where these SEP puts are trading. No, it's not even worth it. I mean, the Ivy rank is 9, and the SEP 19 puts are trading for 63 cents. It's not worth it.
You got to do like an ARC is 45 vol, SEP is 45 vol. You got to do like an ARC SEP long diagonal spread. Sell the SEP out of the money option. I mean, what are you going to get? 50 freaking cents for the 22s? Just get out of Intel. Go use your money. I mean, listen, you know what? Like people will say, oh, he drives a Range Rover. It's a really expensive car. It's expensive to fix, and a Lucid, it's expensive, blah, blah, blah. He's got FU money. No, Sadnov, that's not FU money. Putting money in Intel, that's FU money. Because you got so much money that you can waste your time in Intel. That's FU money, Saznov.
It's funny. We did a little bit of just looking at this. All right. Looking at that live cattle trade we made this morning. They killed live cattle today.
Well, it's closed, though.
What?
It's closed now, isn't it?
Yeah. I was just looking at it. I didn't realize they hit it that much.
Well, you put it on with a little bit of short delta, didn't you?
A little bit. Yep. Yes, sir.
Yeah.
Yes, sir, Senator.
You're up a couple of ticks on your trade. Just relax. Although the markets are very wide on the close in there.
Yeah. I see it.
You really can't tell what the mid price is.
No. We're going home.
This is it. Even the S&P is only up 36. I don't know if you got him right where you want him, and you got 20 handles right now. You got it if you want to take it.
No, sir, Senator.
Okay.
Nope. Told you, I'm taking it home. I'm packing it up, putting it away, putting it in my back pocket. Don't even know you exist.
My Taiwanese sources said they don't blame you, Sadnov, for trading Intel as long as you're selling some premium against it. If you've been doing it for the last 20 years, you probably own the worthless stock for nothing.
Possible. I don't think we've. I was about to say, I don't think we've lost any money in Intel this year, but I'd be happy to take a look. And we've been long it the whole year, and it is truly a pig.
Speaking of pigs, you said it's live cattle. Is there a market for like dead cattle?
I don't know. It says live cattle. Intel. You want to know something? Here's a perfect example. It's a pig, but it's been a very good stock to us this year. All we do is sell puts in there, and all they do is go out worthless.
You do get long delta. You're right. Mm-hmm.
Right. We've been long delta all year. It hasn't done anything, but it's worked. So I can't complain. No complaints.
Well, P&L is king, so I got to give it to you.
Yeah. Anyway, I think most people. Here's my thought process here. This is a very frothy market. This is a very frothy market with an absence of sellers right now, and so there's no urgency to sell anything. There's no panic. there's a certain level of complacency that's just, that we've seen this entire summer. And I
look at even the S&P volume size. No, it's not even a million today. 975, right? 979 right now with.
Yeah, but that doesn't surprise me. Today was slow. Remember this morning we did a Russell trade when the S&Ps were up. Like, do you know that the Russell's only up 1 right now? Whatever it is.
Yeah, up 1 or 2. We had to get, it was up 7 to get filled on the trade. Even the S&Ps were rallying. The Russell was actually going lower. It's going lower now too.
Yeah. So, and we still have that trade on. I think there's a couple things. I'm gonna stick with the speculation. I think the market's frothy because A, the way the IPOs are trading, B, the way there's a concentration into a very small number of mega tech stocks. C, because I really do believe there's a huge amount.
There's an absence of sellers, so I don't know if that gives blue skies.
No. What I was about to say was there is a tremendous amount of money in what I call the asymmetric speculation, just sitting on the sidelines. Meaning,
listen, don't try to use big words like Dylan Radigan, okay? Listen, you're not, you be you, okay? You don't have to be anybody else.
Okay,
You're a successful
I'm going to say this again, just so
right.
you understand. I'll say it slower.
You're a successful man in your own right. Don't try to be somebody else. Stay true to yourself. You don't call it asymmetrical, any bull crap. You call it concentration of the.
I would like to finish my thought. There's an incredible amount of asymmetric speculative capital sitting on the sidelines, which is all it is. That just means pot odds. That means there's a lot of capital, people willing to risk one, okay, to make multiples of one. And the easiest way to do that is to buy the same stuff that everybody else is buying and hope you get something going. It's not a meme stock play, but it's more of that, everybody piling on. And I think that's what you're seeing right now. It's very frothy tape action. It may go on forever. Like, who knows? There's no way that you could possibly time when something like that ends. However,
it's called America, baby.
However, I think there is a lot of danger in being long that process, and you have to be a little bit careful here.
The only thing, all that you put out there is all Sosnov's views are not the views of the parent company and Tony Batista. The only thing you do have on...
They are the views of the parent company. They might not be the views of Tony Batista.
They are not the views of the parent company. They may be the views of Tom Sosnov. They're not the views of Tony Batista. The only thing you have is volatility. Volatility is 17, Sosnov, and we have done the studies. And when volatility is low, and here it is low again, I mean, I don't anticipate it getting much lower than this so early in its cycle right now, where maybe volatility is going to kind of hang out here for a little bit while. And if it's so low, you may get a little bit of downside action. You got about 11 days before the volatility futures or August 20th expire. So you're going to have a little bit of smooth sailing, Sadnov, until we get to that expiration week.
Well, volatility has a tendency to live in a lull state. It's in a lull state right now, which means it loves to just lie out in the sun and do absolutely nothing. My gut says,
I got a picture of you in Greece that looks very similar to what you just described.
My gut says that next week it's going to be a little choppier than you think. There's a little bit too much across the board complacency. I think you saw it a little bit today too.
What did you see today? We didn't go where? What did you see today?
I didn't. That's the whole thing. I didn't see anything today. I just saw the same stocks bid up. The same few stocks. Nothing much. No two-sided action. Nothing like that. So I think there's a lot of complacency out there, and I think you're going to see a little bit of reversal of that complacency next week. I kind of like volatility here. I'm not long it.
That's why I say buy /VX, sell VIX. It just takes you about 15, 20 minutes to absorb the complex strategy that I presented to you early in the show. But I agree with you there. And a great compliment to a portfolio, by the way. Jobless claims coming out on Thursday. Maybe we sit until then. What do you think?
No, I don't think we sit until then. Nobody gives a rat's ass about jobless
I'm
claims.
just trying to help Chris and Ilya. That they're not on the show, so I'm just giving them a little representation.
That is not what you're doing.
Are we going out tomorrow or the following Saturday?
Oh my God. You seriously need an adulter more than I do. You need adult help. Okay.
Next Saturday or this Saturday?
I am not going to see you this Saturday under any circumstances. It would have to be.
Maybe I'll come to you then.
It would have to be some kind of an emergency.
Act of God.
An act of God. Yes. I'm taking the weekend off from Batista's.
Oh, don't say it like that.
I need it every once in a while. I need a Batista break. Do you know that after next week we're going to be together for like 10 straight days, and I don't know if I can handle it. I'm gonna. I'm actually right now. I'm trying to figure out how to get myself kidnapped in Mexico City.
In fairness, I think we've only done it once before, if I could remember, and it didn't go well.
All right, let's see here as we're kind of, and I'm going to say this is not like, I don't know if we're limping in the close or we're doing nothing in the close, whatever it is. I'm not sure what the hell this means, but as we turn into the close, because I don't think much is going to happen between now and the close.
No, you didn't want to take your 20 handles on the NASDAQ, so Mr. Market's got to slap you. Got to give you a little slapping.
No, I'm happy here. I want my position. I'd rather have the position than the handles.
Rather have the position than the cash.
I'd rather have the position than the cash. As I look through, actually, I'm going to take a quick scan through everything we've got here just to see if there's any other stocks that we didn't mention that jump off the screen. And I'm going to say there are some IBM down $6 today. What happened there?
I don't know. Does anybody care about IBM these days?
I have a position on there, so I care. I didn't see that down $6. What happened?
You are responsible for your own trades. I can't be responsible for your trades, my trades, the firm's trades, everything. Can't do it.
What happened was, as Vanetta would say, what happened was, I'm going to roll some calls down in there, so I'm not too long. Well, all right. How you going home for the weekend?
Man, it seemed well. I have a minor's position where volatility finally came in, Sadnov, in GDX. I don't know if you have a.
I don't have a position there. I can't make any money in that stock, even if I was trading your money.
I'm not making any money either. I actually played it to the short side, and you can see here it hasn't had a downtick, so I haven't gotten that right. But I just did it about 3 days ago or so. I believe on Tuesday was the day that I put it on. I'm still down about 40-ish cents, but for the first day, positive P&L with the stock higher. So I'm encouraged there if we get a little bit of downside that maybe things will work out. I'm pretty flat up here. I don't have any short delta really lying around anywhere. So business as usual for me, I think, into next week. I think we're very complacent into next week.
I'm going home short a little bit with virtually the lowest theta and the lowest extrinsic we've had in 2 years. And I don't like that. I don't like that. Our buying power usage is quite low. So our positions are very small here. I don't love the small positions. I wish I had more on.
Would you rather be so you'd rather be a more on than more off? Is that what you're telling me?
I'd rather have a more on than more off.
Odd. It's odd. Par for the course, but odd.
Yeah. Yep. And I'm looking for something. I'll be looking this week.
I think you're going to miss me this weekend. I think you're going to be bored without me, personally.
And I'm looking
you
for
want some time. Would you like some time to think about it?
No. And I'm looking for some stuff to do, actually. I'm going to be looking for some stuff to do this weekend because I'm looking for some trades for next week. I'm trying
You
to
come home and clean out my garage?
What?
You want me? What? Oh, sorry. Manual labor. All of a sudden, those ample-sized ears can't hear anymore. I said, you want to help me clean out my garage?
Yeah. What time?
Come by around 11.
11 tomorrow. I'll be there.
I'll make you lunch afterwards. Sure. I could do that.
What would you make me for lunch? Tough guy.
Reservation at EMA.
No, thank you. All right, here we go.
There's the closing bell sound. You're going to take those 14 ticks and you're going to have to bring them home with you, Sosnoff. I'm sorry. And those 14 ticks are against you. Sosnoff, give me some parting words. Even the S&P's rallied back. They're up 50. NASDAQ up 227. Russell up 5. Give me something, Sosnoff. Say something nice.
You know, I don't love this close. I would rather they closed a little softer, but I think I'm positioned, as Ilya would say, I think I have them.
Got them right where you want them.
I think I have them right where I want them. Up 50 today. Up 50 today was not what I was hoping for, but now I got them right where I want them.
Hey, we said 6,400 on the even S&Ps is 6,414. No big deal. I mean, 23.7. Now it's 23.716. No big deal. New highs. Yeah, got them right where we want them.
Well, last Friday on the close, we were down about 110, and I thought we had them where we want them, and it didn't exactly work out that way. So this Friday, we literally have them right where we want them because they're up 50. So I think you'll see a reversal. Who knows? Maybe something to do.
Well, let's take a quick 90-second break. You'll be back on Sunday. We got more Tasty Live for you all day long. Check us out on demand too. Peace.